continued for some of the indices for sure. While the Taiwanese index, it is seeing a big green today, up around 3% The Hang Seng is lower. It's down around 0.3%. But if we look at any other index, that's lower right now. Shanghai is down around 0.2%. We have Nikkei, which is absolutely flat, but with some negative bias. So that's largely the Asian market picture. The GIFT Nifty, that'll come up for you on the screen, and that one is indicating that the start for our own markets could be in the red. We did recover from lows yesterday in our trading session, but ended in the red. Looks like it could be another day when the street has digested the budget, the analysis has been done, and more will be done today as well. But let's talk about the US markets. Wall Street ended marginally lower ahead of key earnings from tech bigwigs. The Nasdaq fell by 10 points, while the S&P 500 ended almost flat. The Dow Jones also dipped by 57 points. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
The Dow was down 57 points. The S&P 500 was down 9, while the tech-heavy Nasdaq gave up 10 points. Sales of previously owned homes fell 5.4% in June compared to May. That's a fourth consecutive month of declines, according to the National Association of Realtors. High mortgage rates and high prices continue to hinder the housing market. Home prices spiked even as sales slowed, and supply is now at its highest level since 2020. Federal regulators launched an investigation into Delta Airlines today as the company struggles to recover from Friday's global IT outage. Transportation Secretary Pete Buttigieg announcing the move on X, saying that the probe is to ensure that the airline is following the law and taking care of passengers amid thousands of canceled and delayed flights. Delta says it is working to make it right for customers and is cooperating with investigators. That's what's happening here in the U.S. Back over to you in Mumbai.
All right, that's the Wall Street action. But let's hear out some opinion from JP Morgan Asset Management's Gabriela Santos on the U.S. policy and the Fed's rate cut trajectory.
We tell clients it's a bit A, too early to know the outcome, B, to know the true policy that's going to be implemented. And even if you do know that, it's hard to actually figure out what the investment trade or investment would be. For example, I think there's a lot of focus on deferring policies around energy, for example, between Democrats and Republicans. But actually what we saw under the Trump administration is that traditional energy was down 40%, clean energy was up nearly 300%, and vice versa under Biden. So we take all of the political and policy developments with a grain of salt. That said, the one big underlying read-through we see is higher deficits. The discussion is really just about the slope of that deficit, and that'll dominate all of next year. Yes. Does it actually matter when the Fed cuts rates? I think there's quite a lot of exhaustion on this Fed discussion. I think the most important thing really is that the next move is a cut. We've really taken off the tail risk of further hikes from the table, and that's really what the December pivot was all about. And in and of itself, that's a more constructive backdrop for risk. That said, it does matter if they cut sooner rather than later, because we want Fed cuts to be proactive rather than reactive.
Okay, all right. That is an expert opinion coming in. But Nasdaq futures under slight pressure after mega-cap tech companies Alphabet and Tesla reported their second quarter results. Although Alphabet reported a top and bottom line beat, YouTube advertising revenue fell below the consensus estimate. Meanwhile, Tesla shares declined more than 6% on weaker than expected results and a 7% YY drop in auto revenue. Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in bright and early with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hi guys, a very good morning to all of you. It was a busy day yesterday and definitely looks like another busy day today, but let's talk about the markets. What would the market setup look like today? Harmaz, let me start with you.
Morning, Sonal. And the key to today's session will be that the recovery that we saw in yesterday's trading session, whether that sustains or not. And it was a very swift recovery as well. We saw that dip after the finance minister's budget speech was over, but then the Nifty recovered 400 points from the lows of the day. The mid-cap index even recovered almost 2,000 points from the day's low. And a similar kind of recovery was seen in the small-cap index as well, 850 points from the lows of the day. And this despite some negative developments coming in, be it the increase in the STT, the tinkering with the LTCG and the STCG rates as well. So it was a swift recovery. The Nifty ending slightly below that at 24,500 level. So that remains the key in today's session as well, and whether that recovery will sustain in today's session or not. What led the recovery? It was FMCG. Of course, it was the top sectoral gainer yesterday. There were stock-specific positive announcements coming in for Titan, for ITC. The ITC ended up getting some upgrades as well. And the sector will remain in focus today as well, because HUL, United Spirits will react to results. Some stock-specific announcements from Tata Consumer as well. Where did the pressure come from? From real estate. Some negative announcements coming in from the budget. 8 out of the 10 stocks ending lower there from the index. It recovered from the lows of the day, but still ended significantly lower. The other pressure point, though, was banks, and the Nifty Bank now closed below the 52,000 mark in yesterday's session. That was supposed to be a key support level, so we'll watch out for that. It's expiry today as well for the Nifty Bank. We'll keep an eye out on that, and also keep an eye out on PSUs, because it was the PSE index that sold off yesterday as well. Most of the index constituents ending lower, led by REC and PFC, and it was some very heightened trading activity seen in the PSU names, as 4 out of the top 5 traded stocks yesterday were PSUs, being HAL, RVNL, IRFC, IREDA. You can see the numbers there on your screen, and a lot of earnings as well today. We'll watch out for Axis Bank, L&T and SBI Life, and the GIFT Nifty 2 is indicating a slightly negative start for our market, so we'll see if that recovery sustains or not. Back to you.
Okay, yes, that's the market setup. Thank you so much, Hormas, for that. Let me go across to Sudarshan now. He will list out all the stocks to watch out for in today's trading session. A lot of earnings, a lot of news updates, Sudarshan. Good morning.
Morning, Sona. So apart from budget impact, we will see the companies reacting to the earnings and news flow. So starting with HUL, it was in line to slight beat for Q1. EBITDA has come in at rupees 3,600 crore against our poll of rupees 3,540 crore. Margin was at 23.5% versus poll of 23.4%, and volume growth has come at 4% against our poll of 3 to 4%. For Bajaj Finance, it was mild miss to our poll. NI has come at rupees 8,365 crore, and it has missed estimate by 1%. Asset quality, though, remains stable, and gross NPA has come at 0.86% versus 0.85% sequentially. United Spirits, it was an operational beat. Cost control and contained raw material have boosted margin. It has come at 19.5%, which is 220 bips higher than our poll. Prestige and above segment revenue growth has come at 10.1% versus estimate of 8 to 9%. ICICI Prudential, it was a mixed Q1. VNB has missed estimate while margin was in line. Value of new business has come at rupees 472 crore against our poll of 558 crore. Margin has come at 24% versus poll of 24.4%. Torrent Pharma, it was an inline Q1. Strong growth in India business. EBITDA was up 14%. Margin has increased 110 bips. Parag Milk, it was again operational beat. Dairy sector margin expansion has continued. Overall volume growth was at 10% and margin has increased 180 bips. Schaeffler India, it has reported mixed Q2 earnings. Revenue and EBITDA above estimates. Margin has missed estimates. Revenue was up 15% and EBITDA increased 10% YY. Vedanta is going to consider second interim dividend for FY25 on July 26. Dr. Reddy's will consider stock split on July 27, and Apollo Micro will issue convertible warrants up to 265 crore to promoters and non-promoters. So keep an eye on these stocks that might be in focus today.
All right, Sudarshan, thank you so much for that list. Let me go across to Mangalam now. He's joining in with all the cues from the F&O space. Morning, Mangalam.
Good morning. So if you looked at the close of market yesterday, you looked at Nifty Bank, the mid-cap index, you would not think that it is the budget day, because we closed marginally lower. The mid-cap index lower by about 0.6%, was underperforming. The Nifty Bank down by about 500 points as well. It would look like par for course, but it was the volatility during the day which actually, told you it was the budget day. So the Nifty low of 24,074 is something that we'll watch out for. The Nifty Bank, mildly above the day's low, was an underperformer in yesterday's trading session. The FIs, they sold in the cash market. After a spate of buying in the month of July, over 20,000 crores, they sold 3,000 crores in the cash markets. And not just that, they also sold about 3,700 crores in index futures, where they unwound about 35,000 longs, added about 19,000 shorts as well. And they've been doing that systematically over the last 4 or 5 trading sessions. So if you look at FII long exposure, in the last 4 trading sessions, it's down from 81% to about 74%. And the net contracts have actually reduced from 3.9 lakh on the long side to just about 2.8 lakh on the long side. That tells you that they've unwound around 1 lakh long contracts or added concomitant short contracts on a net basis in the last 4 sessions itself. On the way up, we have some resistance upwards of 24,600. On the way down, however, the first support comes in around 24,350 because we have seen action at the 24,450 put. If you look at the 24,450 call, a premium of 100 rupees, 24,500 call, another premium of 100 rupees, telling you around 24,550 to around 24,600 will be some resistance. Watch out for the Nifty Bank options expiry today. Watch out for a lot of these stocks. Titan, ITC, HUL, United Spirits. The FMCG pack will be in focus today. Also, out of F&O ban are stocks like Chambal Fertilizer, Piramal Enterprises, Bandhan Bank and Hindustan Aeronautics.
Okay, all right, guys. Thank you so much for joining us and prepping us up for this trading day ahead. Let's slip into a break. Up next, we speak to the budget makers themselves as they clarify on the fine print of the new taxation measures announced in the budget.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies. I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects.
Welcome back. You're still tuned into Power Breakfast on CNBC TV18. It's time to get you the big budget headlines. Real estate investments lose the benefit of indexation, which allowed property owners to adjust their gains for inflation. Finance Secretary clarified to CNBC TV18 that the tax incidence under capital gains without indexation is lower and will actually benefit a lot of people. Also says STCG and LTCG were hiked to bring equity in capital gains taxation. Listen in.
So what we have tried to do is that inflation in India is fairly predictable in the long run. We have checked that the average rate of growth of the cost inflation index, which is used for capital gains, is about 4.6%. So it's predictable. We know that on average your assets, for tax purposes, see, individual assets may go at different rates, but we use a steady index for tax calculations, which grows at 4.6%. Now let me give you a numerical example. I don't think anyone would make the case that property will appreciate less than a fixed deposit. That's not why people buy property. They buy property because it appreciates faster. And India is a land-scarce country. Property is bound to appreciate faster than most other assets. So let's say you expect property to appreciate at, let's say, 15% per annum. Take off 4% for inflation. Currently, with a 15% gain, you're taxed on 11%. Because every year you get a 4% knockoff for indexation. On 11% of the growth, you're paying 20% of that. So 2.2 is the tax that you pay. In the new system, you will pay 12.5% of 15%, which comes to 1.87. So it's lower. It's lower at almost any reasonable rate of growth for real estate, and we have calculated this. We have calibrated to be, in fact, for us it will be negative, because in most cases, the tax which would be computed on an indexation basis would have been higher than the tax on the non-indexed but much lower rate that we have imposed. So we've tried to keep it at a level where almost nobody will lose. A lot of people will gain because the indexation benefit will be less than the benefit that they would get. And one more thing I want to add. we will continue to start valuing property only from 2001. So it's not as if that benefit is taken away.
That benefit is not taken away?
That is not taken away. The value of the property will be the value as of 2001 or of the date that it was acquired.
I want to build on the revenue mobilization argument because I heard the number 15,000 crores on account of the LTCG changes.
Yes.
What do you expect that number to be given the way that we are seeing, the markets
Currently,
move?
our revenues from LTCG are very significant. Let me tell you that we are already getting significant revenues from LTCG. I'll mention two figures here. 88% of the value of capital gains earned in India, according to our study, comes from people whose returned income is more than 15 lakh rupees. And 62% comes from those who are above 1 crore of returned income. So this is not a tax which is falling predominantly on the not at all.
Class,
and this is the class of income which Thomas Piketty and others have been writing about all the time. Now, at some point...
it then begs the question, are you looking at a higher rate? Because that's the worry, that you've done 12 and a half. This is perhaps an odd rate.
If we were looking at a higher rate, we would have done it.
But maybe you're testing waters with 12 and a half, and maybe
we don't believe in testing waters.
So is it going to be 12 and a half now for the near term? I mean, for the next few years?
There is no intention to revise it from here. I cannot speak for all the future finance ministers and finance secretaries, but I can say as of now, we have no intention of revising this any further.
So 12 and a half is...
Of course, no one can predict the future.
No, absolutely.
Somebody else may cut it too. I can't predict that. But what I am saying is we need equity in taxation. We can't say that only equity markets take risks and a person doing an MSME business is not taking risk and he should pay 39%. And because I'm taking stock market risk, I should not even pay 12.5%. There is a case for a lower rate on capital gains tax. It is much, much lower than the marginal rate of tax on other sources of income. And it's creating distortion in the savings markets also.
All right, that is an important clarification. We'll keep getting you excerpts of this conversation through the course of the day. For now, we'll slip into a break. Up next, we get to the cues from the commodities market. Stay tuned for that.
We stand for Network 80's Project One Tree.
I stand in support of Network 80's Project One Tree.
Setting up of a new 2,400 megawatt power plant at Pir Painti will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited.
This budget, after a few budgets, is a bit more negative, I would say, on the taxation front in particular. There was some expectation that long-term capital gains tax might be increased, but with indexation benefit. So today what we've seen is that there isn't an indexation benefit, and plus it, I think, increases the risk. In a way, there was a stability in the capital gains regime for the last several years. Now the long-term gains tax has been raised by only 2.5%, short-terms raised to 20%, but this increases the risk in investors' mind that it could be not a given tax regime for next many years.
Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5,
Welcome back. You're still tuned into Power Breakfast. It's time to talk about commodities now. Manisha Gupta is joining us as always. Good morning, Manisha. Some profit booking on the cards.
Oh, well, it is, and it's not the best of the week for the bulls in commodities because we have seen extended profit-taking continuing in this week. So you have the crude oil prices, which fell almost 2% overnight and are trading at a one-month lows. Not just crude. When you look at the crude products like heating oil, that one is at a 7-week lows. Gasoline is trading at a one-month lows as well. Well, the markets are looking at 1, the strength in US dollar index, 2, the weak data from China, and 3, it also is about Israel and Hamas ceasefire talks now gaining momentum. So that's weighing on to the prices. But the strength in US dollar and the weak economic data also is weighing on the base metal prices, where you have copper now trading at a 3-month lows, iron ore at a 1-month low, aluminum prices at a 1-month lows as well. Zinc is trading at 2-month lows. So, well, yes, there is no place to hide in metals. And the gold and silver prices, the kind of profit taking that we saw yesterday, has just about continued right now as well. So it's a 2-week lows for gold and silver, both of those precious metals.
Okay, all right. So 2-week lows for precious metals. Thank you so much, Manisha, for joining us as always with all the updates from the commodity markets. With that, we will take your leave on Power Breakfast today. But stay tuned. Bazaar Morning Call comes up next with all the market action.
Six, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime,
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBCTV18 Moti Oswal studios. It's day 2, the day after the union budget announcement. And will there be any lingering impact? Because yesterday, it was just water off the duck's back. The market just shrugged off the capital gains taxes and ended absolutely flat. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And of course, the market is still digesting all of the news flow that came through, right? So let's see. But we have so much corporate action. There's L&T and Axis Bank's numbers today. There's so many stocks to react to as well. So the market has no choice, I guess, but to move on to local cues.
Well, the bears will feel in the last 2 big events, they got both of them correct, right? We didn't get a majority with regard to the BJP. And then yesterday's verdict as well wasn't in favor of the bulls. But look at the market, as flat as can be on both the days.
It's almost as if the budget was not there.
Yeah.
Right? So, but actually, to be fair, the budget really did nothing to add to bullishness or reduce bullishness or add to if somebody was bearish. It really didn't change very much, except, of course, your taxes.
Except, I was like, I think, Prashant, you missed out on a very big part of the budget.
No,
but yeah, of course, there is a lot of disenchantment because of the taxes. You can't, deny that.
No, absolutely. And, it's just that local flows are so strong that it's kind of papering through everything. And it is what it is. So let's just sort of take it straight with where we are at as we begin day 2, the day after the union budget. So incredibly resilient market is what we had yesterday. I was saying this in the afternoon yesterday that if you'd basically been given what was going to happen in the budget, 2 days before, and you would have you were asked what would the market do, how many would have said, well, the market does nothing, it's absolutely flat and just moves on, right? I think that's the power of local flows, retail flows, which have come through. So there are changes on your screen. There was a bit of a swoon, absolutely. The Nifty fell about 400 points and then, of course, spent the rest of the day recovering. This is interesting because the India wicks, because if you're thinking about, yesterday was just one day and now we'll see the real reaction on day 2 and over the next couple of days. The India wicks fell 18% yesterday to about 12.75. And typically, unless the wicks is showing you, is flashing 17, 18, 20, you're not expecting big moves one way or the other. So that's the reason why I'm saying that should not expect any dramatic day 2 moves different from what we had in terms of yesterday as well. So sometimes it is absolutely reasonable to expect that, day 1 on the day 0 is something and then, of course, the real reaction comes through. It's happened. But I think that looking at the weeks, I don't think one can make the case here. Now, you have the budget, as I said, which did not really add or take away too much from the market. X the capital gains tax changes. I mean, you look at capex, which was unchanged, and tax revenues. I mean, it was largely very little changes compared to what was put out in the interim budget, except maybe things on gold. And we'll talk about specific things here and there. But otherwise, at a broad level, X taxes, there wasn't very much which it did for the market or took away from the market. Overnight global cues are absolutely flat. S&P is down about 0.16%. But the small cap rally is back. And the Russell 2000, it was a very nascent move towards the first half of last week. It fizzled out, but the Russell is back up 1% on a day when the S&P and the Nasdaq were slightly lower. 10-year unchanged, 4.25. Dollar index near 104.5. Oil has ended near the 200-week moving average. It's an important support level. We left off at about 81.56, and I think we are... that's, I think, 10 cents here or there compared to the 200 weekly moving average. Now, Tesla reported numbers after market hours, and the stock reaction is telling. Stock was down about 7-8%, even compared to consensus. I mean, so market street expectations of subdued numbers. The numbers are a bit of a miss. Let's circle back to levels then, right? So you have the Nifty, which ended well above the 20-day moving average of 24,312. After hitting a low of 24,074. So that's the kind of recovery that we are sort of talking about. We need to break above. I mean, essentially, if the direction of travel is upwards, you basically have to see the market taking out the earlier highs, which is 24,854. Not very far away either, right? A couple of percentage points to be able to resume the journey higher. Bank Nifty nearly hit the 40-day exponential moving average at yesterday's low of 51,290. Correction on the Bank Nifty. I mean, we'll put out the chart later as well. It's like the correction is from a falling channel. So, you get out of that channel, and I think market starts to respond positively. And that level there will be 52,650 for the Nifty Bank as well. GIFT Nifty will come up on your screen telling you what the start is going to look like. It's about 50-odd points lower, a slight... I think we'll look at this in 5 or 10 minutes or so. I think the rate perhaps is showing. Is the rate slightly wrong, and we'll revisit this in a bit from now. But as I said, don't expect anything dramatically different in the market on day two as compared to what we've seen in trade yesterday. Sonia.
Absolutely. I think, the market has no choice but to move on from the budget, right? Of course, there is going to be that lingering negative impact because of the budget, because of higher taxes that you'd have to pay. But we're going to move on and talk about some of the stocks that are in the news this morning and, things that you need to watch out for. So let's get straight to it. Consumption stocks are going to be on my radar today because of the kind of valuation headroom that they have, because of the kind of earnings that have come through. HUL's earnings, honestly, were not bad. They were largely in line with estimates. And, if you look at something like a United Spirits, the earnings were actually quite decent. It was a strong operational beat that United Spirits has seen. ITC, in any case, is sitting at a fresh 52-week high. There's been a lot of contribution from there. So this entire consumption piece is something that I reckon could continue to move to the forefront, given the earnings. On the flip side, Bajaj Finance could really disappoint today because of the weak set of numbers that the company posted. The core earnings missed expectations. A lot of brokerages have cut their earnings estimates on the stock. Citi, in fact, has cut their target price to 8,275, which is still well above the current market price. But they believe that the numbers were quite weak and the way forward could be disappointing as well. Yesterday, after a very long time, foreign investors sold in the cash market. So that is something that, is a bit worrying for me. Almost 3,000 crores of selling. And of course, you've seen the US markets under pressure as well, led by tech stocks on the downside. So it's a given that today the market will open in the red. But remember, you are going to have to pay higher taxes. So the best thing to do now is to just find stocks that can perhaps outperform the markets, because you're going to have to pay that extra 12.5% in any case. So I think that makes our work a little, more important, given that this is a market which, in any case, is very hard to find, stocks where there's valuation upside.
So extra 20%. 10 to 12.5 and extra 33% from 15 to 20.
Yeah.
So, I mean, actually, in percentage terms, it is... but anyway, as you said, just work harder. I mean, there's no other choice.
There's no other choice. You can cry over it or you can move on, right?
Well, that's right. The markets actually took this in our stride, right? So yesterday's reaction was fairly good. I mean, if you told me that we're going to be hiking capital gains and then you end flattish, wow, you would grab it with both hands. But I just want to recap and see in 2018, when at that point of time, the finance minister had introduced LTCJ again for the first time, after a while, of around 10%. On that day as well, the markets ended more or less untouched. It was more or less flattish. In the next 45 days or 35 sessions, so to call it, we had the markets correct by close to around, roughly around 10% or thereabouts. That's the kind of reaction that we saw post the budget in the next 35 sessions. By the end of the year, though, we recovered a fair bit. Now, though we are saying that in the next 35 days, there was a downtick on the Nifty, I'll tell you what, for the broader markets, there was a prolonged period of pain for the next 1 year to around 18 months or thereabouts. So the broader markets took a harder hit. This time around as well, we have taken it in our stride. But in the near term, I'll be looking at, what the index does and also the broader markets, because that's where you made the majority of the money. What about the FI flows? Well, I'll be looking at that closely as well. As Sonia mentioned, they sold yesterday and a largest chunk. And I'll be watching them because they just come back into our markets. For year to date, we have a positive number coming in for the FIs into the Indian markets. But just till last month, actually, that number was negative. So they just started turning around. And then, in fact, we have this piece of news in terms of higher taxation. So we'll be watching that. And also the other emerging markets, actually, in the last 30 days, India has got bulk of the FI flows. And the other two actually haven't got that much. What about our own FNOQs? Yesterday, there was some unwinding of positions on the Nifty Bank. Remember, some part of that will be a rollover as well, because we'll have the monthly expiry that will be playing out. But if you're looking at, the FI data points, the long positions came down by close to around 35,000 contracts, or the short contracts went up by around 20,000 contracts. And after the while, the FI short positions have moved to around 26%. Actually, the next chart will give you a better picture. The FI long positions is actually the lowest we've seen in this series. It's come down to around 2.8 lakh contracts. A few sessions ago, it was at around 3.8 lakh contracts. So the FI long positions have come down substantially. And the client short positions as well, there has been some covering out there, because that as well has come down to around 1.2 lakh contracts, which is the lowest we've seen in this series. So both of them, they have covered their positions on their respective sides. The options data, the PCR is coming back down to the lower end of the range. Yesterday, it went down to around 0.87 odd. Remember, normally it bottoms out at around 0.7. How did this happen? There was aggressive call writing, the 24,500 call, 24,600 call. Both of them added close to around 45 lakh shares out there. But what's giving you some hope is there was some writing even on the put side at around the 24,400 put, which brings us to the levels. Yesterday's low, both on the Nifty as well as Nifty Bank, become extremely important. So that comes up for you on the screen. A reference point as well will be the 20 DMA on the Nifty, which is at around the 24,300 odd. I've given you the support levels because that's going to be more important in the near term. For the Nifty Bank, yesterday's low was at around 51,300. That's an important mark to look at. And you'll be feeling confident on the Nifty Bank once you get past the 20 DMA, which becomes a bit of a near-term resistance zone. So as of now, we ended at around the 51,800 odd mark, but those are the crucial levels that we are looking at, Sonia.
Okay, well, doesn't look like it's going to be a very good start, but let's see. We'll take it as it comes. First up on the equities front, we have lots of opinion coming through on the markets and, the post-budget situation as well. Vikas Jain of CLSA says the budget saw the government's big focus on fiscal consolidation, as FY25 fiscal deficit was budgeted at 4.9% versus 5.1% in the interim budget. And the plan to bring it down to 4.5% in FY26 was reiterated. He says with a clear focus on job generation, the government revealed a new employment subsidy which should also aid low-end discretionary consumption. He says a hike in both short-term and long-term taxes on equity is a clear negative, while the removal of inflation indexation will surely reduce investment attractiveness of premium real estate. He says no change in capex estimates versus interim budget may be a disappointment for investment-linked stocks, which have seen a large rally in the last 9 months.
Okay, this is Venugopal Garre of Bernstein, who believes that budget was a neutral event and what transpired was not entirely unexpected. He says capital gains tax increase is also a non-event. He sees Nifty at a fair value and have witnessed some heavyweight misses in recent earnings. He adds small and mid caps are rich in valuations, which should be potentially impacted as primary market fundraising accelerates. He remains selective overall and continues to have stock picks.
Okay, and let's get you some money market views. Kunal Sodhani of Shinhan Bank says the rupee dropped to a record low against the US dollar, pressured by the drop in local equities after the government proposed raising the tax rate on capital gains. He says a weak Chinese yuan also is putting some pressure on the rupee. The dollar index seems to be consolidating and awaiting the US PCE data for the USD INR. He says 83.55 acts as a support, while 83.73 acts as an immediate resistance. And if broken, then some stops may be triggered and move towards 83.85 levels could be seen.
All right, well, those are lots of views coming in. Let's get some more. Taimur Beg is Managing Director and Chief Economist at DBS Research Group. Taimur, good to have you with us here. Thank you very much for your time. Appreciate it. So what's the verdict for the budget? Does it move the needle either which way from a financial market point of view, Taimur?
I think from a bond market point of view, it's relatively constructive. I'm not really sure about the equity market, given the points that were just raised in your earlier piece, that between the pressure on EMFX, as well as the arguably high valuation of the Indian equity markets, the long-term capital gains may well be a bit of a cold water on the financial market outlook as far as equities are concerned. But credit and bonds, in my view, are neutral to positive out of this budget. The budget is playing the long game, focus on the supply side, do things to boost productivity, both on the labor side and the capital side. And that should be good for growth. That should be good for fiscal. Key issue is, bond supply. And I think that keeping the deficit below 6% of GDP was very welcome.
Taimur, hi, good morning. So you're talking about the positives, right? In terms of consumption, do you think enough was done to boost both rural and urban consumption? Because given the way taxes have been hiked, it looks like it's going to hit the middle class for sure. But do you think enough measures were taken by the government to sort of boost rural and urban consumption?
So I think if we look at the totality of the fiscal measures over the last half a decade, lots have been done to support the mid and the low end of the income spectrum in terms of welfare support. Therefore, I think that we should not expect every budget to sort of ratchet that up. Expenditure to GDP ratios have gone up. Debt GDP ratios are pretty high. We are heading into the world of higher for longer. I don't think this is the time to keep on adding fiscal outlays. I'm pleased to see that the authorities managed to pull off a fiscal arithmetic gymnastic in which no major expenditure item was really sacrificed. But I'm also pleased to see that nothing was ratcheted up substantially, because I think the bond markets worldwide, not just in India, are getting a bit stretched. So you got to be careful about the supply side. And therefore, to me, focusing on the long end of the game, just boost skills, boost productivity, that'll create jobs and income. And that's the right way of supporting the economy, not necessarily softs in the short term.
All right. Hi, Taimur. Good morning. Good to see you. When going by the fiscal prudence that the finance minister has stuck to, do you think India's case for a sovereign credit rating, better sovereign credit rating is on the cards? Has it made our case stronger?
Look at the credit ratings agencies. They remain a bit concerned on the primary deficit as well as the debt GDP ratio. It's going to be hard to pull off major progress in that area unless we see growth upwards of 7%. So that's my back of the envelope calculation, if you will, that for a credit rating upgrade, we would need a firm upwards above 7% forecast for GDP growth. That would help the various ratios, particularly debt service ratio, primary balance, and debt GDP. And that would then start making inroad into the spreadsheet of those credit ratings analysts, if you will, and start flashing marginally green. I think we would need those things before a proper upgrade is coming.
So there were expectations of a further expansion on things like the PLI manufacturing scheme, etc., Taimur, but none of that really showed up this time. Would you construe that as a negative?
No, I think if there were, additional incentives on top of all the incentives that has been provided so far in the last, say, 3 or 4 years, I would have seen that as a sign of worry that it is only about industrial policy and it's only about providing incentives to the sector and protecting it. I would like the sector in manufacturing to be privy to greater competition, recognizing that there are other large manufacturers out there who are very competitive, very productive, and SOPs will not get India into the global picture of manufacturing. It would be productivity and competitiveness, and that would not be driven by SOPs. So therefore, I think that some of the incentive schemes that are in place, in my view, are plenty.
Arvind Sanger is also with us, Taimur. So let's get him into the conversation. Managing partner at Geosphere Capital. Arvind, we spoke yesterday, and good to speak with you again today. So, I was saying in the morning that the Wix sold off yesterday. The India Wix was down some 18%. Sometimes on, day zero of an event, the market reacts a certain way. And then, as things start to seep in, it starts to sour a little bit or, move the other way. Are you expecting anything dramatically different today and over the next couple of days? Because yesterday was just, absolutely flat after all those tax changes.
Well, I guess let's be clear. Taxes on stocks went up. So, we're not going to be jumping for joy for that. Let's be, honest about that. And as far as the rest of the budget is concerned, I think fiscal consolidation is happening. That is good. If they're shooting for 4.9%, that's a good sign. There are some, other than the tax increases on capital gains for equity investors, there are, minor positives, minor negatives, but I don't think there was anything barn burner either direction that should cause, any meaningful change. I think, as Tamura, I think, was saying, I think the real challenge now is the private sector has been provided a lot of incentives through the PLR scheme. It has had a tax reduction to 25% a few years ago. Profitability has improved. The CapEx cycle, the baton has to be passed on from government doing all the heavy lifting to at some point the private sector coming in. And that's going to be, this budget wasn't going to dramatically change that. I think that's what we should see in the next leg of the story as it works out. So I think the budget was largely a non-event, except for a minor negative for stock investors.
There is a negative for real estate investors as well, right? While the long-term capital gains tax on property sales was reduced, now you won't get any indexation benefits when you sell your property, which you hold for over 24 months. What does this mean in terms of whether the money will now come to the equity markets? I'm just trying to understand what the ramifications of that would be, Arvind, on a market like equities.
Yeah, well, I think, look, the financialization of assets was happening anyway. I'm not sure that there was a huge amount of investment capital going into real estate, but to the extent that at the margin it's slightly negative for real estate, it could drive some. But, I think the equity inflows are coming anyway, so I'm not sure this is going to make a big, it's going to be a big catalyst for significant incremental, because I think real estate as an investment class was anyway not, at the top of investors' incremental allocation. So I think that part shouldn't be. And I think there's one other important point that they did. They did put in a lot of incentives for job creation, which is, I think, a pretty good thing, because one of the problems is job creation, but I'm not sure that incentives alone are the solution, because I think the skilling needed and to make sure that people are trained enough for the jobs that are, going to be offered if you're trying to grow manufacturing, that's also important. So it'll be interesting to see how all of that works out. But I think, in terms of real estate versus equity investors, I'm not sure that there's enough of a thing there to get really excited about. I think the long-term story budgets are, in my opinion, small, paths on the road to what makes us bullish about India long-term.
Sonia, on real estate, right? So for older, so the indexation is gone, right? So that tax impact is larger. That is the sort of understanding. But for further sales in real estate, isn't it a booster? Because if you're an investor and you're buying something now and you sell, you're not paying 20% after 24 months. Earlier, you were paying 20%. Now you're paying 12.5%. I'm saying for future sales.
But even for future sales, you won't get indexation benefits, right?
No, but if you buy now and you sell within after 3 years, in any case the indexation is not that much. So actually for future sales, for new projects, etc., this actually could be a booster for older legacy property which you already own, which you bought in 2000 or whatever, right? Earlier, and you're selling because property values have gone up 10x, whatever. It could be a significant hit. Tax outgo could be much higher. But for future sales, I think it could be actually a booster. We'll sort of try and understand this with...
I think, Prashant, it's case to case. For example, I was just doing the rough math for a property that my parents sold.
No, and in fact, older is good. But now, if you do it now, from today... Then
I'm saying that argument, whether it was good or bad, the change, even if you bought it in early 2000, actually depends on case to case.
Then also it could be marginal.
Exactly.
It could be marginal.
Exactly.
But from here on, I think it's not negative. It actually could be positive from a developer point of view. Taimur and Arvind, great to have both of you here. Appreciate your time. We'll take a very quick commercial break here. We are back. Our research team will get you the top stocks to watch out for. That's lined up in just a bit from now.
tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods.
Well, it's day 2 after the union budget, and to be honest, the market is still trying to digest all that came out of the budget, especially the higher taxation that you'd have to pay on your listed shares, as well as, on things like property. But our research team is standing by to give you the list of top 10 stocks as we begin a brand new day of trade. You have so many companies that came out with their earnings, so let's get straight to that. HUL first up. Mangalam is here to tell us more. Mangalam, good morning.
Good morning. So FMCG was the sector of yesterday, could well be the sector of today as well, and that's because of HUL numbers, because in these numbers there are green shoots which are visible, probing one to ask whether the elephant is ready to dance now. What's good this time around is that the revenues have been a mild beat over street expectations, and it's the first mild beat that we've seen from HUL in the last many quarters. The EBITDA also, has seen a bit of a beat, and the home care business grew by about 5% as against street expectations of 2 to 3%. What did not do too well, beauty and wellness grew by about 3% versus 5 to 6% expectations. Food and refreshments were buoyed lower by Horlicks and Boost that were subdued performers. But volume growth of 4%, no one's complaining. Gross margins improved by 150 basis points, and personal care business as well did not fall beyond what was expected already. Management sees gradual recovery in rural demand, near zero price growth going forward, telling you that it will be only volume-led growth going forward, with EBITDA margins maintained at current levels. Their priority is to accelerate volume growth, strengthen competitiveness, and maintain healthy margins. So some aggression shown by Hindustan Unilever. See green on the stock.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Abhishek, who's here to tell us about Bajaj Finance's numbers. Morning, Abhishek.
Calculation shows that the net interest margin has declined both YOY and quarter-on-quarter. So my calculation shows that there is a 50 basis point decline in net interest margin of Bajaj Finance on a YOY basis and about 25 basis point on a sequential basis. So this net interest margin could be one of the lowest that you are seeing in last 2-3 years or even more. So NII growth is at 24.5% YOY and about 4.4% sequentially. The other income boosted the top line growth. So net income was up 7.2% on a sequential basis. Provisions spiked up. They increased by more than 69% YOY and about 28.5% sequentially. That impacted the profitability, and profits grew by only 2.3% quarter-on-quarter. Take a look at the asset quality. The deterioration over there is very high when compared to Q1 versus Q4. This is the highest deterioration in Q1 that I am seeing for Bajaj Finance over the last 2 to 3 years. So gross NPA has increased by 8.5% in absolute value. Net NPA has increased by around 11% on a sequential basis, which suggests that the PCR calculation shows that the PCR has declined by 100 basis points. With reference to our poll, both the NI and PAT is lower than our poll. NI by 3.9% and PAT by 1.6%. Back to you.
All right, Abhishek, thank you very much for that. More numbers, right? ICICI Pru Life also reported earnings. Yash is here with details. Yash, morning.
Morning, Prashant. So, of course, for ICICI Prudential Life Insurance, the first quarter was a mixed bag, but with a very important positive bias which came in the numbers. I'll first just make you understand the numbers with respect to our poll. New business premium has come in line with CNBC TV18 poll. Total AP and VNB have missed estimates. Retail AP has come with a strong beat, and margin, that is the positive bias which I'm talking about, that has come in line with the estimates, and the street will be watching out for the margin number. Just to refresh the numbers in terms of year-on-year comparison, new business premium has seen a growth of 24%, total AP annualized premium equivalent growing at 34%, retail AP, which came with a beat to our poll, is growing at 57% on a year-on-year basis, VNB growing at 8%, and the margins that I was talking about, the company has been able to derive margins of 24% as compared to 30% on a year-on-year basis. But margin is the number where the industry is seen, deterioration in the margin profile because of higher ULIP sales. ICICI Prudential Life has come up with inline margins, and that's the number which the street will be looking out for. The stock has rallied about 13% in the last 1 year, 12% in the last 3 months, trading at 1.9 times price to embedded value. So because of the margin number, there's still some runway, it seems like.
Okay, well, after the announcements that came from the budget yesterday, I'm sure some spirits were needed to get people going. Mangalam is here to tell us why you should be watching United Spirits this morning. Mangalam, over to you.
Well, it was a good operational performance that came in. It was a tough quarter for, the spirits industry, the outdoor consumption industry itself. But, in that, the company posted very good performance, especially on the EBITDA front, which came in at around 458 crores versus street expectations of 405 crores as well. This, even as the revenues at 2350 crores were largely in line. That took the margins closer to that 20% mark, much ahead of the management's guidance as well. And the net profit came in at around 300 crores versus expectations of 238 crores as well. What is it that led the revenue growth? It was the premium spirits, Prestige and above. Revenues grew in double digits versus expectation of 8 to 9%. And that was led by volume growth of 5.1%. Again, the street was working with a number of 4 to 5% as well. So premium products doing better and popular products not doing so well has actually aided their margin. So we have value for the popular products declining by about 2.4% and volumes declining by about 4.6% as well. And additionally, they've gone ahead and made a couple of acquisitions as well. They've announced, around 2.3 crore acquisition, 2.3 crore investment in a non-alcoholic company called Sober, and also a company called Caffeine. They bought 25% stake. Caffeine makes specialty cold brew coffee liqueur. So interesting foray out there as well. See green on United Spirits.
Okay, Mangalam, thanks for that. Well, let's move to the pharma space. Then Ekta is here to tell us about Torrent as well as Dr. Reddy is. Ekta, morning.
Morning. Well, Torrent will be reacting to its numbers today. It came out post-markets. Revenue was it was an inline set of numbers. So revenue was up around 10-odd%. Margins 31.6%. Street was anticipating 31.4%. And profit at 457 crores versus our pool of 458 odd crores. Now, adjusted for one-off expenses, the margins came in at around 32.3% as per the company. Now, India did well. It was up 15%. Their chronic business, in fact, outperformed the market with a growth of 14%. Germany did well. It was up around 10-odd%. US continues to be sluggish. It was 31 million versus 32 million Q-on-Q and versus estimates of 35 million. But they have indicated that there could be a pickup in the coming quarters in the US business, aided by 6 to 7 launches. So I expect Torrent Pharma to be in the green today on the back of their numbers. Dr. Reddy's will be in focus because on the 27th of July is when they will be meeting for their Q1 numbers. They will also be considering a stock split.
Okay, all right. Thanks a lot for that, Ekta. Well, I'm keeping an eye out on Vedanta. Yesterday, the stock actually was lower, but that was more to do with the global weakness that we saw in base metal prices. For the time being, the stock's in focus because the board will be meeting on July 26th for the second interim budget. The record date as well has been fixed as August 3rd. Now, a couple of alerts are there. They've already paid one dividend of close to around 11 rupees. That was in May 2024. And they're sitting on a good amount of liquidity because they've got 8,500 crores by the QIP road. So keep an eye out on the stock. Fundamentally as well, the stock is well placed, but prices, LME prices, need to be tracked. Well, let's go back to Abhishek. He's here to tell us about Mahindra & Mahindra Financial. The numbers came during market hours, but there were con call takeaways as well. Abhishek.
M&M Finance did report their P&L during market hours. However, the finer details came out in the presentation post-market, wherein the net interest margin looks to be the lowest in many quarters. It has come in at 6.6% versus 6.8% YOY, and compared to 7.1% for the previous fiscal that they had, FY24. Now, I am saying previous fiscal because they give cumulative net interest margin, that is Q1, H1, 9 months, and then fiscal. So there is a sharp decline in their net interest margin, and P&L is below pole. The NI is at 1,894 crore versus 1,910 crore of our poll, and the PAT has come in at 513 crore. We were working with a number of 520 crore. Another finer detail was with respect to the absolute value of gross NPA. Gross NPA in Q1 increased by 8.6% quarter-on-quarter, and net NPA increased by 18.5% quarter-on-quarter. So there is a sharp deterioration, unlike what you have seen in other few years. This is the highest gross NPA and net NPA deterioration that we have seen in Q1 of a fiscal. So PCR has declined. Provision coverage ratio, as per my calculation, is below 60% versus 63% in the previous quarter. Management has reiterated that they will maintain their credit cost at around 1.4%, and on the higher side, they will try and maintain the ROA of 2.2%. So if at all, I spoke to some analysts, they said if at all asset quality deteriorates, PCR of the entity could fall further. Back to you.
All right, Abhishek, thanks very much for that. So that's M&M Financial, which will also be reacting to earnings. Parag Milk is the other one we want to focus on. Mangalam is here with details on this one. Mangalam.
Well, after United Spirits results, everyone would say, Daru, what about Doodh? Doodh's doing actually a lot better because, the margin expansion for the dairy sector continues. If you look at Hatsun Agro, Dodla Dairy, Parag, all of them seeing gross margin expansion anywhere between 400 to 550 basis points. And that's reflected in Parag's numbers as well. The EBITDA is up 32% at a time, and the revenues are up just about 1.1%. Margins improving from 5.6% to 7.4%, and net profit up by 28% as well. They reported a 10% overall volume growth, and in that as well, premiumization has been working. Ghee, cheese, and all their new age businesses, which is protein and value-added milk, etc., growing between the tune of 15, 12, and 51% as well. All these things working for them, along with reducing milk procurement prices as well. So, same time last year, milk was procured by them at around 38 rupees per litre, now down to 31 rupees, which is a decline both quarter-on-quarter and year-on-year. This is a positive, especially because last quarter there was a mild blip in milk procurement prices, making people wonder if the dairy cycle is turning, but turns out that not yet, it is still positive.
Okay, Mangalam, thanks for that. Well, let's go to Vamakshi and wind this down with Shuffler India. Vamakshi, morning.
Well, good morning, Nigel. A good set of numbers is what the company has reported this time around. Revenue saw an uptick of almost 15% on a YOY basis, and this has come in higher than what analysts were expecting. And this growth in revenue is largely being led by bearings and industrial solutions, as well as vehicle lifetime solutions, both of which were up nearly 18%. But the cost of goods sold were much higher as compared to the revenues, growing by almost 17%, and resultantly we saw a contraction of nearly 90 basis points in the gross profit margins, and gross profit was up nearly 13%. EBITDA came in higher than what the street was expecting, growing by almost 10% YOY, and the margins, however, saw a contraction of nearly 84 basis points. Net profit, however, came in line with what the street was expecting, nearly 3% higher. Overall, it looks like a good set of numbers with revenue EBITDA above estimates, EBITDA margin slightly below, but the net profit is in line with what the street was expecting, and resultantly I expect the stock to open higher today.
Okay, thanks a lot for that. So those are some stocks to watch out for. But let's also find out what's happening in the world of commodities, because clearly there's a lot happening over there. Oil prices have been rising as US crude and fuel inventories are seen shrinking. So Manisha Gupta is here to give us the latest on that. Manisha, over to you.
Thank you for that, Sonia. Well, yes, some bit of an increase in crude oil prices, but it's not so much. It still is trading around that 1 month lows. And if you look at the crude products, heating oil is at a 7-week lows, gasoline at a 1 month lows. The markets are reacting to the US decline in inventories. But apart from that, the street does believe that with the Israel and Hamas ceasefire talks gaining momentum, that pressure could continue into the market. If you look at the last 1 week itself, the crude oil prices are down by 3.5%. It has been a huge pressure that we've seen in the metal prices as well. The gold and silver prices, while in the international markets, fell by 0.5%, but the Indian market saw a reaction to the duty being slashed. So we've seen 5% of a decline overnight in the Indian gold and silver prices. The base metal prices also have been taking it quite strongly. 3-month lows on copper. We've seen another 2% of decline onto this one. Iron ore prices are trading at a 1-month lows, aluminum at a 2-month lows. So the strength in US dollar and, of course, the rising inventories, weak economic data from China, all of that has continued to weigh in for the metal prices. So after a weak June, the July seems to be going on the same set.
Okay, all right, Manija, thank you very much for that. So that's what's happening as far as commodities are concerned. We'll take a quick commercial break here. On the other side, we'll have one of the biggest money managers in the country, S. Naren, Chief Executive Director and Chief Investment Officer at ICICI Prudential Asset Management Company, will be joining in to discuss what to make of the budget announcements and markets from here. Stay tuned.
Originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act.
All right, welcome back. We're sort of counting down to the pre-open session. S. Naren is one of India's biggest fund managers. He's Executive Director and Chief Investment Officer at ICICI Prudential Asset Management Company. Naren, great to have you with us here. Thank you very much for your time. Prashant this side. I'm going to come to you. I just want to quickly play out this soundbite, and I want you to listen to this as well, because my first question is going to be that. This is Finance Secretary TV Somanathan on the revision in the taxation to 12.5% and 20%, and whether there'll be more coming in the next 6 months, that is the next budget in February. Listen in.
88% of the value of capital gains earned in India, according to our study, comes from people whose returned income is more than 15 lakh rupees. And 62% comes from those who are above 1 crore of returned income. So this is not a tax which is falling predominantly on the middle
class.
And this is the class of income which Thomas Piketty and others have been writing about all the time. Now, at some point...
it then begs the question, are you looking at a higher rate? Because that's the worry, that you've done 12.5. This is perhaps an odd rate.
If we were looking at a higher rate, we would have done it.
But
Why
maybe
would we not do
you're,
it?
maybe you're testing waters with 12 and a half,
No,
and
we
maybe
don't believe in testing
So
waters.
is it going to be 12 and a half now for the near term? I mean, for the next few years?
There is no intention to revise it from here. I cannot speak for all the future finance ministers and finance secretaries, but I can say as of now, we have no intention of revising this any further.
So 12 and a half is...
Of course, no one can predict the future.
No, absolutely.
Somebody else may cut it too. I can't predict that. But what I am saying is we need equity in taxation. We can't say that only equity markets take risks and a person doing an MSME business is not taking risk and he should pay 39%. And because I'm taking stock market risk, I should not even pay 12.5%. There is a case for a lower rate on capital gains tax. It is much, much lower than the marginal rate of tax on other sources of income. And it's creating distortion in the savings markets also.
Naren, thanks for listening into that. So the assurance that it's going to be 12.5, not more. So I want you to react to that first before we get into markets, etc.
I think basically the markets can absorb it. That's why you would have seen yesterday that the market basically closed almost flat. And so from that point of view, I would say markets can absorb, equity markets have the capability to absorb at this point of time, given the kind of inflows that the market is seeing at this point of time. So I don't think there is a problem in equity markets because of a taxation increase. If the problem was there, we would have noticed it yesterday at this point.
And so it's done and dusted, right? Behind. It's not as if there is any lingering impact from here.
It's not that. See, we have to recognize where we are in the markets. We are in a market at this point of time where valuations are high, sentiment is exuberant, macroeconomics is fantastic. So and India is one of the best structural stories in the world for the next few decades. So the combination makes it very complicated because do people look at the next few decades of structural growth and say, let's pay up for it? Or say India is one of the best macro in the world? Or people say valuations are so high compared to the rest of the world that you have to be cautious. Which of these things do you look at? It's a very difficult problem, particularly for a global investor. From a domestic investor point of view, people, I think, are not investing in debt at this point of time because they're looking at the remaining two and saying that let's look for the long term. So that's why the government has done something more interesting outside equity, which is bring down the price of gold substantially, reduce the capital gains tax on real estate. So, we are not experts in these asset classes, but how do people react to that? How do people react to a big drop in customs duty and gold and drop in capital gains tax on real estate without indexation? It beats me. I'm not able to understand because yesterday real estate stocks were down because capital gains tax on real estate was down without indexation. So this is something which maybe I can't...
Naren, so we were just discussing that before you came on real estate. Is it for legacy old property, this is negative? I mean, if you bought something very cheap 20, 30 years ago and now you're going to pay it, this tax without indexation. But for new property sales, isn't this, even if you buy something now and you sell after 24 months, you pay 12.5, not 20. Even if you bought at that point without the intention to sell, in theory, the taxation is now much lower. So from a stocks perspective, isn't it positive?
Yeah, even forget from a stock point of view. Today, for example, if I invest in a 2 years in our liquid fund or money market fund, you are in the top tax rate, you end up paying more than 33 or 38%. Whereas you invest in a property and sell after 2 years, you're going to pay 12.5%. There's a huge difference in taxation between investing in real estate and investing in debt mutual fund today. Is that something which is logical at this point of time, that debt mutual funds are the most hated asset class at this point of time? So I think slowly over a period of time, the government is saying do not invest in debt and invest in property, invest in equity, invest in these kind of asset classes, and that is what may happen because slowly over a period of time, debt has become the only asset class where you're charged at the marginal tax rate, whereas both in property and equity, you get very, very favorable tax treatment at this point of time. So is that
Naren,
I don't know.
that, yes. Got that. Hi, good morning. This is Sonia here. I was going through a piece that you had put out where you mentioned that now you're starting to get a bit cautious on the mid and small cap space. And across the board, you are seeing a bit of fair valuation, slightly higher, above fair valuations for the broader market. So what does one do now? If you get a dip in the market, do you think the best way to approach it is to stick to large caps and perhaps churn out of mid and small caps?
So actually, for the last 1 year, we've been cautious on small and mid caps. But small and mid caps have kept going up. And it reminds me of the period, we used to always come on TV and say FMCG, we are cautious. And FMCG used to continue to outperform. Then we have had a 3-year run between 2020 and 23 where FMCG underperformed the market 100%. So we seem to be into one of those phases where we continue to be cautious on small and mid caps, but small and mid caps keep going up. But what happens is, what we've seen is when you have these accumulated underperformance of overvaluation, it shows up later. And when it shows up, you don't know. No one knows. But we are believers in asset allocation first. Then we are believers in flexi cap and large cap. That's how we look at it. Doesn't mean that today onwards, small and mid cap starts underperforming. The more it outperforms at this point of time, just like what happened in real estate between 2013 and 2020, or in consumer stocks between 2020 and a few months back, you can have long period of underperformance after the overvaluation. And we are not astrologers to know when the top of this FMCG or top of real estate will happen. If we knew, I would tell you, but I don't know.
All right. Hi, Naren. Good morning. Good to hear your thoughts and always good to see you in. Tell us your thought process now on some of these value buys. Energy fund has raised a fair bit of money. Stocks like NDPC, ONGC in the past have been quite positive on. What's the thought process from here on?
Finally, at the end of the day, there are three things we depend on. We are dependent on moving from one place to another. So we need energy. Without power, we can't do this. Without telecom, we can't do this. We are always believers in this, but even these three sectors are not cheap. So the public has given us a lot of money to manage and given us a tough, responsible job on how to handle this market, because I wish these stocks were cheaper. So we'll have to handle this fund with the care that it deserves, given that public has given us the money. So it's a tough job. The challenge in the mutual fund industry is, 4 years back when the stocks were cheaper, we had to defend our investment in these stocks. Today, when the stocks are costlier, people have poured money and given us. So that is a tough job that we have, and how to handle public money in this area is one of the tougher jobs. But markets across the board are not cheap at this point of time. And we have a tough job grappling with all the money that we have and have to manage on an incremental basis. That is why we tell people be defensive, follow asset allocation, and that's the way to go. And it has nothing to do with the budget. I think it's a super budget. They have done exactly what is needed at this point of time, because in all areas where things can be borne, they have increased taxation. But there is no way in which you can have a situation where it means that markets are cheap at this point.
Okay.
All right, Naren, we need to take a break. But before we do that, I just want to quickly understand your asset allocation strategy. As you said, there's been some tinkering in taxes for equity, but the other asset classes as well, there's been some tinkering in gold as well as real estate. And asset allocation is going to be key. So what would your strategy be as of now?
So clearly, one should follow. In between, we used to think gold had gone up too much. Now, with this big drop in customs duty, gold prices in India have crashed. So what happens is, again, multi-asset kind of strategies become very, very interesting because of the drop in gold and silver following yesterday's sensible drop in customs duty. So I would say multi-asset kind of strategies are are the par for the course at this point of time for long-term investing, where you do not put all your eggs in the equity basket alone and bet on all the asset classes at this point.
You want to give us a weightage for each of these asset classes if you're deploying fresh money?
These kind of things can't be done. It depends on individuals' capability. There is no such model which exists where you can apply one size fit models.
Absolutely. I know mornings are busy, Naren. Just requesting you to stay with us for a bit longer. We have to take a break, very quick commercial break, but see you on the other side with S. Naren.
Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will...
Okay, welcome back. There's 7 minutes to go for the market open. Naren is still with us. Naren, thanks for waiting. I just want to sort of press upon the debt mutual fund aspect just one bit longer, because you've been kind of championing how debt has been ignored as an asset class. Everyone is piling into equities, and now you got this, as you also said. You said, well, the indication seems to be from the government that don't invest in debt. Invest in gold, real estate, maybe stocks, of course, with higher tax even, but debt. It becomes very unattractive in that sense. Would you agree, Naren? And would you see shifts in terms of flows from investors?
I don't know. I think inadvertently this seems to have happened at this point of time. I don't know what is the situation, I think, but I don't think it was a planned thing. But government, whether it's a government, what's happened, it's very difficult. But right now, for us, for example, we are not able to convince any of our investors to invest in debt mutual funds. They are very, very equity focused at this point of time. That's what we're seeing at this point of time. So, but what we have seen over a period of time is debt plays a very important role in every person's asset allocation. So instead of focusing on debt, we have to think of getting them into asset allocation strategies or hybrid strategies at this point of time. And that is what we try to get people to do at this point of time. And
convincing them now is going to be even more difficult.
No, it's not that. See, our view is, basically, there has to be a bit more volatility in Indian equity. If there is no volatility in Indian equity, people think that why look at debt? The day we see it, we've got 10, 11 years, thanks to fantastic macro management by the government of India and Reserve Bank of India. What has happened is we have not seen much of, we have not seen much of movement of markets downwards. So you have not had a down year for so many years in equity. So people have come around to this view that equity is a safe asset class without risk of a downward move. I think the year there is a downward move, I think that will come back. That is how we look at it. But right now,
got it. Just one more. I just want to press this in. Rural allocation from the government. I take your point on the volatility bit. Rural allocation for the rural sector is down once again. I think it's down for the last 5 years. Every year it's down. So there was some expectation that at a mass level, rural, etc., there'll be that support from the government. It's not happened at all. Just your thoughts on any bets that people have been making and any implications for stocks.
I'm not an expert because if you look at the way MNREGA allocations have been going up and a lot of indirect things that are happening, for example, most of the road construction that happens through the highway programs in various ways, even the expressways happen in rural areas. So how you count the rural allocation is a bit of this thing. If you look at the way, if you talk to most of the construction companies, they tell you it's so difficult to get labor at this point of time. So, I mean, it's very difficult to correctly predict what is the amount of money which goes to rural area directly and how much goes indirectly. So I think it's not fair to the government to say rural allocation is not there. It goes through direct channels and it goes through indirect channels. And that is how we see it. And maybe that is just looking at just some rural indicator alone is not the way to look at it.
No, I completely take your point, direct and indirect. But the printed number is what I'm going with. So that is down. That's what I meant. Naren would have sort of lots of other points to discuss, but we are completely out of time. And you have a very busy morning as well. So thank you very much for being with us here on CNBC TV18. Thanks for your time here. Thank you. As always. And good chat. We'll take a quick commercial break here. We are back with a pre-open session. We'll also be joined by Mitesh and Sudarshan, trading ideas from here. That's coming up.
Month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
As I've been saying, the standout feature of the upcoming budget is that the government has more money than it expected in the interim budget. It has higher tax and non-tax revenues. Firstly, the government has got a 2.1 trillion rupee dividend from the Reserve Bank, whereas the interim budget had only estimated 80,000 crore rupees. So overall,
Welcome back. We're heading into a brand new day of trade. So let's get some technical experts on board to tell us how to approach the markets today. Mitesh Thakkar and Sudarshan Sukhani are joining in. Gentlemen, morning to both of you. Mitesh, let me start with you. In terms of the index itself, what is the expectation now? Do you think that we could be headed for some more pressure? And if yes, would you buy the dip?
See, I think the Bank Nifty between the two indices looks slightly weak to me. And could head towards 51,450, 51,350, and in the worst case scenario, even 51,000. So I think buying into the dip will be slightly an early kind of a movement. I would still want to hold my horses. I think maybe around 51,000 if we can get some reversal signals on the hourly charts, maybe then. So my view is slightly negative on the banking side, and that's why I'll avoid buying. Because the Nifty also has 40% weightage from the Bank Nifty. So for the timing, I think just wait it out. The Nifty might not fall as much. It might be more of, consolidating sideways, giving more of, doing more of base building. But the Bank Nifty looks weak and therefore avoid buying the indices.
Okay, all right, got that, Mitesh. Let's get in Sudarshan as well into the conversation. Morning, Sudarshan. What's your view on the indices?
Yeah, good morning. See, the Nifty made a low yesterday, and I'm assuming at least for a short period of time, that low will hold. But there is no momentum on the upside, so the chances are that we will go through a process of consolidation. Inside this consolidation, because we are still in an uptrend, a dip is a buying opportunity. So if you see a 100-point decline from the opening price or from the day's highs, that's where you go long, keep a 100-point stop then. I would not advise any short positions at this point of time, so the trend is clearly up.
Okay, all right, got that. What about individual stocks, Sudarshan? You give us your list first, then we'll go to Mitesh.
Sure. L&T Tech is a buy with a stop under 5,000. Ambuja Cement is a buying opportunity. It had a good day yesterday. It's in a trading range, just breaking out. Stop under 660. You have to adjust the stops depending on how the market opens. I have two intraday short sells. One is Godrej Properties, which is an intraday short with a stop above 3,200. And finally, Muthoot Finance, another intraday short with a stop above 1,800. It's going to be a choppy market.
And Mitesh, what about you? What would your stock ideas be for the day?
I have a mix of buys and sells. On the buying side is Bata with a stop at 1,544 for targets of 1,600. And Escorts gave a good reversal after about a week and a half of correction. So that could see levels of 4,300 and buy here with a stop below 4,050. Metals look weak to me as a pack, and therefore Hindalco is a sell. Keep a stop at 668, look for targets of 620, and a sell on IRCTC with a stop at 990 for targets of 940.
Okay, thanks a lot for that. So those are some stock ideas from our technical experts. But HUL reported an in-line performance for Q1 with the volume growth meeting the street estimates and gross margins improving by 150 basis points. Ritesh Tiwari, the CFO of HUL, in a post-earnings media conference said that they expect growth to fully recover as rural comes back in the upcoming 2 quarters. Listen in.
More than 50% of our business today is already having high single-digit volume growth. And of course, there are parts of the business which will further respond, but overall recovery has been good. Urban markets we had called out had already recovered in terms of its momentum and volume in terms of total FMCG. Rural, which is still lagging to some extent, but in last couple of months, rural market growth has started outpacing urban market growth. So I believe where we are in terms of market recovery, sans the pace of growth, which we should see next couple of quarters as rural fully recovers with fuller impact of the monsoon, which is pretty decent as we speak today, and the interventions which government has given on rural, on agriculture, on employment, on urban, all that should help us to further augur well for the economy and also for consumption climate overall in the country.
Okay, that's the word coming in from HUL. Abneesh Roy joins in. He's the Executive Director at Nuvama Institutional Equities. Abneesh, hi, good morning. So the numbers were largely in line, but it was also muted, right? I mean, volume growth barely 4-5%. Do you think HUL can do better in the quarters to come? And what's the view on the stock?
Yes, we are positive, and stock has moved up 25% in the last 4 months. It's at a 52-week high. So some profit booking in the near term is possible, nothing major. But we have a target price of 3375, and we do see further market share gains. Currently, if you see, HUL is gaining market share in 55% of the portfolio. In the good times when the adverse cycle of inflation deflation was not there, they used to gain in 75% of the market. They have done a very good disruption in soaps. They have reduced palm oil by 25%, and they'll give back the benefit to the customer. That should help market share gains in soap. In parts of the portfolio like hair color, they are in double-digit volume growth. In the fabric wash, they are high single digits. So in Q1, the muted numbers which you highlighted, I will say that was only because of the severe heat wave. That impacted tea, coffee, the Horlicks portfolio. That is no more there. Yesterday's budget clearly was pro-poor, and definitely we are going to see 2.66 lakh crores in terms of rural development, 1.5 lakh for the agri. So many state elections are also happening. So if you see what Maharashtra government has done, because elections are coming, what Karnataka has done, and other states like Jharkhand and Haryana also state elections are going to happen. So those are also positive. So I will say pricing will come back for Unilever. Volume also further recovery will happen. And clearly there's a coalition government. So the investors have visibility of 5 years that this will be pro-poor budget, pro-poor policy. And urban also, if you see, there have been tax cuts. So we are positive on the sector. Entire sector we are positive. HUL also some profit booking can happen, but 3375 is the target price.
Okay, got it. Hi, Abneesh, always good to hear your thoughts. Thanks a lot for joining in. So big rally is what we have already seen. But from a market perspective, from an index perspective, the street wants to focus more on ITC. No shocker coming in the budget. One of the underperformers in the last 12 months or so. Till just last week, the stock was still negative. And valuation, there is some comfort. But it's already jumped up by more than 20%, I think, in the last 45 days. What's your view on ITC from here on?
Yeah, absolutely. In ITC also, we see improvements in their parts of the agri portfolio, FMCG also, because of the rural recovery going ahead. In terms of cigarette, absolutely you are right. There is no tax increase, and the next budget will be on February 1. So just 6 months reprieve is there. We'll get to know what happens on February 1st. But my sense is the government should not increase taxes even then. So we are positive on ITC. Definitely we see new highs being made in the coming months. And hotel demerger also, it's in the final lap. So that also the further approvals are likely to come. So we are positive on ITC, and the valuation comfort plus the 4% dividend yield is also there. So yes, the stock should do well. Near-term numbers will be a bit muted. We expect 2 to 3% volume growth in the cigarette business in Q1. But in the rest of the business, we see a recovery because of the rural.
Oh. Okay, and what about Titan? This customs duty on gold and silver has been reduced from 10% to 6%. What kind of impact do you think it would have on Titan in the near to medium term?
I think it's a very, very welcome initiative because smuggling had become very rampant too. So a lot of the local jewelers who are able to compete because of the smuggled gold, those will clearly see much tougher to get the smuggling, because now the difference is much limited versus legal and the smuggled gold, because now from 15% the duty is down to 6%. So clearly 9% kind of a cut on the gold pricing is happening, and that's going to propel a lot of volumes before the festival season. So yes, good benefit for all jewelers, including Titan. But in near term, what will happen, whatever the jewelers have paid with higher custom duty till yesterday, that small time inventory loss can happen. Whenever the results come, we'll get more clarity. But that's just a one-off. So yes, clearly volumes will go up before the festival season. So this will also help them become more competitive versus the local jewelers. So that's a positive for the sector and for Titan also.
Abneesh, just one last point. I was sort of discussing this with Naren earlier, that rural sort of allocation is down once again in 25 over 24. And it is, that budgeted number. And this has been true for the last 4 or 5 years. So, that broad flip which many were expecting, I mean, that's not really come through, has it?
So 2-3 things. Naren also highlighted that you have to look at the indirect bit also in terms of the infrastructure development. If Bihar and Andhra are going to see so much infrastructure development, Obviously, that's done by the rural poor in terms of jobs, plus the skill development and all this initiative of the jobs which the government is driving. Please also note what Maharashtra government has done, right? So many freebies. So don't look at the union budget only. You'll have to look at what Karnataka government came back to power by those 5 promises of 52,000 crore outlay to the rural and urban poor. So I will say that this is a mix of the union government and the state government. So that's clearly there. Now coming to specific numbers, if you see 2.66 lakh crore for the rural development, 1.5 lakh crore for agri, everything doesn't need to happen in budget. If you see MSP hikes also, which came around 1.5 months back, that was also much higher than the last 6-year average. So government is going in the right way. We have the 5-year visibility of a coalition government. And currently, if you see the elections, whatever data is coming, I will say that the government will be very focused on the rural and urban poor both.
All right, got that. Avnish, good to speak with you. Thank you very much for your time. Appreciate you joining us here on CNBC TV18. There's 4 minutes to go for the market opening. Let's bring in our 9-10 calls as well. We have Mitesh joining in and Sudarshan. Mitesh, what do you have?
I'll suggest a buy on escorts for targets of 4,300.
And Sudarshan?
Consider buying Ambuja Cement with a stop under 660.
Okay, well, ITC and Titan are definitely in focus, as we just spoke about them a while back as well. Mangalam is here to tell us the latest on that. Mangalam, over to you.
Well, a big mover yesterday, both ITC and Titan, the top Nifty gainers. No changes in tobacco taxation announced, and recovery in the non-tobacco business will be something that the street will eye as well. And there are a couple of brokerage notes coming in. So we have Jefferies, which has upgraded the stock, saying that it comes out as a clear winner. In fact, they don't expect any GST changes until May 2026 as well. They've upgraded their EPS estimates by 1 to 2% and raised their target price to just under 600 rupees as well. Macquarie too this morning has increased their EPS estimates by 2% for the next 3 years, and they expect better volume growth given no changes in taxes. They've upped their target price from 535 to 562. On Titan, the total tax on jewelry down from 18.5% to just about 9.2%. Street eyes better Q2 and beyond. Senco yesterday told us that there will be an increase of 9 to 10% in immediate sales on account of this. CLSA has maintained their outperform rating target just shy of 4,000 rupees, and Macquarie too has raised in their EPS estimates by about 1 to 2% to factor this customs duty cut. So after a big move yesterday, expect some more to come by today.
Okay, oil marketing companies also in focus. Sonal is here to tell us more about that. Sonal, over to you.
Well, good morning, Sonia. Nuvama has put out a note. We've been talking about budgetary allocations this time around, and the budget fine print suggests the expense allocation by the central government to the Ministry of Petroleum and Natural Gas does not include anything on the recoveries or the under-recoveries by LPG for these oil marketing companies. That's a negative. This is because BPCL in its con call did indicate that their under-recoveries will be widening going forward because the declared price for LPG sales is below the cost to OMCs. This time around itself, they had booked under recoveries of around 2,300 crore rupees for LPG itself, and we'll get to know about HPCL and IOCL after their numbers. With no budgetary support declared, OMCs are likely to continue to bear losses on sale of LPG, according to Nuvama. The second thing is, remember, the government had announced that they will be financing all these oil marketing companies. There will be some support in terms of funding to the tune of 30,000 crore rupees, but nothing fructified in FY24. The companies had announced rights issue as well, but there was no further update on that, and now this allocation has not been made in FY24 budget as well, and that is something that Nuvama is worried about. They say this indicates that the government's plan to infuse capital is off the table for OMCs, and that is something which could mean no financial support for them for transition to green energy and other capex plans as well.
All right, Sonal, thank you very much for that. On your screen, the pre-open rates and how they've settled. 30 points lower on the Nifty. The Sensex is down about 85 points. And, we're at 24,445 and the Sensex at about 80,343. So straight out of the bat, of course, we'll track indices, etc. But we'll also track earnings because they are going to come back into focus. And I think the problem for the market more than anything else is I think there is a pretty pronounced slowdown in earnings momentum that we are seeing in Q1. We'll just look at the numbers we've had so far and just try and find big beats. I mean, you'd struggle. And misses, there are many. So I think that again comes back into focus more than anything else in terms of individual names, etc. So just that's the well, and we're off to the races. 24,445 is where we are, 36 odd points lower, 30 points lower, 24,450 is where we're at. So it's marginally down. Bank Nifty is starting about 190 points lower, 51,556. Sensex is down 200 down. Mid-cap index is down, actually not down. Mid-cap index is absolutely flat, so it's doing better than what large caps are doing. And I think you'll also just look at the small cap space and what that is doing as well. So mid-cap index is in the green, small cap index is in the green, and market breadth is positive, 2:1, favoring advances to decline. So that's essentially where you're at. I mean, the ITC boost continues for the market. ITC is up 2% once again after yesterday's near 5% rally. It was the single biggest index point contributor to the Nifty, and there is more coming this morning. Sonia.
So, you know, it's not a bad opening at all. Given the kind of announcements we had in the budget with regards to taxes, I would have assumed at least day 2 would have started with some gash, but no. Flat to a bit of a negative bias. The mid-cap index is actually in the green by about 200 odd points. Bajaj Finance is your top loser on the back of the numbers, so that one is down about 2 odd percent, but I think that was expected. So it's, you know, now gaining traction in terms of volumes as well. HUL is also down about 1%. Britannia is down 1%. Tata Consumer is under pressure. So these are stocks that are trending in the red right now. Couple of these pharma names also not looking too good. Cipla is down almost 0.7%. What's doing well is ITC. It's a fresh 52-week high on ITC. Titan is up almost about 0.8% on the back of the 6% gain yesterday. HDFC Life, Tech Mahindra, Coal India, ONGC are a couple of other stocks that are trending in the green right now. Lots of stocks in the broader markets as well, but what really stands out for me right now are a couple of these PSU names. So something like an IRDA is up almost 2.5%, some buying into seen there. RCF, IRCON, IRFC, IOC, NBCC, all in the green right now. BEL as well. So defense has come back a tad bit. But otherwise, for the market, it's very quiet. What really stands out is ITC at a fresh 52-week high. The headline index very, very flat with a bit of a negative bias. And since we're talking about 52-week highs, United Spirits also, by the way, is at a fresh 52-week high post its numbers.
Well, that's right, Sonia. A few more stocks to put down the list. You have ICICI Prudential. That one's doing very, very well. Yash had told us those numbers were quite good. The stock opens up with a gain of around 4.5%. So good move up there. Bagel Projects, they're backed an order worth around 580 crores from Power Grid Corporation. That's coming up as one of the top volume movers in today's trading session. So Bagel Project should come up for you on the screen. You have Thyrocare. Well, that one, in fact, is flying away. The volumes are yet to pick up substantially, but for the time being, the stock has opened up with a gain of around 5%. The margins have expanded yet again to around 27%. That compares with around 25%. Explains why the stock is up and about. And Borosil Renewables, a 10% basic custom duty on imports of solar glass has been taken very, very positively. And that's why after yesterday's big gains, you have Borosil Renewables that's up yet again with a gain of close to around 6% or thereabouts. Parag Milk as well, the first tick was in the green, so good going out there. Let's check out if there are any negative earnings reactions. Mahindra & Mahindra Financial, Abhishek told us elections, heat waves, floods, well, they all impacted the disbursement. For the time being, that stock is more or less flattish. And Vedanta, in the next couple of days, we'll be waiting for the dividend announcement. For the time being, I think the stock had opened up more or less flattish as we speak.
Okay, well, that's essentially where we are at. Just, I don't know, Muthoot and Manappuram, if we can have those stocks up. They both were down 5 or 6% yesterday. Is the damage done and is the market adjusted? Manappuram is flat. Muthoot will come up on your screen as well. That's down about 1/3%. Some other specific budget stocks, Borosil Renewables was a big mover yesterday. So maybe we'll have that up. Was up about 9% in trade. That sort of import duty exemption has finally been done away with. So there is support for the business in terms of regulation. Another 7% this morning. So 35-36 rupees on Borosil Renewables. Let's just look at real estate stocks as well, because I think yesterday they did come under some pressure. But take a look at, start with DLF and Oberoi is starting 1.25% higher. Look at Macrotech, DLF. DLF is down 1%. Macrotech is up 1%. So it's mixed. So let's look at Sobha, Prestige, Brigade, etc. The Bangalore-based players as well, and see if there is anything coming through in that segment as well. So Sobha is up 2.5%. That's a 40 rupee gain. Prestige is up 1%. Brigade, etc. will come up. So it's an interesting space, of course, and a lot of debate. You heard from Naren as well in terms of what this does to the taxation bit does to sort of prioritize or make certain sectors more attractive, certain asset classes more attractive, and of course makes others like debt mutual funds especially less attractive. Index is flat as they come. And this is essentially what we were saying in the morning. VIX was down 18% yesterday, so nothing very big to be expected, at least in the near term, or day two and beyond. So that's where we are at. More stocks we'll put up on the air in just a bit from now with specific moves, but let's bring in Shiv Puri, who's with us as well, founder and managing director at TVF Capital Advisors. Shiv, good morning. Great to have you with us here. Thank you for your time. The tax bit just sort of watered off the duck's back, Shiv. Nothing at all. And we've moved on, looks like. Yeah.
Sorry, I was just going to say, I think the budget as a whole was a very conservative kind of budget, more of the same, what we saw in the interim. I would have hoped for a slightly bolder budget in terms of spending. We have an economy that is very strong, and fiscal consolidation is, of course, important. But I wonder why we are focusing on it, so much when growth is pretty strong. Fiscal deficit projections in India are 4.9% of GDP. In the US, it's 6.5% of GDP for this current year. And India is growing at 7-8% real. The US is growing at 2 or 3% real. So I wonder if more spending could have happened to boost consumption, especially in certain pockets of the economy for the current year, given the backdrop that we have.
You're saying, sorry, you said you're wondering why we're so focused on the fiscal deficit, is what you said, Shiv? You're going to probably spend a little bit more?
Yeah, I think so. I think there's a lot of conservative assumptions that are being made in keeping that fiscal deficit under 5% of GDP.
Got it. And are there any market sort of implications of not spending more? I mean, I was sort of discussing earlier that rural spending actually is down for 5 straight years now. I mean, the allocation. There are different ways in which the money gets to what we call rural, but in terms of the printed number, the allocation is down. Yeah.
Yeah, absolutely. I think you'll see it in corporate earnings for the next couple of quarters. I think earnings are slowing down a bit. And you're starting to see that not only in the rural part of the economy, but you'll start seeing that, I think, slowly a little bit in urban consumption as well. So I think there could have been a boost that could have been made for consumption. And maybe it'll happen over the course of the year. Maybe it'll happen outside of the budget. I don't know. But I was surprised to see the focus on keeping that fiscal deficit number at 4.9% rather than letting that move up a little bit to boost consumption across the economy.
Okay. Shiv, hi, good morning, and thanks for joining in. I wanted to also understand your view on the real estate taxation from yesterday, right? In effect, the announcements yesterday are a positive for real estate because the LTCG applicable rate has been reduced to 12.5% from 20%, although indexation benefits are not provided. But do you think that in the longer term, between real estate and the equity markets, what is your preference now, given what we saw in the budget yesterday?
From what I understand, I think these are two very different asset classes and very different set of investors. So I don't think movements in taxes to the extent that they've been announced will necessarily result in movement of significant capital from one asset class to another. The profile of investors in these two asset classes is actually quite different.
All right. Hi, Shiv. Good morning. Tell us the themes you like then. When you joined last time around, we discussed some good quality hospital companies, some discretionary companies as well. What are the top themes you're betting on from here on?
Well, I wouldn't have thought that prior to the budget, one would say tobacco and gold would be the two areas that came out ahead. I'm not sure that is the right kind of takeaway, but that is sort of the two areas that have benefited. I don't think those are interesting areas long-term for a whole host of other reasons. But I think the structural areas in India still look good. We've talked about it in healthcare and hospitals, even financial services, as always. You're seeing it, in industrials, but certain pockets, and one has to be very careful out there as to what's cyclical and what's structural. I think those are the sort of the three kind of main areas that I look at. Consumption is interesting, but I think consumption is slowing and it's continuing to be slow. And I think even now there are certain pockets in the equity markets that are not accurately reflecting the slowdown in the real economy.
Shiv, since we're indulging, cigarettes as well as gold has got a bit of a booster shot. What about the alcohol beverage companies? United Spirits is up close to around 5%. Good, bad budget, good or bad days. People, they'll knock in a few, right? Either on the weekend or the weekdays. How do you view the space? And India is still an under-penetrated market.
I think one of the biggest dichotomies is looking at a top-down story without understanding maybe the bottom-up positioning. Alco Bev, from a top-down perspective, looks amazing in a country like India. You have huge under-penetration, consolidation, and a culture that is increasingly still moving in terms of consuming alcohol for the first time. But I think on a bottom-up basis, from a regulatory standpoint, from the intensity of how business happens in that space in India, it's actually a very difficult space. And whether the companies do actually be allowed to keep the profits that they make over the long term, or a lot of that's actually given away in taxes and duties is another matter altogether.
Shiv, you've been sort of big believers in banks and financials. That the top holding for you still?
Yeah, I think so. I think they still are structurally well positioned. Clearly, as the corporate capex cycle picks up, there will now be increasingly more demand coming from that side. I think retail is going to likely slow down for some period of time. There's been probably a little bit of exuberance in the unsecured personal loan, small ticket size category. And we will see, I think, in the next coming quarters, the asset quality get reflected over there, which will sort of, bring some caution to some of the lenders. But I think the corporate cycle will remain strong. And I think the long-term outlook is still that it's very underpenetrated.
Just a quick bit on taxation, since, and does it change anything for foreign investors, Shiv?
I think it just makes it relatively less attractive as a market. And I'm not sure what purpose it serves. I'm sure they must have thought through why they wanted to do this. But I think from a relative basis, if you look at public markets, the long-term returns, are pretty evident in the sort of the 10 to 12% bucket for the Indian equity markets. And so when you start adding layers of taxes on top of that, relative to what other markets offer, it becomes less competitive. I was surprised to see the normalization between private and public, which seems to have happened in terms of the tax rate, because one would think, on private assets, your returns are higher given the liquidity risk. But now there's a normalization on taxes. Public markets don't offer that kind of upside, on a relative basis.
So in terms of sectors, in terms of, spaces that you would be optimistic on, Shiv, what are you looking at over the near to medium term? How does one approach the equity markets now?
I would think, generally a bit cautiously, right? The overall economy is doing fine, but you are starting to see, large pockets of the economy slow down a little bit. And we do know where valuations are, and I think they're pretty high. Generally across the board. I think it's still okay in the larger names, but at the smaller mid-cap names, it's head-scratching to see some of the dichotomy in fundamentals and valuations. And we've seen these cycles before. I mean, over the last 20 years, it's happened 3 or 4 times. So I don't think the outcome is going to be any different. India has a few structural trends, which we've talked about, which is financials, healthcare, industrial consumables, consumer, etc. And I think one has to just be patient to ride it out in those areas.
One space that's caught everyone's attention in the last year or so has been the PSU basket. Some of them have run ahead of themselves. Some of them have run way ahead of themselves. But there still could be pockets of which have valuation comfort, maybe like some banking names, the bigger ones. How do you approach this basket? Because that's where the big wealth has been created. But has it run its course?
one has to really believe that there is something very fundamentally different in PSU banks for valuations and to move up from here. Because if you look at the historical cycle over the last 2 decades, these banks tend to trade at somewhere from half times book to 1.3, 1.4 times book. I mean, that's sort of been the range. It's clearly at the high end of that range right now. And so is there something fundamentally that's happened for these banks to change? Now, one would say that they're definitely better run than they were 5-7 years ago. And I mean, certainly from the trough of 2013-14, where asset quality issues across the PSU banks were so prevalent, I think all those days are behind. And the other area that I feel they've done pretty well is catch up on technology. They've also done, some of them have done a better job in gathering low-cost deposits. So, they have some strengths that are built. I'm just not sure that there's anything that's re-architected their business to make it significantly more profitable going forward, and valuations are at the high end of where they've been historically.
Okay. Globally, things have looked very good up until now, but there are some geopolitical risks. There is, of course, this big election that's happening now. We've seen Joe Biden step out of the presidential race. Putting all of that together, do you see any global risk for the Indian market now?
I don't think that there is. I mean, there's always geopolitical risk. We've lived with geopolitical risk for the last many decades. One could argue that the peak of geopolitical risk last year has been crossed, but of course we don't know what could come down the pipeline. From the global standpoint, if inflation in the West is under control, and that's a big question mark now if the Trump administration comes in. But if that does happen and you see interest rates softening, that is actually positive for emerging markets. I just think that the way both candidates have sort of announced their plans, and certainly under the Trump administration, spending is going to go up dramatically, and that doesn't usually bode well for their inflationary outlook.
Okay. Thanks a lot, Shiv, for joining in. Appreciate your time here on CNBC TV18. That's TVF Capital with their views on the market. By the way, the mid-cap index is actually doing very well. It's up about 400 points. It is a relief to see that, given what we saw yesterday, the initial fall and then the rise. Kalyan Jewellers is really the big stock on your radar, 12% higher now on Kalyan Jewellers. You have a couple of others that are looking pretty good as well. Suzlon is one stock that is up almost about 5%, so let's talk about that. The company reported a very strong performance in Q1. Their order book was strong, highest deliveries in Q1, while the wind turbine generator margins also saw a stellar jump. To discuss more on this, we have Himanshu Modi, the CFO of the Suzlon Group, who's joining us now to talk about that. Himanshu, good morning and thanks a lot for joining in. It was a very strong order book that you saw. The revenue growth was quite healthy, almost a 50% jump is what you saw year on year. So I just want to start by asking you about, since the budget was the big event behind us, anything from the budget for your sector, anything that could boost demand and investments?
So clearly, I think, even beyond the budget, the sector has seen a lot of policy push from the government. Renewable energy as a sector is clearly on the radar. We're working towards a target that has been set by the regulators of increasing green energy inputs. So whilst there may not have been anything specific per se in the budget this time, but clearly, I think from a larger policy push perspective from the government, renewable energy sector is one of the priority sectors. That is very evident.
Okay, so that's on the budget. Can you tell us a little more about your own business? It was a very strong Q1. And can you give us a sense of the WTG deliveries that you had? How did it pan out? Any deliveries from the last quarter that spilled over into Q1? And what is the way forward in terms of Q2 and Q3?
So we did about 274 megawatts in Q1 in terms of delivery. Of course, this is for the quarter. So there's always be a spillover from one to the other, but that's just the phenomena. So 274 is what we did in this quarter from April to June. And our order book currently stands at about 3.8 gigawatts, which we need to deliver over the next, I would say, 18 to 24 months. So I think the outlook, it's fairly positive. And Now the execution will start to play out. FY24 for us largely was consolidation of our balance sheet and getting the working capital in order for execution of the order book. FY25 for us would largely be focused on P&L and the deliveries that we need to make out of our order book.
Okay, all right. Hi, Mr. Modi. Good morning and good to see you again. And the stock saw a bit of a re-rating, but I think post these numbers, the street has got a little bit more confident as well on your deliverables. So let's talk about first the industry on the whole. The government has been talking about 10 gigawatt of wind capacity addition on a year-on-year basis. For this year, though, how much do you expect the industry to add? That's FY25 as well as FY26.
So we, as an industry, added about 3.3 gigawatts in FY24. Our sense internally is that the industry would do around 4.5 to 5 gigawatts in FY25. Difficult to put a number for FY26 as yet, but I think certainly 4.5 to 5 gigawatts for the industry in FY25 should be doable.
And you would have close to around 30% of the market share. So if I extrapolate that, you'll be at around that 1.3 to 1.5 watt. Gettable number, right?
Yeah, so that's, of course, our historical market share has been around that ballpark. What FY25 holds, of course, time will tell.
Yeah, that's why I try to get it out the other way. So we are extrapolating that number and let's see how things progress. What about the O&M side of the business? How much does it contribute as of now? And margins over there are relatively better. How do you see that scaling up and the impact on the consolidated margins?
So margins there continue to be strong, about in the early 40s, so anywhere between 42 to 43, 40 to 43% is where we are seeing operating margins on the O&M business. That's, of course, a steady state business for us. Currently, annualized revenues are close to about 2,000 crores, which historically in the overall pie have been close to about 25 to 30% of the overall pie. But as the WTG business keeps growing year on year, whilst the absolute number on the O&M will also increase steadily, but the overall share in the consolidated would decrease. And that would have an impact on the consolidated margins because O&M margins are certainly higher than that of the WTG business.
So what does it mean on margins from year on? You've gone up to around 18% as I see of the past quarter. Given the change in the mix, though you'll have some kind of operating leverage as well that could play out, what should be the number we should work with on an average for the year?
So, as I said, on the operating margins for O&M, about 40 to 43% is something that definitely is achievable. And
on the consolidated front?
No, I'm talking about the O&M.
Yes.
On the consolidated front, similar ballparks definitely is doable.
17, 18%, you can hold on to it, right?
Yeah.
Okay, all right. Also, if you could tell us, give us some color on the order book composition. As you said, it's looking very, very good. Break it up for us and tell us whether the better margin business will start now getting executed, which in turn, though your mix is changing on the O&M side of it, but, if the number of contracts you're executing is a better margin, that's what could support the profitability going ahead.
No, I think WTG margin contracts are pretty much, I would say similar pricing. There's nothing same pricing, but similar pricing and similar margins. Of course, operating synergies and efficiencies, economies of scale will start playing out over the next few quarters as and when we execute. But from a sales perspective, I think, our contracts are similar in pricing. Whatever operating efficiencies by cost management we can achieve, that is what will result into healthy bottom line.
Okay, well, Himanshu, we leave it there. Thank you very much for your time. Stocks up 5% and market likes, but of course, what you've done. Appreciate it. We'll take a quick commercial break here. On the other side, we'll be connecting with Atul Lal, Managing Director at Dixon Technologies, and we'll discuss what Dixon and the EMS sector made of the government's proposals for FY25. Stay tuned. Okay, welcome back. We have the management of Dixon Technologies now joining us. The finance minister yesterday announced that basic customs duty on mobile phones and chargers will be slashed to 15% from 20% earlier. Let's sort of talk about this. Atul Lal is MD at Dixon Technologies, the largest EMS player, which of course is now diversifying into so many newer areas, newer sectors. Mr. Lal, great to have you with us here. It's always a pleasure speaking with you. Prashant this side. Implications, sir, of this duty cut, if any at all?
Not at all. Please appreciate that the mobile manufacturing ecosystem in India has really matured. And we are of a firm conviction that mobiles being sold in India, practically everything will be manufactured in India. The CBU imports of mobiles is practically just 3 to 4% of the overall sale of mobiles in India. So this is just a duty rationalization. It has absolutely no impact on the manufacturing arbitrage, manufacturing competence, manufacturing story of mobiles in India. In fact, taking a couple of minutes more, my humble request is that the stakeholders should get into the fine print details that how the government has really interfaced with the industry and accepted a request for rationalization of various other duty structures, whether it's an extension of concession notification, whether rationalization of duty concession of the critical materials for semiconductors, on connectors, expanding the scope of connectors, on extension of concession notification beyond die and mechanics, on aluminum parts. So those are positive things. And the first step, a significant step of mobile manufacturing in India, which is already achieved a maturity stage, now the next stage is to deepen the manufacturing and create the component ecosystem. And the government very prudently has fine-tuned and rationalized those duty structures.
Got it.
Which we welcome.
No, and I'm sure they're hearing you, and point taken, Mr. Lal. Now, for allocation for PLI schemes, if you look at the sort of large-scale electronics manufacturing, that's up 36% as compared to FY24 budget estimates. But if you look at allocation for IT hardware, that is about 50% lower as compared to FY24 budget estimates. Your thoughts?
So we are hopeful, and we are in a positive frame of mind. We feel that as electronics manufacturing is concerned, the government has been positive in response and will be rolling out a package for the component sector, and this time for the non-semiconductor component domain, which is again what I mentioned earlier, is in line with deepening of manufacturing and enhancement of value addition. As far as the IT PLI2 is concerned, the scheme is just in a takeoff mode. I think it's going to take some time for it to achieve a certain level of gravitas. So looking at that, I think the allocation has been revised a bit lower. But I think it's just a matter of time. Every scheme, it takes a couple of years or slightly more till the time large global brands start doing manufacturing in India, and then it acquires a certain mass. So I think it's in that direction. In the overall scheme of things, I don't see any negative element, even in the IT PLI2.
Okay, all right. Hi, good morning, Mr. Lal, and thanks a lot for joining in. Well, and their stock price is telling you that, right? The street wants to give you a few years. They believe there's tremendous potential as well. My basic question to you was on the mobile industry. We are talking about value addition, the PLI schemes, a lot of focus out there. Tell us, what is the cost of manufacturing that mobile phone here in India? And you compare it with China, and has that gap narrowed in the last few years? And how do you see this panning out? A very basic question.
You see, there was a disability, and for covering up the disability, any government should be doing the handholding of the industry in its stages of infancy, and that's what the government has done. And the first PLI mobile scheme, wherein it started with 6%, presently in the current fiscal is at 5%, next year is going to be 4%, I think is fairly good to compensate at level 1. But now there is another angle to it, that when we started mobile manufacturing in India, there was hardly any component ecosystem. And until unless we have the depth of supply chain, anything that we are doing at the assembly stage, at the device manufacturing stage, is not beyond a point sustainable. So that's the reason we are requesting that the government should cover up for the disability in the component ecosystem, because our neighboring countries are much ahead. They're 2 decades ahead of us in that particular category. So I think there is a disability there, and that's where we need the package. And also the financial metrics of the component ecosystem for mobiles or even the other electronic parts are very different from device manufacturing. The asset to turnover ratios in device manufacturing can be 1:10. In various components, is barely 1:1. So it requires a different kind of treatment. It requires a different kind of handholding. And let me assure you that once that happens, and the value addition, which currently is somewhere in the range of around 17-18%, goes up to 30%, then it's a huge industry. And not only for servicing the domestic requirement, it's for servicing the global requirements. And I think the industry is moving in that direction.
But you wouldn't be able to put a number to that? The difference, what that was, that is, and that will be?
As far as the mobile device manufacturing is concerned, I think we are almost there. But when we look at the various components, I think the disability would be in the range of around 7 to 9%.
Okay, all right. A good conversation, Mr. Lal. Cost of manufacturing in China has gone up. So I think that has helped as well in that sense. And cost here has probably gone down. And, of course, the hand-holding that you spoke about. Mr. Lal, thank you very much for joining us. Good speaking with you here as always, and good luck till our next interaction. Now, real estate investments have lost the benefit of indexation, which allowed property owners to adjust their gains for inflation. Finance Secretary clarified to CNBCTV18 that the tax incidence under capital gains without indexation is lower, will actually benefit a lot of people. So, I mean, a lot of debate and argument around this one, but you just want to play out that soundbite from the Finance Secretary.
What we have tried to do is that inflation in India is fairly predictable in the long run. We have checked that the average rate of growth of the cost inflation index, which is used for capital gains, is about 4.6%. So it's predictable. We know that on average your assets, for tax purposes, see, individual assets may go at different rates, but we use a steady index for tax calculations, which grows at 4.6%. Now, let me give you a numerical example. I don't think anyone would make the case that property will appreciate less than a fixed deposit. That's not why people buy property. They buy property because it appreciates faster. And India is a land-scarce country. Property is bound to appreciate faster than most other assets. So let's say you expect property to appreciate at, let's say, 15% per annum. Take off 4% for inflation. Currently, with a 15% gain, you're taxed on 11%. Because every year you get a 4% knockoff for indexation. On 11% of the growth, you're paying 20% of that. So 2.2 is the tax that you pay. In the new system, you will pay 12.5% of 15%, which comes to 1.87. So it's lower. It's lower at almost any reasonable rate of growth for real estate, and we have calculated this. We have calibrated to be, in fact, for us it will be negative, because in most cases the tax which would be computed on an indexation basis would have been higher than the tax on the non-indexed but much lower rate that we have imposed. So we've tried to keep it at a level where almost nobody will lose. A lot of people will gain because the indexation benefit will be less than the benefit that they would get. And one more thing I want to add. We will continue to start valuing property only from 2001. So it's not as if that benefit is taken away.
That benefit is not taken away?
That is not taken away. The value of the property will be the value as of 2001 or of the date that it was acquired.
Okay, clearing the air on this entire, confusion around real estate taxation. But in effect, I think the announcement yesterday is a positive that came through. The fact that long-term capital gains applicable on real estate has been reduced to 12.5% from 20% earlier. Let's discuss more on this development. Ghulam Zia, the Senior Executive Director at Knight Frank India, is with us. We also have Gautam Lukhande, who's the partner at KPMG India. Gentlemen, morning to both of you. Ghulam, first I want to understand from your end, right? For someone who perhaps owns a property, both a legacy property and is looking to buy a fresh one, what are the implications of the announcements that came yesterday?
Good morning to you all. First of all, I was just looking at the arguments that the Secretary is putting up, and it is all completely revolving around expected gain per annum of about 11% after inflation adjustment. which is actually not possible. Last 3 years, we have seen the property cycle growing up. The annual growth of property prices are still in the range of 7 to 8%, not considering inflation. So there it is. The whole argument that at least he's putting up is something which is, to me, is applicable only if property prices are appreciating 10% plus per annum, which we haven't seen in last so many years. In fact, if you leave aside last 3 years, prior to that, we have seen a free fall in property prices for almost about 9 to 10 years. And that inflation adjusted would be negative. And that is where, while the whole argument that one is putting up has to be seen over a period of time, multiple factors go into it. But then at least looking at this argument that the property price have to go up 10% per annum is not something which cuts ice. At least I haven't seen that happening. So net, most of us believe that in the long run, the gain that you will get out of this new policy will be neutral to what it was earlier. But then we'll have to see case-to-case basis, different arguments. But I think I'm not fully convinced that there is no loss due to change of this regime.
Okay, got that. Ghulam, that's very well put actually. So you're saying that the lower tax implication that you will have is only in case of a higher price appreciation of more than 10% on an average. And that is something we haven't seen. But that is mostly the case with metros, right? Across the rest of India, we have seen many areas, tier 2, tier 3 cities where there is more than 10% price appreciation. So in effect, do you think that broadening of the real estate sector is something that could take place? Where people, rather than looking at metros because there is no price appreciation, move on to the broader part of the sector?
That's also not true, because price appreciation also is not every year-on-year 10%. You can't imagine that every 4-5 years you will see 10% price rise. First of all, real estate is cyclical, which is all of us are aware of. And then, at least your argument right now is that in non-metro cities, price rise is much higher than the metros. Once again, something which I don't fully subscribe to. So you'll have to once again look at it from case-to-case basis. At least I'm not convinced that the property price growth has to be inflation adjusted in double digits. That, to me at least, is not possible.
Okay. Ghulam and Gautam, thank you very much for joining us. Prashant here. Gautam, if I can come to you, what does this mean for new real estate sales? The removal of indexation benefits, Gautam. And from a builder perspective, is it not positive? Because you're basically paying 12.5 as opposed to 20 earlier.
I agree. So I would look at this in two different segments. The impact that a retail property seller would have, and then the corporate side. For retail taxpayers, Ghulam has outlined the picture well. I would broadly agree with it. And again, it has to be a case-to-case assessment depending on the nature of the asset, the cycle in which you sort of purchase the asset. And again, if you've managed to beat inflation significantly in terms of the compounded rate, I would believe that you'll be better off. And if not, I think you're definitely not going to be seeing a good benefit because of the tax change. On the corporate side, Prashant, what you mentioned is right, in the sense that a lot of developers are looking at this very positively. If you look at the corporate transaction market today, a lot of exits being planned by promoters to funds and private equity players, particularly in the commercial real estate side. Promoters will be very happy with the reduced tax rate of a 12.5% vis-a-vis a 20% that was there applicable earlier. So that is very positive, and in particular, a lot of players who have been looking at the REIT market, investors in REITs, also get to benefit because of the change, because their period of holding drops from 36 months to 12 months, and they get to enjoy a lower rate of tax if they have held on to the asset for a shorter period of time. Yeah, I think these are the two, I would say, impact areas from a corporate side. Over to you.
Okay, all right. Thanks for that, Gautam. Well, let's go back to Ghulam. Ghulam, I wanted to understand, we're talking about this resurgence of the real estate cycle in the last, say, 3 to 4 years. Do you have some rough numbers? How much of these purchases that were done in the last few years, say last 4 or 5 years, were for end use, and how much of that was for investment, if you'll have a rough number?
It's very difficult, but then if you have to just look at back of the envelope kind of trends that are happening, 3 years back, it was more or less all for end use. But after that, as the prices started going up, 5 to 10% kind of a growth, in a few very rare projects, we have seen prices going up above 10, 11% as well in last year or so. In such projects, you would see investors also coming in hordes because they now want to believe that the cycles have turned and the prices will continue to grow in next couple of years. So while that argument is not completely wrong, but then also that it's a very small number of investors who are jumping in. In my view, it is still not more than 15 to 20% of investors vis-a-vis 80 to 85% of end users who are still buying. And that too in very small pockets. When you're talking about some, a few of those top developers selling huge number of assets, huge number of properties in, say, Gurgaon or South Mumbai, that is where your number of investors may be slightly higher. But on a broader perspective, I don't want to believe that the number of investors would go beyond 15% out of whatever sales happening in last year and a half.
You mentioned Gurgaon, Ghulam. What would the number for Gurgaon be? I mean, in terms of investors?
That could perhaps go 25-30% as well, because this is something which is happening just recently. Last year, we have seen some record-breaking transactions where people are actually standing in the queue and buying. This reminds us back of about 15-20 years back of a cycle upside. But again, as I said, it won't be more than 25 to 30% of investors' share in this market.
Okay, earlier you said that the annual returns on property prices on an average have been only 7 to 8%, right? I mean, is this across the board? And what is the time period you're looking at?
Well, as I said, if I would set aside last 3 years, prior to that, we had a bad cycle. In fact, all the way till COVID and even 21. 2021 is when the property cycle started turning around. Prior to that, we had at least 8 to 9 years of a free fall. And inflation adjusted, those days we used to have negative returns on property price appreciation. It's only last 3 years we've started looking at about 7 to 8% average growth across the country, across the markets, urban, rural, tier 2, tier 3. It is still in the range of 7 to 8%, and then you have to also adjust it for the inflation.
Okay. The other thing, according to me, was a very important takeaway from the budget is that the government is now encouraging states to lower stamp duty on property purchases for all. They've also considered offering a lower stamp duty for properties purchased by women particularly. Now, Ghulam, we've talked about this, I think, for the last 10 years, right? The fact that higher stamp duty rates is one of the key reasons for home prices going up so much. So your thoughts on are we looking at this lower stamp duty becoming a reality? If yes, is this a big positive?
Well, at least when the cycles are going up, stamp duty 1% or 2% here and there really doesn't make much of a difference. I'll make a case here. About immediately after COVID, Maharashtra was the first state to offer stamp duty reduction. And that stamp duty reduction lasted for not more than 7 to 8 months. After that, they have actually taken the stamp duty up. In fact, recently, last year and a half or so, they have added a 1% metro cess. So net, we are paying 6% stamp duty in Maharashtra. And in spite of that, the number of transactions is absolutely path-breaking, historically highs. So the point is that just because stamp duty 1 or 2% here and then tweaking would change the market, I don't completely subscribe to that thought. And that even that 1% reduction for ladies buying an apartment is something existing in Mumbai, in Maharashtra for last 2.5 to 3 years. So none of these things are new. What the central government is talking about is broad basing it to other states as well. And maybe other states where you haven't seen any impact of stamp duty reduction may behave slightly differently than what we have seen in Mumbai. But net, these are, again, as I said, this is a state subject. Every state will have to be convinced. And one of those states which will be worried about loss of revenues on account of lesser stamp duties, center will have to think about how do they compensate for that.
All right, Ghulam, it's always great speaking with you. Thank you, Gautam. Good to speak with you as well. And we'll continue to discuss some of these aspects in the coming weeks as well. Thank you for joining us here on CNBC TV18. I just want to quickly highlight the real estate stocks. Soba Developers is up 7%. We should have that up. 1896 on Soba. You look at Prestige, that is up 4%. Lodha is up a little less. It's up about 2% or so. So Soba, Prestige, there's Lodha Developers, and there is a Max Estates as well, which is up about 4% as well. There are a few, which are doing nothing, but nothing is down really. They're flat to down about 0.5%, 1%, and then there are these other stocks which are up 4 to 6 odd percent. So market, of course, sniffing some of this stuff out in terms of what's going on. Mitesh is with us to run us through what to do now in terms of trading ideas. Mitesh, what do you have?
Prashant, the buy on NTPC with the stop below levels of 382 for targets of 400. And Nestle, I think, has broken down. Some negative setup has happened over there. So sell here with a stop at about 25.70 for targets of 24.50.
Okay, all right. Thanks for that, Mitesh. Well, talking about real estate stocks, just one mention of DLF. That's one of the lone stocks that's down close to around 1.5% as we speak. And on the upside, adding to the list, there's Arvind Smart Spaces. That's up close to around 4.5%. And it's gone up in the last few minutes or thereabouts. Well, time to slip into a short break. On the other side, we'll connect with the management of TeamLease to understand the benefits of what was announced yesterday on job creation and skilling.
I'm endorsing Vice President Kamala Harris because she's ready to step up, bring our party together, go toe-to-toe with Donald Trump, and win in November.
Kamala Harris is at the top of my list. I know her well from having worked with her in the Senate, on the Judiciary Committee, sitting next to her on the floor of the Senate, knowing her and her family personally.
I think Vice President Harris's energy, her enthusiasm, the time she spent here connecting with Pennsylvanians, she's no stranger to us. She spent a lot of time here. I think people will be ready to enthusiastically support her.
Okay, welcome back. We are, of course, touching upon various specific companies, sectors impacted one way or the other because of the budget yesterday. And we have with us the management of TeamLease Services and what they make of the announcements in the budget on jobs and skill development for youth. Skilling was a big focus area on which the finance minister spent a fair bit. And I think there's a 30% increase in budgetary allocation towards education, skilling and employment, which has come through. We have Ramani Dati, CFO at TeamLease, joining us now to respond to what is announced. Ramani, great to have you with us here. For a company like TeamLease, what is the most significant announcement from the budget yesterday in terms of all of the schemes, etc., which were announced?
Sure. Now, firstly, for our industry, staffing industry, the biggest challenge is formalization. While there are many jobs that are getting created, only a handful are moving into formal sector. And the market share of organized players like us is less than 5% in the overall scheme of contract jobs. So the initiatives that were announced yesterday are mainly driving towards formalization of employment because all the schemes that they announced are towards driving more and more employment with EPFO, which is more of formal jobs, and encouraging the first-time job seekers. Because, again, one of the challenges for our industry when we compete with the informal sector is the difference between, Hathwali salary and Chittiwali salary, because of a significant amount of the CTC that is going into statutory contributions, be it PF or ESIC and other contributions. And with government coming up with more schemes which are supportive to first-time job seekers, additional employees, mainly in terms of their contributions towards EPFO and first month salary. So these will definitely boost more formalization in the contract staffing space that we operate in.
Okay, this is a hot topic right now, right? I mean, employment, job creation, etc., Ramani. So do you think there's anything more that the government could have done to facilitate further job creation, apart from what was announced in the budget?
No, this is a good start because the next major step that we would like to see in terms of job creation and more formalization is towards notification of the labor codes. Because that will be the biggest drive in terms of the shift from informal to formal jobs at a massive scale. And since these labor codes have already been approved by both houses of parliament, and it's only the notification that is pending, so we are waiting for the notification on the new labor codes implementation. So we believe that can be a big game changer. I mean, it won't be at a click of a button. It will be more like a gentle sunrise in terms of the transition towards formalization of jobs. But that would be the next major step to boost employment on the formal side.
Okay. Also on this Karnataka job reservation bill, right? I mean, there's so much debate. There's back and forth that's happened on this one. NASSCOM has given its comments as well. But what would your own thoughts be on what the impact would be on tech companies in Karnataka, in Bangalore? Do you think a lot of the, the restrictions could force companies to relocate? Because that seems to be the common narrative now.
Yeah, definitely there'll be an impact, and with a lot of debate going on, I think it's too early to jump to any conclusions and comment on this. So in terms of, since you specifically asked about IT companies, so many IT companies are all now talking about resorting back to work from home if this is going to be applicable to the local presence of employees. So some of them are also considering rolling back to work from home option, and can that also give an exemption for them aligning to this requirement. So, I mean, this is very initial stage, lots of discussions are happening, but it will definitely have an impact.
Okay, all right. Thanks a lot, Ramani, for joining in and explaining that to us. Well, shifting focus to the commodity markets now, Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, so now I'm looking at the gold prices, where we have seen the prices decline slightly in the international markets, and that is because of the dollar's strength, and that's weighing on for the Indian markets as well. For the Indian markets, it also is about prices declining below or off its all-time highs that we saw in the previous week itself. For the international markets also, it was at around $24.70 an ounce, which was an all-time high, and we have seen prices decline just about to $24.10 or 20 at this point in time. Well, it is the US Fed meeting on July 30th and 31st, so any guidance that comes out of that will be of most importance. And then apart from that, there's a very interesting Goldman Sachs report overnight which says that the gold prices are headed towards yet another all-time high of $2,700 an ounce, but that would be in 2025. But, well, absolutely, when it comes to the Indian markets, it was all about the budget and a very surprise, strong duty cut that we saw come in for gold, silver and platinum and various varieties of that as well. So the gold prices slipped by nearly 5% yesterday after budget. And then it is about the basic custom duty cut, which we saw from 10% to 5%, and the agri cess was also cut to 1% from 5%. So the total duty that used to be at 15% earlier now stands at a 6%. So with this 9% slash coming in for the duty, you did see a price decline come in for the markets there. The GST for jewelry right now stands at 3%. So for jewelry, it comes at around 6 plus 3%, which is 9% is what people will have to pay right now. Well, when you look at the consumers, it clearly is positive, especially coming at a time when you are looking at festivals and wedding season starting right from next month itself. So, well, yes, the markets are anticipating huge buying coming in for the next week or so. Well, the other thing also is that when you look at the Indian markets and the buying patterns that we saw in the previous year itself, and this is as per World Gold Council, Indians bought jewelry worth 576 tons and bars and coin demand was to the tune of 185 tons. And the anticipation is that you could be looking at a higher number in 2024. Now, when it comes to jewelers, while of course there are higher volumes because of the price decline, and that is a definite plus for the jewelry market as well and the jewelry companies also, But there is going to be a one-time hit on the existing jewelry stock that many of these jewelers are holding, especially if this stock is not hedged or is at an open buying from the banks right now, where you pay them after as and when the prices go on a monthly basis. So in that case, the jewelers, of course, are going to take a hit onto this one. Apart from that, the markets do believe that after a very strong slash that we've seen in case of the customs duty, there could be a GST hike coming in. Remember, 18th August is a meeting for GST as well, and 3% is a special case for jewelry. Otherwise, you have 5 and 18 and 28 kind of levels coming in. So the expectation is that this 3% perhaps could be hiked to 5% or even 9% for that matter. So the next week, 10 days, you're looking at lower gold and silver prices. But if and when that GST hike does come in, then we perhaps are looking at higher numbers.
Okay, thanks a lot, Manisha, for that. Well, let's sip into a quick break on that note. On the other side, Lata will get chatting with Ashish Gupta of Axis AMC to discuss the budget announcements and their impact on the market. Stay tuned. We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement, or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house.
Welcome back to our budget analysis. The budget on the face of it should have been actually positive for bonds and hence for banking stocks too. It has after all brought the fiscal deficit down to 4.9%, but bond yields actually fell very marginally, maybe 1 or 2 basis points in the OIS market, maybe 5 basis points, but banking stocks actually fell very sharply. To understand the budget better, from these two and other angles, I have with me Ashish Gupta, the CIO, Axis AMC. Ashish, thank you very much indeed for joining us. I'm going to start with something which was not in the intro. The F&O securities, STT, has been raised marginally. I mean, it couldn't have been raised more, I guess. I think it is 0.0625% on options, and that has become now 0.1. Does this move the needle at all?
I think it's a step in the right direction, but I think in isolation, it is not going to be adequate to what the regulators are looking to achieve. And I think multiple regulators as well as Finance Ministry has spoken about needing to curb the excessive speculation that is there in this area. And I'm sure they will be looking at measures to do that. But I think as a signaling tool, the increase in STT also achieves the same purpose, but in isolation, it will not be adequate.
would something more have been done, for instance, for gains made on F&O trades, a higher short-term capital gains tax? Of course, the argument has been that hardly any of them make gains, but there is a counterparty which is making gains. The government could have gone after them?
Sure. So I think then it becomes really an ideological issue as well, that if you are looking at different aspects of capital market income and treating them very differently. So I think there are other measures the regulators can look at. Really, this is not something that needs to be solved only through taxation.
Okay.
So there are other measures that can come in and really curb speculation and excessive retail participation.
Okay. Yeah, we have, of course, got the SEBI committee, of which you're a part of as well, and the SEBI's consultation paper is awaited. Broadly, from what is already available in the public domain, can you tell us what we should be expecting? I would assume a higher lot size is definitely on the cards. Anything else?
So I think that is in discussion with SEBI. So I would actually let SEBI come out with a discussion paper and really take it up then. So it would not be appropriate on my part to kind of second guess them.
Fair enough. But you have no inkling as to when we might expect something from SEBI?
No. So I think it should be in a few weeks is my guess.
Okay. Okay. Anyway, your job was to recommend, I guess, and then it's on SEBI's table. Okay, now let me come to the fiscal deficit reduction. It's a fairly substantial reduction. The market was deeply divided. There were at least as many number of people who thought it will be retained at 5.1%, since the government would have large expenses, at least for its two ally states, Bihar and Andhra Pradesh. And so there was an argument that it would be 5.1. 4.9 is a pleasant surprise. But bond markets have reacted only marginally. What's your sense? Where are yields headed and why a muted reaction?
Sure. So I think, first of all, I think really this for the first budget after the election. So I think it was quite important to see the direction. And I think the market broadly has taken comfort from the fact that despite this being a coalition government, there is no change and there is consistency and continuity in the approach the government has followed. Right.
Okay.
So if you look, they are firmly on the path of fiscal consolidation. The budget deficit has come down, and part of it is really attributable to the additional dividend they got from RBI. And they have actually used that not to really increase the expenditure, but to go further on the path of fiscal consolidation. So they have used the excess gain to really reduce the deficit. The reason I think bond market has not reacted more positively on this is primarily because the net borrowing target has not come down commensurately. So while the budget deficit has come down, there has been some reduction in the amount of financing that is coming from the small savings schemes, and therefore the total and also of treasury bills. So if you see the amount of supply expected to come in the bond market, that number has not changed materially.
Yes.
And consequently, I think there has been muted reaction on the bond market towards the fiscal deficit number.
Okay, no, I take your point. I think it was 4.10 lakh crore gross borrowing. It has become 4.01 lakh crore. So it's all of 9,000 crore less. One would have thought that with 20 basis points reduction, you know, something like 50-60,000 crore could have been reduced, which is not the case. I take your point on that, but would you, as a fixed income viewer now, believe that maybe the government will give up on some of its borrowing in calendar 2025? It has also been very conservative in its assessment of tax growth. I think it's just like under 11%. So is there a chance that they will do better on taxes? If you look at the April-July numbers, the tax growth is between 12 and 22%. So is there a conservatism there? There is also higher LTCG that they will collect, higher STT that they will collect. Is there a chance of an overshoot and therefore, less borrowing?
So I think I find the budget maths very, very realistic and very credible. So if you look at the buoyancy in tax revenues overall, it's been expected at about 110% of the GDP growth. So I think it's a realistic number. If you see the direct tax collections you spoke about in the first few months, they have been actually running ahead of estimates.
Yes.
But indirect tax collections have actually softened, right? And in fact, in the budget estimates, therefore, you see that recalibration as well, that there has been softening on the indirect taxes. Yes, certainly capital gains and STT collections have been bumped up or are likely to be higher. But that has been repurposed towards some boost for taxation for the relatively
higher standard
income.
deduction. Yeah, fair enough. Higher standard deduction, I guess.
So that largely nets off, right? So whatever you get in high cap gain, you have given tax breaks on income tax.
All right. So what you see is what you get. You're saying there is no conservatism there. Let me come to the one where
just on that, I think where the surprise can come and where the government may undershoot the borrowing target is really on the expenditure side. And I think if we look at the expenditure in the first 2 months, that has been actually running well short of the run rate that is targeted for the full year. So actually expenditure will need to accelerate much more in the balance 9 months if the budget estimates are to be met. So I think while there can be an undershoot on the overall borrowing target, it can perhaps come from really underachieving the expenditure target rather than overachieving the revenue target.
That's a great point. That's a great point, really, because we have only 8 months left. And of course, revenue estimates will have to come in February 1st itself. And they may be running short at that time. Ashish, the bigger point I want to get from you is the way the budget is once again trying to use public sector banks to lend more to MSMEs. I mean, PSU banks have to build in-house capacity to assess MSMEs for credit instead of external assessment. They take the lead in developing a new assessment model based on digital footprint, higher mudra loans. Again, that also will be, the arm twisting is more possible in the PSU bank case. Is that one reason why banking stocks did badly?
Actually, I don't think so. I think really the reaction to the budget and particularly to banking stocks was, in my view, for a couple of reasons. One was the fact that there were some expectations that there will be some SOPs for deposits on the taxation front. And that did not come through. So I think maybe it's a reaction to that. The second is also really what we are seeing in earnings coming through the banks over the past few days. So there has been moderation in credit growth. There has been moderation in margins that is visible in banks. So I think that's where some of the tepidness in the banking sector stock performance is visible, but not really because of, in my view, of these budget announcements.
Okay, you know, actually, Ashish, if you see the Credit Axis Grameen and some of the SFB, bad loan performance, why even the mighty Bajaj Finance, you can see the pressure on loan quality. And at a context like this, if you're going to be arm twisted to give higher MSME credit, when they are at SMA 1, you are going to give them more credit. That seems to be one of the reasons. Would you worry now that the credit quality cycle has bottomed out and we may begin to see more pressure on credit quality?
So if you look at the announcement of higher credit for SMA 1 credit, actually that again is going to be backed by a government guarantee model, right? So this is similar to the kind of scheme that came in post-COVID. And there, actually, I think it is more beneficial for bank credit quality rather than detrimental, that you will have support of these government guarantee programs for MSME credit. So I don't really take it negatively. But your point is valid. I think we have seen a bottoming out of asset quality cycle. We have had really a dream run in the last 3 years in terms of the kind of slippages that were visible at certain pockets, whether it is small ticket personal loans, microfinance loans. There is been an increase in delinquency, and that's been what's been visible in the numbers that have been reported by some of the banks and NBFCs.
Okay, I'm being warned I'm out of time. So very quick answer. Do you see deposit costs falling at all, or is that going to be the big bugbear for banks?
I think banks have had a clear message that they have to grow deposits to grow loans. So I think it's unlikely that in this environment deposit cost is going to come down. So
deposit cost is going to come down or go up? They will have to...
Yes, so so it's unlikely it will come down. They
unlikely.
will need to come. Yes.
Okay, sorry, I missed that. Yeah, unlikely to come down, in which case margins can be under pressure for the banking system, right?
Yes.
Okay, unfortunately out of time. I would have gone on this. Thank you very much, Ashish Gupta, for joining us on a mix of macros and markets and, of course, the banking system itself. Wrap up on Bazaar on that note. Chart Past is coming up.
This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIs gives details of all the interest income that you've earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry.
ITC surges over 3%, now up around 1.5% to a record high. The government leaves tobacco taxes unchanged in the union budget. Brokerage firms Jefferies and Macquarie bullish on the stock.
Bajaj Finance dips nearly 2% after its net interest margin declines and asset quality deteriorates in the first quarter.
United Spirits climbs more than 5% after delivering a strong set of numbers. Premiumization, cost control and contained input costs boost margins.
ICICI Pru zooms more than 5.5% as net profit rises 9% on a year-on-year basis. The retail APE also comes in ahead of estimates.
Borosil Renewables up for the second day running. Solar glass producer company zooms after the government's announcement of 10% basic customs duty on imports of solar glass.
Hello and welcome to Chartbusters. I'm National D'Souza. Joining me as always is Mangalam Malu. As we speak, the Nifty is down close to around 50 points yesterday. The bulls took it in its stride that long-term as well as short-term capital gains on equities were tweaked. Today as well, it's par for the course that the markets are holding with a bit of a cut. The good news though is that the broader markets have bounced back and the breadth of the market is firmly in favor of a number of stocks advancing and the mid-cap and the small-cap indices, all of them trading well in the green. Well, Mangalam, someone had to tell you that, the election outcome would not be as per plan. That is, what exit polls had indicated a complete majority for the BJP. And they would have told you that, in fact, you're going to see a tweak in the equity taxation. And you'll say that the market still is near record highs. You would have said you're bluffing. But that's the way it's panned out.
That's the way it's panned out. That's the cult of the equity market. And that's the resilience that we've seen with the kind of flows that have been coming in from domestic investors in our market itself. And that's kept, the story higher despite what one would perceive as negatives for the market from a market standpoint itself. Though a lot of stocks are spiking as we speak. LIC, for instance, up around 4%. We are seeing some traction in, names like Anantraj, which is up around 3.5%. Liberty Shoes is another one. Footwear industries have been seeing a bit of an uptick over the last couple of trading sessions. BSE itself is up about 6%. And Ethos, that's the one that should come up for you, up around 10%. Long-term capital gains tax, short-term capital gain tax on all sorts of investments. But if you're buying a Rolex, the returns on the Rolex over the last 4 or 5 years have been actually higher than the markets without any tax if you're reselling that product itself. So we'll keep an eye out on Ethos as well. That stock up nearly 10%. And another one that actually stands out is Anthony Waste Handling. It's up nearly 35% in this week itself. The first 3 trading sessions of this week. Remember, Anthony Waste Handling, we had the management joining us on the show last week. They spoke about 20-25% revenue CAGR going forward. At the same time, the kind of order book that they have, over 8,300 crores. So all of that doing well for Anthony Waste Handling. Take a shot. In fact, we have with us Sony Patnaik of JM Financial Services joining in with a quick technical check on the market. Sony, seems like mid-caps continuing to do well even as the large caps see some bit of consolidation.
Hi, good morning, Mangalam, Nigel. Thank you for having me on the show. Yes, definitely. I think mid-caps and small caps are certainly performing or holding the rather broader markets as we speak. Nifty also is holding on to its support on a closing basis, 24,400, 24,350. That range is quite critical. It is holding that support on closing basis. So as long as it's defending that, you can see a consolidation in Nifty as well. On the higher side, 24,600, 650 can act as a resistance. So it's mostly like to consolidate in this range for the next 2 to 3 days when the rollovers take over Nifty. I think Bank Nifty is a bit of a worry over here because Bank Nifty has closed below 52,000 yesterday. It broke that crucial support and Bank Nifty is not able to take out the resistance above 52,000 on today's weekly expiry. So anyway, Bank Nifty may continue to drag the broader market or the indices lower. If it's breaking 51,000, you can even see levels of 50,000 in Bank Nifty. perhaps it can happen for the other series. To negate this view, Bank Nifty has to take out and close above 52,000 today and tomorrow. Then only, the view can get negated and it can hold on to its support as of now. But for now, I think it's better to stick to stock-specific strategies with good breakouts and good volume option. When it comes to indices, it's better just to hedge the positions and stay light.
Okay, all right. Thanks for that, Sony. What about individual stocks? What are you looking at?
The first would be in IGL, which is seeing a good range breakout today with good long built-up positions and also good rollovers. The July to August series on a longer side. So in August series, one can buy IGL futures keeping a stop loss of 540 and a target of 562, 565 can be seen. The second stock pick is from the pharma space, PEL, which is also looking for a good range breakout. It's consolidating right now, but above 950, you can see that breakout coming in PEL. So one can buy at current levels, keep a stop loss of 920 and a target of 980. Above that, 1,000 targets can be seen for August series.
All right, take that point. Do you have a view on any of these cash stocks which are doing extremely well? Case in point, something like a BSE. We are seeing some traction in LIC as well. Anthony Waste Handling, as we spoke about earlier. Are you looking at any of them?
Definitely, Mangalam. I have been noticing LIC, which is looking quite strong even as we speak. And, the stock has given a fresh breakout. And above 1100, it has crossed these levels. So anywhere towards 1160, 1180, it can test. If somebody has already bought it at lower levels, it's wise to just trail the stop loss to 1060, which is its very crucial support. Hold for higher targets of 1180. Even if it's able to sustain above 1180, these targets can get extended to 1230. So on charts, it has given a very fresh breakout and looks quite strong to hold.
All right. Thank you, Sony, for joining in. With that, we'll slip into a short break. Come back on the other side. We'll have the management of Indian Overseas Bank. Ajay Kumar Srivastava, who's the Managing Director and CEO, joins in to discuss the quarter gone by.
At the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. And what a great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour, live on YouTube at CNBC TV.
Welcome back. You're watching us here on Chartbusters. One of the stocks which is busting charts this morning has been United Spirits. It's a big mover. In fact, it's a fresh record high that we're seeing on the stock, up around 5%, upwards of that 1400 mark on the stock price as well. And that's largely because of a strong operational performance coming in. Premiumization, cost control, and at the same time, better realizations for them has actually aided their performance. So revenues coming at 2,350 crores against CNBCTV18 poll of 2,330 crores as well, largely in line. But it was the EBITDA which was higher by almost 60 crores as compared to the poll. EBITDA came in at around 458 crores. The street was working with a number of around 400 crores. And we have the margins which are at a multi-quarter high at 19.5%. This compares with 17.3%. These are standalone margins. Remember, the first quarter margins on a consolidated basis are reportedly a lot higher because of the IPL business as well. So core margins at 19.5% are much higher than what we've seen in at least the last 12 or 13 quarters. Profit after tax, again, closer to 300 crores versus street expectations of 238 crores. What did well for them? The prestige and above business actually saw a revenue growth of nearly 11% versus street expectations of 8 to 9%. And remember, this was a quarter which was marked by a fair amount of election-related disruption as well. And in that, the volumes grew by about 5.1%. Popular, a business which they decided to, degrow or curtail, has actually seen a decline of about 2.4% in value and about 4.6% in volumes, largely expected. And they've also gone ahead and made 2 acquisitions. And that's an interesting one because over the last couple of years, they've gone ahead and bought a lot of these artisanal brands. And this one, again, is an investment, a 15% stake in V9 Beverages. V9 Beverages, Nigel, makes distilled non-alcoholic beverages under this brand called Sober. And the other company that they've bought is 25% stake in this company called Coffeen, which they've put 5 crore rupees. What is it that they make? Specialty cold brew coffee liqueur. Both of them do revenues of about 50 lakh rupees as of last year. But then again, with United Spirits distribution and their might ahead, maybe they can scale it. But interesting foray there.
Oh, that's right, Mangalam. Budget, no budget, good times, not good times.
Everyone's going for a bit of
a large one, I think.
Whether you go in for a large one, you go in for a small one, you got to protect yourself, and that's exactly where the next stock on our radar comes in from. ICICI Prudential Life. Also, quarterly results coming in. The stock among the top F&O gainers. Yash joins in with the fine print. Yash, what's ensuring one's life?
Well, for ICICI Prudential Life Insurance in the first quarter, there were some hits, some misses, but the market clearly acknowledging how the hits were much stronger than those few misses which came in the first quarter fine print. If I just have to look at, what CNBC poll had suggested, the new business premium which the company collected had come in line. Total APE was a miss and VNB was a miss, but the market, acknowledged the fact that retail APE, which is more margin accretive, was a strong beat when it came to CNBC TV18 poll, and the margins importantly came in line. If you have to look at the year-on-year numbers, the new business premium grew at a healthy pace of 24%. Total annualized premium equivalent or APE grew at 34%. Retail APE, the one which came at a strong beat, grew at 57% in the first quarter. VNB grew at 8%. And finally, the margins, they grew. They were at 24.04% versus 30%. Now, it's been an industry where margins have been taking a strong beating downwards because of the strong ULIP sales which have come about because of the buoyancy in the capital markets. But ICICI Prudential Life could maintain their margins to what the street was anticipating, and the street is liking that fact. The stock hasn't done much as compared to some of its peers in the sector. It's up 13% in the last 1 year, 12% in the last 3 months. It's just about 52-week high at 674, marching towards that point. Trades at about 1.9 times price to embedded value, not the most expensive one in the particular life insurance sector, and that is giving some valuation comfort as well.
Okay, thanks a lot for that, Yash. So ICICI Prudential and United Spirits, both of them doing pretty well in today's trading session. An hour or so ago, all the real estate stocks are doing well, barring DLF. And now that one as well has recovered from the low point of the day. If I'm not mistaken, it was down 1.5%. Now it's up 1.5%. So in the last 30 minutes or so, DLF, after starting off in the red, that's pulled back considerably. On the flip side, take a look at India Cements. That stock has suddenly moved to the low point of the day. So, there's been that excitement that maybe there could be a battle between two large names for this particular asset, or maybe Ultratech Cement goes the entire hog and pulls up, and their open offer. But for the time being, that stock is under some pressure. And V-Mart as well, the other big mover in this month, well, that's come in for some profit taking, moving to the low point of the day. Well, time to slip into a short break. On the other side, we'll try to get chatting with the management of Indian Overseas Bank. Stay with us.
Nights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies. I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2004.
Welcome back. Well, as promised, let's get chatting with the management of Indian Overseas Bank. We have with us Mr. Ajay Kumar Srivastava, who's the MD and CEO of the company. Hi, Mr. Srivastava. Good morning, and thanks a lot for joining in. Well, I want to focus first on the deposits. You know, there appears to be a bit of a slowdown out there in the system on the whole. And in fact, deposits in the system are declining. What kind of deposit growth are you looking at?
Yeah, the entire industry is grappling with deposit growth, and the same is true for IOB also. We are looking at around 10 to 11% of deposit growth in this financial year. And if you look at the Q1 figure, we have grown by around 4% in Q1. And yes, please.
Yeah, so 10 to 11% deposit growth in this year when, the deposit growth in the entire system is declining. I just wanted a couple of thoughts. One is that what is your cost of deposits likely to be for you to be able to grow deposits by about 10 to 11%? How much is that likely to increase by? And if that were to increase, what happens to your NIMs?
Yeah, cost of deposit as of today 4.95 for June quarter. We intend to keep it around 5, maybe plus 5 also, around 1 or 2 bips above 5, because that is the situation in which we are in. Having said that, the deposit growth which we are targeting of 10 to 11%, we have a plan already in place. A special retail term deposit of 444 days we started almost 20 months back. We envisaged and we imagined that there is going to be a scarcity of deposit growth. And accordingly, we formulated plans and started implementing it almost 20 months back. And in that 444 days bucket, which we started 20 months back, we have already garnered around 45,000 crores over last 18 months. And in the month of February this year, we increased that rate of interest to 7.30, which happens to be the best in the system. And for 1 year in our recently concluded ALCO, we made it 7.10. So that part is taken care of, that is retail term deposit. And for CASA, if you see, year on year, we have grown by almost 10%. And in Q1 also, we have been able to maintain the amount. Amount-wise, it can be termed as flat, but we have not gone down as compared to the industry. So plans are in place, and for CASA, last year, onboarding of customers was the priority. We onboarded amount around 2.5 million, around 25 lakh.
We get that. We get that you are putting plans in place to increase your deposit, but the question is what happens to your margins with increased cost of deposits? 4.95% you said can go upwards to 5%. You're giving interest worth nearly 7% as of February when you restructured that. So what happens to your NIMs? Because in this quarter itself, it saw a big decline both year on year and quarter on quarter. What is the range that one should work with?
Yeah, the decline has been because of one special entry in Q4 of last year. Because of that, the decline is visible. But having said that, the cost of deposit will be compensated by the pricing which we are going to give to our borrowers for further lending. And the range of sub 8 or around 7% lending, that has gone by. We are very, very particular that what pricing we are going to do as far as lending is concerned. So whatever additional cost we are going to incur by increasing deposit rate, we are going to compensate by interest income and other non-interest income also. And accordingly, we are looking at to maintain NIM at around 3.10 for this year.
All right, 3.10. Got that, Mr. Srivastava. A couple of quick questions then. You're saying the deposit will grow by 10 to 11%, but in the first quarter, it's only 4%. You're confident that you can grow at 12%, right? From year on, because that's the asking rate.
Exactly. Anywhere between 10 to 11, yes.
Got it. And you also said that the cost of deposit will go up, but you'll offset that by getting your loans priced at a better rate. So that brings me... What is it?
Increase in CASA, low cost.
Increase in CASA, correct. Now, if your yields that you're offering to your customers go up, what kind of loan growth are you looking at? Don't you think it will be a bit of a dampener as well?
There is huge demand. That is what I can say. Credit demand is there in all sectors, right from retail or MSME or even corporate sector also, demand is there. And there is not enough money in the market. So borrowers are also tuned to this fact that a little bit of higher pricing they have to bear with. That is one part. And accordingly, the credit growth also we are looking at around 10 to 11 and 12% only. This year, the plan of the bank is, of the management is that we will try to grow deposit more than credit growth. That is the plan for this year.
And what's the loan growth target for this year?
Around 12%.
12%. All right. Let's talk about your asset quality then. Could you tell us what kind of recoveries are you factoring in the IBC NCLT cases in FY25?
Yes, recovery, I will take both slippages also. First, I will take 10 seconds about conveying about the slippages. So if you look at Q1 figures, our slippage ratio is only 0.13. We have slipped only 277 crores, and last over 15 to 18 months, the slippage in corporate sector has been nil. Not even a single corporate account has slipped. This shows about the type of credit underwriting we are doing and the level of monitoring efficiency that has come into the system. Last year, for the full year, the slippage was only 1,487. Slippage ratio was 0.87 for last year. This year it is 0.13. That is one part of asset quality. The second part comes of recovery. This quarter we have recovered 582 crores. Going forward, the exact, I will say, amount-wise, that an NCLT and non-NCLT, how much we are going to do, it's difficult at this moment. But having said that, we are targeting 5,500 crores worth of recovery, and one of the great sources of recovery is going to be ARC sale. We are very bullish on that. In the month of April itself, in this financial year, we started ARC sale. We 13,000 crores of assets we put on block. And due diligence by many ARCs is going to happen. So we are pretty confident that overall, by the year end, we will be able to recover more than 5,500 crores of bad assets recovery.
All right, that's a tall target, 5,500 crores. And finally, before we let you go, if you could give us a sense of what your credit costs for this year would be, along with GNPA and net non-performing assets?
Credit cost for Q1 was 0.29. We will try to keep it around 0.75 to 0.80, less than 1, of course. And GNPA, we are at 2.90. We intend to bring down by another at least 40 bips in this financial year, maybe around 2.40 to 2.50. Net NPA, we are at 0.51. We are already, I will say that net NPA ratio is one of the best. But still, the year-end budget is around 0.25 to 0.30.
Got it. All right, Mr. Srivastava, always good speaking to you. Thanks a lot for joining in. You've given us a good outlook in terms of your numbers, and we'll hold you to them in your next quarterly update as well. Wishing you a good day and a good quarter ahead. For the time being, the stock holding with a gain of around 1.5%. Well, on that note, we'll wrap up on this edition of Chartbusters. You stay with us, though. Trading Hour comes up next.
Power plant at Peer Painti will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited.
This budget, after a few budgets, is a bit more negative, I would say, on the taxation front in particular. There was some expectation that a long-term capital gains tax might be increased, but with indexation benefit. So today what we've seen is that there isn't an indexation benefit, and plus it, I think, increases the risk. In a way, there was a stability in the capital gains regime for the last several years. Now the long-term gains tax has been raised by only 2.5%, short-terms raised to 20%, but this increases the risk in investors' mind that it could be not a a given tax regime for next many years.
Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them.
Good morning. It's the day after. You're watching Trading Hour. I'm Reema Tendulkar, and with me is Surbhi Upadhyay, and it just feels business as usual. You know, large caps are consolidating, the activity, the rally in the mid caps continues, even though there are so many voices who are pointing out that the mid caps are expensive. You know, it's trading at a 50% premium to large cap. But look at the mid cap index, look at the small cap index. The advanced decline ratio has 4 stocks gaining for 1 stock declining.
Oh, absolutely, Reema. I mean, the market's really moved on. I think it started moving on yesterday itself. The only thing is that the fall in the bank stocks is a bit telling. Once again, even this was the same picture yesterday. Remember, the bank Nifty was one of the weakest spots of the market, and that's continuing. So there's follow-on selling in banks. And that's a little bit of a spot of a bother. You can't take your eyes off that. So even today, so Bajaj Finance has a reason. It's reacting to numbers, and those margins are lower than expectations, etc. But look at the banks. You know, Axis, ICICI Bank at this point in time, State Bank of India, Indus and HDFC Bank. There's across the board selling coming in. So from the bulls' perspective, this is going to be a bit of an issue.
Axis Bank, by the way, reports numbers
today as well. Yeah, exactly. So let's see. I mean, if the numbers can, you know, sort of part the clouds to an extent. And
because so far it's been a mixed bag. HDFC Bank was fine, pretty okay. Kotak disappointed the street. So Axis Bank will be the third large cap private sector bank to report numbers.
Absolutely. So we'll watch out for that. The other trend that stands out today is that once again, just like what happened, you remember on counting day, that on that day, FMCG rallied, but there was no follow through. So once again, if you look at stocks this morning, Lever is down. Despite pretty decent numbers, you're seeing that play out on some of the other names like Nestle, Britannia. A lot of these stocks are also on the lower side. So FMCG is not seeing the follow through. So what is rising then? Well, you've got ONGC in leadership position, Coal India, BPCL. There's, of course, Reliance that's really helping. ITC is still celebrating the fact that there's no further increase in tax on cigarettes. But I think, Reema, the PSU side of the market, yesterday they were down and out. Today they're saying, hey, we're back.
We're back. The Nifty CPSE index should come up for you on your screen, and that's up nearly 1.5%. But let's get down to business then. Shibani Sarkar Kurian from Kotak Mahindra AMC joins us on the show now. Shibani, it's absolutely outstanding, right? You know, the way the markets recovered after election day. Yesterday, perhaps there was a little bit of a wobble, maybe for 1 hour or so, when the markets fell 500 points in the Nifty. But after that, it recovered and it's holding. And we keep going back to that example in 2018 when there was the first increase in LTCG. Markets did correct, not on the day, but with a lag, there was a correction seen in the markets. Do you think, you know, how would you read the, you know, the near term for the markets now post the budget?
Hi and good morning. So yes, you know, if you look at the budget, there are lots of positives that the market is taking away. I think the biggest positive that has come through from our perspective is that the fiscal consolidation priority continues to be maintained. And if you look at a consolidated fiscal deficit, which is both at the center as well as at the state, the number seems to be coming down. And going into FY26 with a 4.5% central fiscal deficit expected, that number is likely to come down further. So that bodes well from both a borrowing perspective as well as with hopes of a rating upgrade, because a lot of the external rating agencies look at debt to GDP ratios as well as consolidated fiscal deficit. So I think that's one big positive from a budget, which the market is possibly taking on board. The second factor is that the budget does a balancing act between both investments as well as spurring some amount of mass consumption with some of the tax changes that have been brought about, as well as the fact that if you look at on an overall basis, with both on budget as well as the IEBR expenses in terms of capital expenditure, the growth seems to be fairly strong over the revised numbers for FY24. So I think that's another key factor that the market is looking at. Of course, you know, from a near-term perspective, I think the tax changes, especially by long-term capital gains as short-term capital gains as well as STT, that's a bit of a dampener for the market. However, remember, there have been tax changes across all other asset classes as well. And if one has to look at a silver lining, the tenor for long-term capital gains tax has not been changed, and that's still 1 year. From a market perspective, in the short term, I think market just goes back to focusing on earnings delivery. We are in the middle of the first quarter earnings season, and so far numbers have been somewhat muted if you look at the overall aspect, especially because of OMCs as well as metals. But X of that, numbers have been largely in line with estimates. So I think now it's back to business as usual, looking at earnings and valuations now that the policy direction has been set by the budget.
All right, fair enough. So those are opening thoughts and your take on the budget, Shibani. Let me just draw your attention to this constant selling in banks, right? Now, we're just trying to figure out whether there's anything additional in the budget yesterday that's compounding the selling, or whether it's banks reeling under their own known issues, right? We know deposit mobilization has been difficult. And I don't know if this 12.5% LTCG, whether that's going to make people, leave their money in the bank deposit and not put it in the market. That seems highly unlikely, right? But just your sense, because the selling is quite excessive, and this result season hasn't exactly, thrown up too many positive or sort of bright points with respect to banks.
So absolutely, Sylvie. I think the biggest factor to monitor where banks are concerned is the pace of deposit mobilization. Banks, as you know, over the last few quarters have seen pressure on net interest margins, primarily because cost of deposits have been rising. And there's also been repricing of the past deposits, which has led to this pressure that we have seen in terms of margins. Deposit accretion does continue to lag credit growth. And I think that at the margin, we have to take that into account when we are looking at the overall earnings as well as return ratios for the banking system. Now, if you look at last few quarters, there has been some uptick in terms of deposit mobilization, but it is still not enough. And therefore, the expectation is that the credit deposit ratios for banks would possibly moderate, which will have a bearing on margins. However, on the positive side, when you look at the cost of deposits seem to be largely stabilizing. Banks are now looking at better productivity in terms of their own branch network to raise liabilities and not just looking at the cost front. So from that perspective, I think margins should start to stabilize over the next few quarters. If you look at the large private banks are still holding up in terms of both their ROA, ROE profile. Margins seem to be, again, as I said, possibly bottoming out, and valuations are in your favor. So in the entire BFSI pack, we think that some of the larger private banks seem to be well placed, specifically with respect to their valuation as well as return ratios, and risk reward is in your favor at this point in time. But we'll have to wait and see for the next 1 or 2 quarters in terms of the margin trajectory for some of the re-rating to possibly start. And of course, the ownership level across most of the large private banks is high, specifically where some of the domestics are concerned, and even the FII ownership, while it has come down, still remains high. And that could be another reason, which is why, the sector has seen the kind of pressure that it continues to see.
Any other changes that you would recommend in your portfolio? You have to keep rebalancing your portfolio. Some things come in, some things go out. So take us through the changes for the next 6 months. Which is the sector which, according to you, might lead? You spoke about financials in details, but outside of that?
Yes, so, there are 2 sectors that we are incrementally evaluating, where, again, we believe that risk reward is in your favor. One, you alluded to the consumption space. Of course, the big bang expectations that, we went in terms of the budget, providing a lot of support to the consumption sector. Maybe some of that has not played out. But if you look at the fine print, there is adequate support which is being given to the middle class and to the rural segments in order to spur consumption. That, along with the fact that monsoons have been fairly normal as of now, and at the margin we do expect that agri, especially the kharif output, should be a good one, along with input cost pressures coming down, which would mean that the rural wages, especially on the real rural wage perspective should start to improve. And therefore, if you look at consumption, especially with respect to valuations and their history, that sector looks to be fairly well placed. So that's one segment that we, incrementally are positive on. Banks we already spoke about. And the third aspect that, where risk reward seems to be in your favor, especially where valuations are concerned, is possibly the large cap tech names. Again, the commentary from most of the companies that have reported numbers seems to suggest that a lot of the pressure that you are seeing, especially on terms of discretionary demand spends on the BFSI space in particular seems to be bottoming out. North America is seeing some revival, which is also what the commentary seems to suggest. And therefore, that's the other sector that we are evaluating.
So, IT, consumption, and overall on banks, you're not trimming positions, despite all the concerns you laid out, right, Shibani? What's the overall stance on banks?
So, banks, Surbhi, we are positive, specifically on the larger private banks, where we think that, valuations are in your favor. So, the large cap private banks is where we are positive on.
Okay. Thank you. Great conversation, Shibani. We look forward to the next one. Get into a break on that note. But, getting incrementally bullish in technology gives us a cue to invite the management of Zensar Tech, which reported their numbers recently. Good top-line growth of more than 4%. We'll discuss the way forward with Manish Tandon on the other side.
The implementation for expediting our journey towards the goal of Vikasit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure.
Welcome back. Let's move the conversation now to Zensar Tech. They reported their numbers on Monday post-market hours, but yesterday, with all the budget-related announcements, we didn't get a chance to chat with the management. A quick recap of the numbers: strong top-line growth. The company's reported an over 4% revenue growth, 4.3% constant currency quarter-on-quarter. Margins, though, have declined because one of their clients went bankrupt, and the company has taken a provision of 110 basis points on the margins because of the bankruptcy of the client, and therefore their profits too have come down by nearly 9% quarter-on-quarter. Manish Tandon, Managing Director and CEO at Zensar Tech, joins us on the show. Manish, morning. This is Reema here. First, on the top line growth, 4.3%. this bankruptcy of the client, you've explained, impacted your margins, but did it also impact your top line? And what can you guide on revenues going forward? Because in the conference call, you sounded a bit cautious.
Yeah, so first of all, on the bankruptcy of the client, this has not impacted our top line because the client was relatively small, about $1 million in per quarter. And we, as per Chapter 11 laws, any work that we do post the announcement of bankruptcy is covered. The revenues from that are covered. And also we are one of the critical vendors and the chair of the creditors committee. So there is a chance that we might be able to collect more than what, at least some amount that out of the total outstanding.
So what is the outstanding?
1.7 million.
1.7. Okay. Go ahead.
About 1.7 million or so, 1.1% of revenues is the outstanding. And on future, I think, again, we don't give future guidance, but there are, as usual, there are some headwinds and there are some tailwinds. Headwinds are that one of our TMT clients has announced a furlough in July, which is something new. So that was not anticipated. Also, the second thing that I'm seeing is because of this, I'm anticipating that because of this CrowdStrike thing that has happened last week, we might see a diversion of funds away from existing large projects to a little bit on the beefing up on the security and the robustness of the IT infrastructure. Now, this has happened in the past, and I am anticipating that we might see something there. So those are the headwinds. The tailwinds continue to be that our businesses seem to be doing okay. This was the second quarter in a row where all our verticals actually grew sequentially. And that is a positive sign. So as I said, I mean, you have to balance the headwinds and tailwinds and see where you land up.
A fair point, Mr. Tandon. It's been a challenging start, and from what you say, all the challenges aren't over yet. So all things put together, now you have this other client that's going into furlough from July. I think you also have a wage hike coming in that will be effective July. So should investors be prepared for more sluggishness on the top line? Also the margins, we just put out a graph that Rima had shared with us. Overall margins have been on a declining trajectory from 18%, I mean sub 16%. So will we see more of this before things get better? How, the outlook, given what you're saying, seems like it's going to be more sluggishness in Q2, Q3 perhaps.
So the margin chart, if you look it up and if you adjust the margin for a one-time bankruptcy, then our adjusted EBITDA margins this quarter is 16.3%, which is in line, actually 15 also is in line with the mid-teens guidance that I have been giving in the past. Last year, our margins were a bit higher because we wanted to invest in growth. And as I said, we've tried to make sure that we have balanced growth between revenue growth and margin growth. So that is where, as stated previously to the investors, margins will be in the mid-teens range because we are going to invest for growth. And it's good to see that some of those investments are bearing fruit. Sequentially, Q4 to Q1, 4.3%.
But sir, are you confident of growth? I take your point that you've sacrificed margins a bit because, I mean, that growth number, the top line number is no doubt looking very good. But are you confident of top line growth given all the headwinds? The furlough, the other client which has gone into bankruptcy, this CrowdStrike business, I mean, this is a fresh issue that you described. Could Q2 actually be flat?
I'm cautiously optimistic. Let me put it that way. But again, the game isn't over till the final whistle is blown. So we will see where we'll end up. But I'm cautiously optimistic that we will continue to have revenue growth.
Have you had any initial conversation with clients about moving some work away from the large projects to beef up the internal security at enterprises post the CrowdStrike outage that we had? Because you alluded to it as a potential headwind. So what are initial conversations like? Why are you so fearful this might happen?
To be frank with you, this happened just last weekend. In fact,
Yes.
even my flight got cancelled. So it's too early to have those client conversations because everyone is busy with the disaster recovery thing. In fact, Zensar teams have received a lot of commendation from clients because of our performance in helping them recover from the situation. And there's a particular city out there where even the police department has given us a glowing reference for the work that our team did last in helping them recover this thing. I am just basing this on what I have seen in the past. As you know, I've been in the industry for 30 plus years now. So what I have seen in the past, I'm basing it based on that rather than on client conversations.
Okay, and what happened in the past? If history has to rhyme?
What happened is exactly what I said, that when a major security incident or a DR incident happened, you see a shift away from capital projects to more of beefing up of the security and DR infrastructure.
Big impact? Are we talking about large sums being pulled out of projects, existing projects?
Large is a relative number. So we have to, for a large company, it will be large sum. For a small company, it will be a smaller sum.
But across the board impact, that's an important one and something that, we'll take it forward even with our other conversations with a lot of the IT companies. Let's see how this plays out. Thank you for joining us, Mr. Tandon. Good conversation, and we wish you good luck for the rest of the year. That's a conversation from Zensar. Frank, they've had an issue with one client in this quarter, maybe some more headwinds ahead as well. Stock, however, is holding up. It's done well in the last 6 months, still holding up today. Let's take a break on that note. We'll come back on the other side. And we will be in conversation with Mitesh Thakkar. Let's see what trades you can work with this morning.
This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax.
Welcome back. Well, let's straight away head across to Mitesh to figure out what trades you can perhaps look at. Mitesh, good to be speaking with you. So it's the day after. What do you make of things? Banks are still feeling a lot of pressure, but the broader markets bounce back. So what trades now?
So, Surabhi, you have raised a very important point. The bank Nifty has, started trading below 51,450, 500 levels. That's a negative. And, there is mild support at 51,000, but I think it can go to about 50,500. So it is the banking pack, which is putting pressure on the Nifty. And in fact, today morning, I suggested don't trade the Nifty because the bank Nifty could, turn out to be the weaker spot and which also enjoys a significant weightage in the Nifty. So I think that's playing out. And therefore, clearly avoid the indices, or, you may want to take some selling some out of the money call options in the banking names, or even buying put options. I think both of them is okay. And disclaimer that we have some put options positions for the August expiry in the bank Nifty. So we have a negative view. On the stock side,
more downside.
Yeah.
No, go ahead. Go ahead.
So I said on the downside, I think Sun Pharma is something, which is showing, on the stock side, Sun Pharma is, which is showing some kind of positive traction. So buy here with a stop at 1597. Look for a target of 1650, 1660 to begin with. We may eventually look at higher levels. And the other stock which I have is IndusInd Bank, which is a sell with a stop at 1414 is the stop loss and a target of around 1365, 1361.
Okay. Thank you very much for that. The fall in banks is concerning, and Mitesh is pointing out there is more downside in store. The Nifty Bank could go down to levels of 50,500. Right now, a Kotak Mahindra Bank, State Bank of India, these stocks are all at the day's low. So the selling continues. Even an HDFC Bank has extended its fall. Thank you for joining in, Mitesh. We need to get into a short break. We'll come back with more.
Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts.
Welcome back. Well, it's the tax and capital market discussion full throttle, because not in the recent past have we had a budget that is so heavy on taxation that directly impacts the capital market. We've got changes in STT, we've got changes in the long-term capital gains tax regime, as well as, of course, what's happened with buyback. So let's discuss all of this one by one, and we have a full house for that. We have Mr. Dheeraj Relly, MD and CEO at HDFC Securities, who's, of course, representing the broker fraternity. We have Deepak Shenoy, founder of Capital Mind, who's the voice of the investor. And we have Girish Vanwari, founder of Transaction Square, who's the tax expert, of course, on the panel. Gentlemen, thank you very much for joining in. Great to have you on. I want to start with STT, because yesterday all the limelight was being hogged by, I think, buybacks and LTCG. So on STT, Mr. Relly, if you could open the floor, because I think going into this budget, the whole hype and hoopla was around curbing speculation. The STT hike has come in on futures and options. It's a big hike, I think as much as 60%. What's the impact?
So first of all, I want to clarify everyone that this hike will be applicable from October 1st and not with immediate effect. So that's something, there was a confusion yesterday, but now we have a clarity on the same. You're right that this is a significant increase in the transaction cost for the traders and investors. So to that extent, it will have its own impact on the volume. We did some maths to check how much will be the impact if on sale of securities options. You will have impact of almost 50%. And if we include sale and purchase both, because STT is applicable only on the sell side and not on a buy side, the impact will be almost 21%. So 31% impact on the sell side of the transaction, 21% impact on the sale and purchase both leg of the transactions. This is in the case of sale of options in securities. If we talk about the futures, I think the impact is slightly higher. Impact is 50% on sell side of the transaction. And here the STT is charged on the contract value. And in case of options, it is charged on the premium. If we include sale and purchase both transactions, the impact will be 39%.
Okay, so could you just, for our benefit, repeat the numbers, I think, and let's start with options, because that's where the whole discussion is. On options, you're saying that it's 31% and 21%. Is that right?
Yeah. So let's look at option premium of premium value of 1 crore. In the 1 crore, the transaction charges will be 4950. That will remain the same. We are assuming that the transaction charges will remain same. In fact, you must notice that this is also up for a revision effective October 1st. This will revise downwards, but we don't have any visibility as of now. That's where, for the purpose of calculation, we are taking 4950 per crore as the same charges for the exchange charges. And we are keeping all other charges same, not taking any charges impact of the brokerage. So we are just calculating the impact of the STT only. So STT on 1 crore premium value earlier in the old taxation was 6,250. Now it will move to 10,000. So this would translate into an impact of 31%. And if we include both sides of the transaction, sell and buy, this will be an impact of 21% because the charges will remain on the buy side of the transaction, which is 6163 per crore.
So Girish, you have a pulse of the market. You speak to all the clients who trade with you all and do brokerage. Do you think it's a sizable increase we're talking about? Will it curb speculation on F&O, to your mind?
And this is not the only thing. There are three things to be considered. First was the size of the F&O, which got increased, SEBI's proposal to make from 5 to 25. Second was the margin trading restrictions of 1,000 stocks, which could not be pledged. And third is this. You add the three up, people are nervous. And today I was just speaking to people. Today, if you sell, square off your positions, if you sell your MTF positions, effectively you're paying a higher capital gains tax too of 20%. So really, to sell or not sell also is a big question, because should you book a gain, which is at 20%, because many of these scripts have also gone up. So it's going to impact the market.
So, Deepak, come in on this. I think the numbers Mr. Relly has given us. The question is, does it curb speculation? It's a big hike. He's put out the numbers, 21% to 31% on options. The tax itself has gone up by 60%. Does it curb speculation?
No, I think the problem with speculation is not the people who pay 1 crore in premium. They are relatively small in numbers. So take a person who pays 1 lakh rupees in premium, which is probably still the higher end of the speculatory. Speculation is not bad. It is this unbridled gambling that is bad. And a lot of people look at speculation as gambling, but it's not. In the stock market, there is difference between a casino and the stock market is the stock market. The house does not take all the winnings. The winnings are, you can be a winner regardless. In a casino, if you win consistently, they'll throw you out. In the market, you can win consistently and continue to exist and be there. The problem with speculation is usually the small person who does not have too much money leverages themselves by taking a loan and then leverages themselves in the market as well. So on 1 lakh, the difference is maybe 30 rupees. Now, for a lot of people, this 30 rupees is not meaningfully different, or maybe, I don't know if it's 30 or 300. I think it's 30 rupees. But the actual numbers is not so meaningful that people will get deterred by STT or by a larger capital gains tax, because if they were making profits, then they would be worry. But then the problem, as stated, is that the speculation is bad only because a lot of people lose money. If they're losing money, they're not paying taxes on that money at all. But I think the STT itself is not meaningful. It will hurt non-speculatory activities, such as even arbitrage funds, who will see a 20 to 25 basis point decrease in their yields simply because of the higher STT on futures. But the options piece, I don't think it will curb speculation meaningfully. It's just, there's a lot of money being made in options, a lot of, transactions happening in options. The government's like, if you guys are willing to pay, I might as well charge a little bit more, and let's see where you stop playing this game.
It's the golden goose, right? Laying golden eggs right now. Dheeraj, come in. Your view. In absolute numbers, it doesn't appear to be significant, though in percentage terms, it does look like a very significant increase. Will it curb speculation?
So Deepak is absolutely right. Even if we do the math on a 1 lakh option premium, the current cost is government charges are 90 rupees and it will move to 27. So it's almost an increase of 30 rupees only, 37 rupees what Deepak has mentioned. See, you have to take this into account that these transactions are done on a wafer thin margin only. So to that extent, it will have its own impact. It's not just a sentiment impact, it's also the real math, real gain or loss impact for the investors. And if you look at the overall F&O volume, 50% of the volume is done by the prop traders as well as arbitragers. So particularly they operate at a wafer thin margins. So to that extent, when their impact cost will increase, the transaction cost will increase, there we will see the impact of the volume. And I also echo the sentiments expressed by Girish. It's not just the impact of the transaction cost attributed to the securities transaction tax, but also the overall action taken by the regulators also. And there are more action on the anvil. we will see that there'll be more actions coming in the forms of some more radical changes in whether how many expiries per exchange can be there, or maybe a lot size can also go up. So if it's the culmination of entire impact, I think that will definitely address the speculative activities in the FNO space.
Okay, got that. So let's see. Maybe this is not the end of it. This is just from the tax perspective. Let's see what SEBI now, what prescriptions SEBI finally prescribes. Gentlemen, let's move to the next issue, which is buyback tax. That got a whole lot of debate going yesterday as well. Now, first of all, let's get clarity from Girish. Girish, the interpretation that I got was it's very simple. The arbitrage between dividends and buybacks goes away. Dividends were being taxed in the hands of the recipient at the slab rate. And now the same will happen for buybacks. Tell us if that's right. And I think the price of the share, that can be taken as a capital loss, which you set off against a capital gain. But basically, is there any arbitrage left at all?
Actually, I want to twist this. Clearly, if you look at it purely as dividends and buyback tax, which is 20% versus a dividend tax of 35%, you can say the arbitrage has gone away. But if you put a treaty into play, let's say foreign companies investing through Singapore or Mauritius or directly through Netherlands, UK, the answers may be different. Actually, they'll come under dividend taxes. In Mauritius, the dividend tax rate is 5%. In Netherlands, it's 10%. You may have a better answer to yourself. Then you twist it even further. You look at open market purchases for buyback. You look at tender offers in buyback. Tender offer in buyback, I understand the law is very simple. Now to be taxed in the hands of the respective shareholder at his rate. But look at open market purchases. If you do open market purchases, you will sell on the stock market, paying STT. You don't know when the company is gradually buying. And when you pay STT, you'll pay 12.5% depending upon long-term, short-term. And then the company will also argue no taxes. So if you were doing open market purchases, can you actually say there is no tax on buyback now? Because you'll anyway pay the lower amount of capital gains tax. And to the company, there is no buyback tax. So really, this whole section needs to think. Other queries which I'm getting today and yesterday is that what about buyback announced? At what point of time will this be applicable? The law says it's applicable effective October 1, 2024. Now, one is the announcement of buyback, board resolution for buyback, shareholder resolution for buyback, if applicable, opening of the tender offer. At what point of time do we have to look at October 1? What happens to shares tendered before October 1? It's clearly under the old law. Shares tendered after October 1, after the, it's as per the new law. Yeah. What does tendering means? Tendering means what is the point of time? It's the point of time when the company accepts the buyback.
No, fair enough. Girish, just to clarify, making it very simple for viewers who are watching, as per the new law, as per now the way things stand, when there is a buyback that's happening through the market route and I'm tendering in my shares, first of all, I have to pay STT on that trade. I'll have to pay capital gains, which is long-term or short-term. And then when the company eventually gives the income back to me, which is now going to be dividend income, then I have to pay tax at my slab rate, right? So that's 3 taxes.
No, so when you offer it for buyback, when you give it in your tender process, there is no tax because you're tendering the shares to your company. So there is no tax on that point of time. When you get the money, when the company accepts your tender and gives you the money, at that point of time, you pay dividend tax. And afterwards, because you have tendered your shares and got money and paid dividend tax, there's a capital loss in your hand, which you can set off. So at the time of offering to tender, there is no tax. When you get the money, there is tax.
Got it. And that will be at your slab rate. Deepak, this entire buyback is a critical issue for IT companies because they annually give you a buyback and most of the large cap IT companies have very high promoter holding. So give us your take on this entire buyback versus dividend.
So Rima, nobody's going to do a buyback anymore. I think that's just very clear. I would, as a promoter, absolutely not do it. The only people who benefit from buybacks now are mutual funds. And insurance companies or pension funds and so on who are not who don't pay tax, right? So if I was the promoter of a company and I had to pay, I had to participate in a buyback, I would have to pay a certain amount of money to buy back my shares. From April 1, by the way, there's no open market buybacks allowed at all. The buyback regulations have changed to only allow tender buybacks after April 2025. Right now, there's a small window till then. But then, the buyback concept was, instead of paying a dividend, I'll do a buyback, and then the cost is roughly the same. The company pays the tax of 20%, and people get it tax-free in their hands, which is actually worthwhile for a lot of promoters to be able to take money, whether it's a TCS, the Tata, and by the way, we have a holding there. But TCS gets a significant amount of its money from TCS. Tata Sons gets its money from TCS in the form of dividends and buybacks. But why will they take money, pay 39% on it, and have this large amount of money lying around as a capital loss, which may not even be a large amount of money, simply because they might have bought the shares at a much lower price. Yeah. So
on the whole,
so how do you repatriate income? If you have to do either dividends or buyback, so what will companies do?
Dividends. Why not?
Dividends. Okay.
It's a lesser problem.
So if earlier, suppose a company was doing 1,000 rupees worth of buyback, now the amount that they will give, considering all the taxation, will be lower than 1,000. Because one reason for buying IT companies was also the kind of return that they give back in the form of dividend or buyback. So will that be lower?
I think it will be 1,200, because if they did a buyback at 1,000 crores, they had to pay 200 crores as tax separately, right? So they were actually distributing 1,200 crores. 200 was going to the government. Okay. Now they have 1,200 to distribute. They will distribute the whole 1,200 as a dividend and leave it for you to pay the taxes.
Okay, all right. We have to pay the taxes. That's the bottom line. Come what may, and whichever format they might take. Gentlemen, thank you very much. We're out of time, but definitely not out of questions. These are complex issues, and I think we'll have more of these conversations to get further clarity. Thank you very much, Mr. Relly, Girish, Deepak, for joining in and demystifying some of these taxation points for our viewers. Right now, take a very quick break. We'll come back with a lot more on the other side, including several stocks that are in focus today.
Commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads. In Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Government will implement following 3 schemes for employment.
Welcome back. Banks take center stage, and today Federal Bank will be reporting numbers. Abhishek joins in with the key expectations. Abhishek.
This will be the 56th and last board meeting that Mr. Shyam Srinivasan will attend for Federal Bank's quarterly numbers. So take a look. Our poll suggests that the growth will be healthy. They have already given a business update. Net interest margin is expected to remain flat on a sequential basis at 3.2%. Now, analysts are pegging the slippages to be in the range of 450 to 550 crore. Seasonal in nature, that Q1 slippages do spike up versus Q4. However, asset quality can remain stable. Motilal Oswal expects gross NPA ratio at 2.1%, which is the same that was there in previous quarter as well. Operating profit growth is seen at close to 11% YOY and 30.2% quarter-on-quarter as per Kotak Securities. Focus will be on commentary that the management gives with respect to outlook of the bank in the near future. Our poll suggests an NII growth of 19% YOY and 4% sequentially. We are working with a profit growth of 10.8% YOY and about 4.5% sequentially. Thank you.
All right, Abhishek, thank you very much for that. And with that, move on. MSCI is slated for a review next month. Vivek is joining in with a list of the likely inclusions. Vivek.
Well, good afternoon. That's right. So the reason we are highlighting, this particular development today is the fact that sometime in the course of the last week and in the first two trading sessions that we have witnessed of this particular week would have been the cutoff date for MSCI to go ahead and consider the likely inclusions and exclusions of stocks into the MSCI August, potential review. So when is the announcement expected? The MSCI announcement is expected on 13th of August, and the actual adjustment will take place on 30th of August. So, it's expected to be, net inflow event as far as India is concerned. As per IIFL, there are almost 7 stocks that could make the cut and enter the MSCI, index this time around. First on the list, Zydus Life, expect inflows of close to $184 million. Prestige Estates, close to 160. Dixon Tech, 237. OFSS, around $150 million. Oil India, around $178 million. Vodafone Idea could make the cut this time around. Almost $275 million of inflows could be seen over there. RVNL2 could make the cut. Now, one very important development that is likely to happen this time around is the likely weight increase of HDFC Bank. Remember, HDFC Bank in its shareholding pattern indicated that there is now enough foreign headroom for MSCI to go and double up its weightage. So, IIFL estimates almost $2.7 billion of inflows could be seen over there. Now, apart from the August review, there is also a smaller event today. Indus Tower that saw a block deal happen, 1 month ago, where Vodafone, went ahead and pared its stake. On the back of that, there was increased free float, and today there will be a weight increase, in the MSCI index itself. Around $140 million of inflows expected in the last hour of trade today, which works out to around 2 times the average daily traded volume. Important development. We'll keep an eye out for, when the actual, MSCI review does come out.
Thank you very much for that. Get into a break. We'll come back with more on the markets and commodities. Stay tuned.
Incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to
Welcome back. Let's now talk commodities. We have Manisha joining in and she's focusing on copper today. Manisha.
Well, I'm looking at metals as a sector which has seen constant declines for the previous week, and this week doesn't seem to be auguring any well. I'll focus on copper, where the prices have now declined to near 4-month lows. From an all-time high of $11,000 a ton in the month of May, we seem to be near around $9,200 a ton at this point in time. Well, there are demand concerns from China. It has been weaker economic data. The first quarter GDP numbers were also on the weaker side. And then there are the third plenum meeting in China also has ended without any addressing any economic challenges there. The US also is expected to hike tariffs against Chinese goods, and that is weighing onto the prices there. And then the US home sales have seen a decline, the steepest one in last couple of years. The July factory orders from Japan also have come in on the weaker side, below 50. So everywhere that you look, the economic data has been weaker. The Chinese manufacturing and services data, now that comes in the next week, is something that the street will keep an eye on. There is some positive cues, especially in Asia when it comes to India, where after the budget, the expectation is that India could be looking at spending more on infrastructure, and that would lead to metal demand coming higher. But if you look at the LME and the China inventories, they are the highest in since May 2023, and there is a discount if you want to buy copper and various other metals right now, and that tells you about the recent trend in prices. When you look at the metal prices in last 1 week, we have seen a decline across board here. Copper has declined by 6.5% in 1 week itself. We have zinc down by 6%. Aluminum, nickel, lead also have declined anywhere between 4 to 5%. And you have tin, which has declined by 10% in the matter of last 1 week itself. So unless you get stronger data coming in from China or the rest of the consuming world, the expectation is that you could look at this pressure continuing for metals.
Thank you very much for that. And with that, it's a wrap on Trading Hour. Hope you enjoyed the show. Stay tuned. Halftime Report is up next.
additional employment of 50 lakh persons.
I'm endorsing Vice President Kamala Harris because she's ready to step up, bring our party together, go toe-to-toe with Donald Trump, and win in November.
Kamala Harris is at the top of my list. I know her well from having worked with her in the Senate, on the Judiciary Committee, sitting next to her on the floor of the Senate, knowing her and her family personally.
I think Vice President Harris's energy, her enthusiasm, the time she spent here connecting with Pennsylvanians, she's no stranger to us. She spent a lot of time here. I think people will be ready to enthusiastically support her.
Hindustan Unilever performs a tad better than expectations with inline volume growth, but the stock slipped on likely profit taking after a recent run-up. Bajaj Finance sees healthy income growth, but margins crimp and credit cost spikes, leading to a dip in the stock on concerns on asset quality rise. While the finance secretary suggests withdrawal of indexation along with a tax cut should be positive, some in industry differ. The impact is expected to be positive for some, but negative for others. Hello and welcome to Halftime Report on CNBC TV18. I'm Ekta Batra, and it's turning out to be a session where we are seeing some amount of mid-cap outperformance, which is really taking place in today's trading session. So that seems to be the key point for today, that yes, there is sentiment which is soured after the LTCG as well as the short-term capital gains tax, but the markets seem to be making their peace with it at this point in time. So the bank Nifty is underperforming. It's down around 1.2%. We have the mid caps, which are up around 0.8% with an advanced decline ratio, which is positive as well at this point. I just want to point out that, one particular sector which was really outperforming yesterday, which is the Nifty FMCG index, is seeing profit booking in today's trading session. So do watch out for that, because yes, courtesy HUL, but nonetheless, that particular index is under pressure, and the realty index, the BSE realty index, which was under pressure in yesterday's trading session, is seeing some amount of consolidation today. So that's something to note. But nonetheless, as of now, wait and watch, and I think it's back to earnings, considering that we have L&T, Axis, Federal Bank, all of these numbers to reckon with today.
It's back to earnings, and one would look at the market today right now and say that, was there even a budget yesterday? Because the way the market has seen resilience in the last couple of trading sessions, and not just that, over the last few months itself, it's remarkable. But right now at higher levels, we are facing some resistance, and that's largely because of the Nifty Bank. The Nifty Bank has been the pressure point for the market for the last many months. And now if you look at it, down almost 600 points. It's the one index which is actually below yesterday's low as well. Yesterday's low on the Nifty Bank was closer to 51,340 thereabouts. And from there itself, we've broken below that. So 51,000 is an important mark to watch out for. And like you spoke about the broader markets, not only the F&O stocks, a lot of cash stocks doing extremely well, and some of them led by volumes and earnings as well. Case in point, when we started the show, we had at the bottom of your screen numbers coming in from Go Fashion, a 16% revenue growth, improvement in their EBITDA, and there's a 9% stock price increase just on the back of those numbers itself, now settling at around 8%. So big move out there. And then some good numbers coming in from the likes of United Spirits, etc. That was up around 6% in today after yesterday's numbers too.
Just on that point, we've gone through an election. We've gone through the fact that it's been a coalition verdict. And this is from a tweet that I read randomly. And now we have LTCG and STCG, which has been raised. But who would have thought the Nifty is still at around 24,000? We can say we are resilient at this point in time. We've given stupendous returns from the whole of last year. So we need to keep that keep that in mind when we talk about the markets on a larger level.
Absolutely. We take that point completely. I mean, the kind of flows that have been coming in from retail investors, the SIP flows, etc. Month after month, we tell you, the last 3 months, they have been upwards of 20,000 crores per month as well. So all of that working for the market, putting a bit of a lid at the lower level, and let's see where that goes from here as well. But like we pointed out, it's earnings that are most important from an equity return standpoint, and over the long term, that's what matters. So let's talk about earnings itself. DCM Sriram is the first management on the show. Reported a good set of first quarter FY25 numbers after some quarters of underperformance. They witnessed strong margin expansion. The chemicals segment revenue jumped 18%. So to discuss this and more, we have with us Amit Agarwal, who's the ED and Group CFO of the company, joining us now. Thanks a lot, Amit. Always a pleasure speaking with you. First up, let's talk about the outlook for this year itself. I mean, you've had a good start to the first, the first quarter has been a good start. What's your overall outlook for the year across all the segments and margins in terms of revenue growth and margins, if you could give us a sense?
See, for the year as a whole, we expect, on the cost side, what we've seen in the Q1 as well, that the major benefit that has come primarily because of the costs. The costs have come down, and we expect the costs to remain stable going forward as well. So we do expect that vis-a-vis last year, our performance should be better this year.
Okay. So can you just quantify that when you say that your performance will be better as compared to last year? Give us some numbers. What are you working with?
So it's difficult, Ekta, to give the exact numbers given the kind of businesses we are in. That is point number one. Because there are multiple factors which are not in our control in terms of prices and even in terms of some of the inputs. And also, the expansions that we are doing. 2 of our expansions have come online in Q1, and 2 more will come online between Q2 and early Q3. That will also add, but it will also depend on how we are able to ramp up and things like that. So that gives me confidence that we should have a better year. But in terms of quantifying, it will be a little difficult.
All right, so let's talk about... Okay.
Yeah. Just to follow up on that, FY24, you saw a decline in terms of revenue. Your margins were 9% versus 14%. While you can't quantify numbers, and you can't quantify it, are you going to see a significant amount of growth this time round? Is it going to be higher than single digits? If you can give us a range in terms of what the single digit growth would be if that's the case, and if in case there is a margin improvement, do you get back to FY23 levels or do you improve from FY24 levels? Give us a ballpark of what we can expect.
So we will definitely improve from the FY24 levels. And I can also see that it won't be FY23 levels. It will be lower than that. So the FY23 was, I would say, a windfall gain where all commodities were through the roof. So I don't expect that to happen. So we'll be lower than FY23, better than FY24.
All right, that gives us a sense. Let's talk about individual segments now, because you spoke about a bunch of segments. The chemicals business, that led to the growth in the first quarter. So we wanted to understand the cycle, where we are in the cycle. I mean, do you foresee further improvement here from what we saw in the first quarter? And, higher volumes, 18%, that was lower, offset by lower prices. Where do you see this volume price mix be towards the end of this year?
So we have seen prices improving. So my sense is that prices have bottomed out, what we saw in Q4 of last year. So prices have bottomed out. They should be stable to improving is what our estimate is. But, these are commodity businesses, so, it's very difficult to give us exact sense on that. But what is more important for us are 2 things. One, what's happening on the cost side. So the energy prices are lower. So unless a global event happens, which rakes up these prices, we are confident that our costs will remain low. So we have seen almost 20-25% dip in our variable costs. So that is important. The other thing which is important for us is what's happening on our growth. The projects that were under implementation, now they are getting on track. So 2 of the expansion projects are already in place, as I mentioned. 2 new products are coming on track in the first half of the year. And that is what is going to drive growth for the business.
Okay. Can you give us a sense in terms of the sugar margins and the segment there? The margins continue to be under pressure. Would a possible demerger be on the cards?
See, in terms of sugar margins, a lot of it is policy driven, right? Now, there were 2 policies which impacted us. One was on the increase in cane price for the UP, which led to higher cost of production. And the selling price increase was not commensurate with the increase in costs. That was one which impacted the margins. The other was that the exports of sugar was banned. Now that led to a volume impact as well as a margin impact. So these are the 2 key reasons why, sugar did underperform versus same period last year. But given that we have this ethanol business, I think that has been stable. We had better volumes. That business is doing good. Now, to your question on demerger, I think that's a decision which we definitely talk about internally in the management. Board will take a call at the appropriate time.
Right. We'll ask you to just hold on to your thoughts. We'll come back to you and discuss about your numbers in just a bit, because at the bottom of your screen, again, we have numbers flashing in. It's earnings season. So these are numbers coming in from Bajaj Finserv, where the total income has grown about 35%. We've seen net profit grow by about 10% as well. Of course, on a consolidated basis, it would include the numbers of Bajaj Finance, which were reported yesterday already, as a result of which that stock is lower too. But as of now, the 2 details that we have right now, total income growth of about 35%, close to around 31,480 crores on the top line. The bottom line increased by about 10%. That stock lower by about 2%. We'll dip into these numbers once again as and when we have more details, perhaps when the presentation is uploaded to the exchanges as well. Let's get back to our conversation with the management of DCM Shriram. I wanted your thoughts on two things. One, you said that there is capex coming in towards the end of this year. Is it the same one as the epoxy resin and downstream products, where you had earlier indicated that the asset turns could be around 1.5 to 2 times? This was 1,000 crore capex. Is this the one? If yes, then maybe the next financial year looks a lot better for you, FY26 that is.
So what I am talking about is on the feedstock for epoxy, which is epichlorohydrin. That project is coming up in this financial year. And hydrogen peroxide. These are the projects which are very near to commissioning. As far as epoxy is concerned, that is about 2 years away.
And the advanced intermediaries one?
Pardon me?
The advanced intermediaries one?
Yes, so advanced materials, which is epoxy, that is about 2 years away. But the performance, as I mentioned, with these projects coming up, where we have increased our caustic capacity, epichlorohydrin, we will be amongst the largest player, the second largest in the country, or at par with the largest in the country. Similarly, hydrogen peroxide. So I think as the capacity ramps up, our years going forward should be much better for the chemicals business.
To follow up on the sugar business, because you said the policy impacted your margins, a lot of the sugar companies are increasing their contribution coming in from ethanol, and that is actually making them a lot more immune to these policy-related changes as well. What has your growth here been? What is your contribution from ethanol right now? What is it likely to be? What are the plans here to de-risk the sugar business from this policy change?
So see, we started our ethanol journey somewhere in 2017, 2018. And we are fully integrated as far as ethanol is concerned. We've also added capacities which are on grain-based. So we have total of close to about 550, 560 kiloliters per day kind of a capacity, which is pretty decent. We produce close to about 18 crores liters of ethanol annually. So I think we are pretty well integrated. Now, the growth will be on two fronts for the sugar business. One is on ethanol, but I think that requires some policy support from the government in terms of feedstock, and more so with the grain-based feedstock. Now, how does that pan out? Because we've seen ad hoc announcements which derail, the prospects of investing in a grain-based distillery. That is one. Second, I think is what we are looking at is, sugar is one part of the business. How do we grow other parts of the business in terms of where we can utilize sugar to the maximum in other products? For example, we have gotten into sulfate of potash, we are getting into CBG, and we're looking at more. So it will be like de-risking the business. So that's our thought process on sugar going forward.
Okay, all right, Amit, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's DCM Shriram. That stock is higher by around 0.8%. Just want to pull up Bajaj Finserv again, because remember that it is basically Bajaj Finance plus the general insurance as well as the life insurance business, which equals to Bajaj Finserv. So for the life insurance and general insurance business, just want to point out in terms of revenue, life insurance is done around 5,000 odd crores this quarter. And the segment, the PBT, has come in at around 183 odd crores. And when it comes to the general insurance business, it's come in at around 4,760 odd crores in terms of revenue. And the PBT has come in at around 569 odd crores, which is higher both year on year as well as Q on Q. For life insurance, it's lower Q on Q, but higher on a year-on-year basis when it comes to the profit before tax. So that's just a basic detail on Bajaj Finserv. We'll get you more details on that once more details filter through from the investor presentation. We'll take a short break, but up next we'll touch base with another company that came out with its numbers this week. We have Poly Medicure, which is in focus. Himanshu Baid, who's the MD, will join in to discuss the company's performance.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, Let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer. But certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned,
Welcome back. Well, for the markets, the mid-cap index up around 0.8%. The advance decline ratio is still holding in the green. So that's a positive that we can see. The Nifty PSC index is doing well today. So that one is up around 1.1%. So do watch out for that, giving the mid-cap index company. But let's talk about one particular company that did release its numbers on Monday. It reported what was a good set of numbers. Both revenue and EBITDA were healthy. To discuss this and the impact of the custom duty cut on X-ray tubes, flat panel detectors, we have with us Himanshu Baid, who's the MD of the company, joining in. Mr. Baid, thank you very much for taking the time out. Let's start with a steady growth of around 20-odd%, which you've been reporting, for multiple quarters now. Just break it up for us this quarter. How much did you grow in the domestic business? How much did you grow in exports? Because you've said that traditionally what you've seen in the past few quarters is that domestic is underperforming exports. Was that the case this quarter, the growth rate and your guidance?
Yeah, I think, Ekta, you're right. So still export is actually doing very well. And we have grown over 25% in exports. But domestic has kind of underperformed. We are in that 6-7% range. But I think when we look at, we break domestic into two parts. So we have, let's say, a government business, and then we have, let's say, a trade business. So trade business has done very well. That has grown by around 20%. But there was a decline in government business by around 30 to 40%. And the main reason was that few products which we had last year, we have discontinued some products which were supplying to government. And that is the main reason we saw a negative growth. But we are pretty much confident that domestic business will also come back to track, with that 20% growth rate overall in next coming quarters.
Give us the growth rates for this quarter.
Say again?
Could you just give us a segmental breakup this quarter?
Yeah, so when we look at the segments, renal has done very well. So renal business has grown by around 40% overall. And our vascular business has also grown by around 20-25% in that range. So we are seeing a good growth in the existing and the new businesses we have started. Only one business which didn't do well was the government segment. And I think we are not very focused there. So hopefully the numbers will normalize in the next few quarters.
All right. What about, exports and domestic? What did they grow at? What are they likely to grow at this year? How much is government as an overall, contributor to your overall sales? What happened to that? And again, renal, you said it's grown 20-25%. What's the absolute number here?
So renal, we have done a revenue of 30 crores plus in the first quarter. And we have guided for between 140 to 150 crores this year for renal revenue from 90 crores in the previous year. And when we look at the export growth rate, I think we will see export growing around close to 25% plus in the full year, and maybe domestic business grows around close to around 22 to let's say 24%. So overall, again, we stay with our guidance of 22 to 24%, which you have told in the beginning of the year. So I think we are on track for that, revenue guidance.
Okay, so FY25 growth should be 20 to 22%. Is that correct?
The total growth should be between 22 and 24%. That is what
22 to 24%. And what about the margins? Because that's improved, Q on Q. You've done 27%. What resulted in this margin improvement? Was it better realizations in exports? And what are you guiding for?
See, again, margin, if you remember, Ekta, we had talked about, 100 to 150 pips improvement in the beginning of the year. So I think we continue with that guidance. And I think, of course, we see a traction, better margins and exports. But I think our new product ranges in cardio and critical care are also, coming up well because we are launching 8 to 10 products in each category right now. So they will also help us to improve margins going forward in the year. So I think we will stay with that number of 100 to 150 pips. So we should continue with that.
Yeah, board had okayed, given you an approval to raise about 800 crores via QIP. Just wanted to know what's the update on that. This board approval came back in March. Now we're in the month of July. By when do you plan to raise this?
So we had taken a new approval because the initial approval was for, let's say QIP or preferential or debt. So finally, the final approval was taken in end of June for a QIP. And we have now, gone back to the shareholders and waiting for the shareholders' approval. Hopefully, this should come in early August. And after that, I think by 3rd to 4th week of August, we should be able to do our fundraise.
Okay. And this is for 800 crore itself, right?
Yeah, that is between up to 1,000 crores. So, but the final number has not been decided, but we'll decide it closer to the date.
Okay. What are the funds going to be used for?
So mainly for new plants. We are planning to set up some new plants. So that is where so the existing capex we are doing right now from our internal approvals is happening in the existing plants, and we are ramping up capacity in the existing plants. But for the new projects, we are looking at around 3 to 4 new plants to be set up in next 24 months, and the new capex and the fundraise will go there.
Okay. Well, I just have 2 questions and I'm going to ask you to be brief on them. For the US business, have you already started supplying? Because I understand that there was some approval from the US FDA for certain devices.
Yes, we have started shipments in Q2. The first shipment goes in Q2 this year. So in next a few weeks from now. And we've already got 4 approvals and 8 to 10 are in pipeline right now.
So what are these 2 devices which you will be supplying to the US?
So basically covering the infusion category, infusion product, the vascular access category, which is our core business. That is where we are going to start selling in the US market.
Okay. And how much do you expect to make from it?
See, I think we have given a guidance for that 3 to 4 year guidance of $15-20 million. So we'll stay with that because the ramp up will take time. But I think the start has already happened. So I think that is more important for us.
And what about the margins?
Margins, I think we should stay in that range, what we have been telling. So I can't specifically talk about US right now because it's just the initial start. But I think in next few quarters, I'll be able to give a better visibility.
Okay, just quickly, I wanted to ask you about the budget. These basic customs duty on X-ray tubes and flat panel detectors, it goes into the eventual making of X-rays. Those are the components where the customs duty is reduced. Tell us how much was the customs duty, how much is it reduced to, and why are we not producing these indigenously?
See, I think the biggest problem was that, it has come under the phased manufacturing program. And under phased manufacturing program, the duty was increased for finished products. I think it's close to around 20% now for finished products. And for the components, it was still higher. And it was actually, and some of these are, very critical devices which are manufactured by very few companies in the world. So the government decided to reduce the duty on parts and components so that the manufacturing in India becomes more competitive. And I think it's part of that. So, but I think overall the medtech industry still benefits from lower duty on parts and component raw material through a special exemption. And I think that is actually pushing more manufacturing in the country. So I think that we are grateful to the government that they're continuing with that, lower duty for raw material and parts.
All right, take that point. Thank you so much for joining in and giving us the view on the business and the outlook going ahead. 42% is what we've seen in terms of a stock price move over the last 6 months. Let's see at what point, you do come out with that fundraising plan of yours. We'll wait until the end of August. The size and issue price of the QIP that you're talking about is something we'll keep an eye out on. Close to around 20 to 24% growth in this year is what the management of Poly Medicure is guiding for this year. Take a short break, come back, focus on the markets. Pritesh Mehta joins in with some trading strategies.
Check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely.
Well, between going into break and now, there has been one sharp decline in the market, and that decline has been led by the Nifty Bank itself. When we started the show, the Nifty Bank was a little over 51,100. Now it's below that 51,000 mark. The reason why this 51,000 mark is extremely important is because there was a fair amount of put writing at that 51,000 mark itself. In fact, the Nifty Bank active options should come up for you. Nifty Bank is now way below yesterday's low on the budget, and now we have the 51,000 put. Had an open interest of almost 40 lakh shares, premium of 275 rupees. So levels below 51,000, closer to 50,700, 50,800 should be a support. If it falls below that, then maybe we are in for a rough ride on the Nifty Bank in particular. On the way up, 51,000 call writers, they would be, laughing their way off to the banks right now. Those who would have written that call, because of the big decline that we've seen in the call price itself. 650 rupees is the decline that we saw in the premium from yesterday's close on the Nifty Bank 51,000 call. As a result of which, the Nifty 2 has fallen below 24,400. In fact, 24,450 call writers were all the way hoping for that 24,500 mark to be a bit of a resistance. That's exactly what the high on the day was for the Nifty. But now the lower level, the 24,400 call writers are coming in lower, and the 24,400 put writers too are very active. We have seen some writing out there. Those guys would now be underperforming and unwinding their positions. So everyone's hoping for some support to come by around 24,300, 24,350, somewhat where we are right now. The outperformance of the mid-cap index perhaps may lead to some bit of an improvement in the markets right now, or belief that maybe there could be support at lower levels. It is a very, very stock-specific market. So we are seeing a lot of action in individual stocks. And in the expiry week, maybe something like a Vodafone Idea and Piramal Enterprises may enter the F&O ban, whereas SAIL would exit F&O ban. So the mid-cap index is still outperforming. The markets have seen a big decline led by the Nifty Bank. Nifty Bank closer to support zones, as is the Nifty. If we hold on here, great. If not, then maybe the second half could be a bit rough.
Okay, all right, Mangalam, thanks very much for that. So those are a couple of more details which are trickling in from Bajaj Finserv. We'll probably get Abhishek in to talk more about the details. But as of now, we have Pritesh Mehta joining in from Yes Securities to discuss the technicals of the market. Pritesh, hi, welcome to the show. If you could just start by giving us a sense in terms of a couple of these insurance stocks which are in focus. HDFC Life, SBI Life are higher. HDFC Life, in fact, is the top gainer right now. And now we have Bajaj Finserv, which is in focus as well. Technically, how are you approaching them?
See, in fact, it was in the insurance space, it was one of my trading picks because, we have created a customized insurance index and that has been moving higher. That has given a fresh breakout on the upside. So Bajaj Finserv, HDFC Life, SBI Life, and so many names, they are part of the index. And the way I look into it, Bajaj Finserv has been an underperformer. We are not expected the stock to participate in the upside. Recently, it had a move on the upside. It went on the upside to 60 odd levels, but it failed to sustain. So it continues to be underperformer. So rather than sticking to the stock which is underperforming, we should be with the stock which is outperforming or the leader of this particular index. And that particular stock is LICI. In fact, LICI it has given a big base breakout of last 6 months. On the Pontifica chart, we are talking about a bullish turtle breakout coming in. I'm expecting this stock to move towards 400 levels in the next couple of months.
All right. So that's the view coming in on LIC. But on the index itself, what is your call? We've seen a big decline closer towards support zones right now. Do you think we break down from here, or maybe there is a case for some bit of recovery from here, especially given the outperformance of the mid-cap index?
So Mangalam, a drop of 0.5% does not really matter much at this point of time in index. But the way I'm looking into it, we are likely to go through a period of time-wise correction. See, we have seen a good amount of rally last few months, but I know a bit of time-wise correction is required, especially when I look at the pocket of strength emerging that, that is in IT space, that is FMCG space. Banks and financials continuously declining in last 3 odd weeks. So I think focus should shift towards this particular space where there is strength. But IT but financials and bank would be the underperforming laggards going forward. But as far as index is concerned, nothing much big, I'm expecting on the downside. In fact, we could see, I think next few weeks could be a period of sideways correction.
Okay, all right, Pritesh, we're going to let you go on that note. Thanks very much for taking the time out. We'll take a break, but up next we have another company to focus on. Newgen Software will be joining in to discuss the quarter gone by.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Tomorrow.
Welcome back. Well, let's get talking to another company now. Newgen Software is the next management on the show. The revenue and EBITDA have come in quite strong. To discuss this, we have with us Virendra Jeet, who's the CEO of the company, joining in. Virendra, thank you very much for taking the time out. Well, Q1 is generally typically the weakest quarter for a company such as yours. So revenue growth has been strong at around 25% year on year. Can you tell us what were the key drivers?
Good afternoon, Ekta, and thank you for having me on your channel. As you're right, Q1 is a lean quarter for us. But having said that, we have been growing continuously for last 8 quarters, Y on Y, at above 25%. And I think in that it has been in line to that growth. So there's no surprise from us in terms of we did expect to grow. And in fact, our expectation was to slightly have a better quarter than this. The growth is coming from our core traditional markets. We are very strong in India, Middle East, and APAC. And US is typically a market where we still are established. So financial services have been a great customer. Again, the wins in that sector have been great. We got a broad-based growth. I think we got wins in Middle East, we got wins in India, we got wins in our Southeast Asia market. And also we did a good amount of, kind of a penetration in US market. We had a large deal in banking out there as well. So it has been a broad-based growth. It's a continued story. We have been on a run for last 8 to 10 quarters with a high growth rate, and I think we will try to continue that momentum going forward.
All right, fairly optimistic. You will try to continue that momentum at 25%. You said that you thought that you could have done better. So let's pin you down to that itself. What exactly is what you're expecting for the entire year in terms of revenue growth? And if you could break that down, you said, India, APAC, EMEA and US are the core geographies. I remember the last time you said that you are looking to increase your exposure in the US itself. So if you could give us a sense of the revenue growth for this year that you're gunning for, and in that, break that down across all geographies.
See, as I said, that I think we would like to keep the historical momentum going, and I don't see any challenges in the business as of right now. Our traditional markets, as I said, continue to grow. They continue to show strong momentum. India and Middle East are going to be the leading growth drivers. I think if you look at last year also, we have almost grown between 35 to 40% in these two geos. We do expect them to grow at a high growth rate. To be exact on numbers, it's very difficult. We still are a company with a small base of revenue. We just covered around 1,100, 1,200 crores last year. So I think single deals in quarters do vary in terms of numbers. So it's still advised to look at this company at a more annual basis in terms of revenue. Having said that, as you rightly said, I think India, Middle East and APAC will continue to grow. US, we are very optimistic. A lot of our investments in terms of our core marketing, as well as our building sales and our support structures is happening in US. We recently pivoted our strategy to go to really larger accounts in US rather than smaller accounts. And so it's taking a bit of time. But having said that, as I rightly said, we did have wins in Q1 and we do expect that in Q2, Q3 we'll continue to have the wins out there.
Okay. So when you talk about maybe a quarterly run rate in terms of the US, can you just provide us a sense in terms of what it might be? You did around 70 odd crores in terms of revenue this quarter. Would that be a run rate that we can assume will continue for the next couple of quarters for the US, considering that you are more, there's a more promising deal win?
No, I think it will expand because quarterly our revenue does expand because, as I said, it's slightly lopsided revenue, Q1, Q2 being leaner quarters. So we do expect it to, not only we expect it to, increase because of the lopsidedness, but also we expect growth out there. We always, at least at the beginning of the year, we are gunning more than 20% growth in the US as well. Where we exactly hit, I think that may be, some amount of time before we discover that. But we are very optimistic by Q3, Q4, we should be able to expand our US sales, and we should be able to really bring it as one of the growth territories as India and Middle East. But before the results come, we'll have to wait for that results. But we are quite optimistic.
Let me just rephrase that. 70.5 crores. The maximum you did was around 75 crores in Q4 of FY23 in the past couple of quarters. And the lowest has been around 62.4 crores. So give us an average run rate that we can expect. Are you now comfortably above 70 crores per quarter?
Yeah. So what happens is, a large part of our business is typically annuity and more subscription based. So roughly around 70-80% of business is more predictable at the beginning of the year. So this kind of a momentum of 70 crores can continue. And, even if we don't have any wins for the year, but we don't expect that. We do expect that this to expand over the year or the remaining quarters of the year.
All right. What about your order book? What is the current order book that you're standing on? You said that there are a bunch of deal wins that you've seen in the first quarter. You're hopeful of some more. So what does your order book currently stand at? What do you anticipate it to be, over the next couple of quarters?
Yeah, so actually I don't have exact numbers of order book because our business is typically, around, for next year's growth, almost 90% of the revenue comes from existing clients. And a lot of that is around renewals of order book. So order book is not the right reflection. But having said that, last year at the end of the year, I think we had roughly around 20% growth in the order book size on an annual basis. On quarterly, I'm not sure about the numbers, but we could share that.
Yes.
We are there. But order books, because the business is a bit lumpy on the license deal. So finally, the Q3, Q4 license revenue will determine the larger growth numbers for the company. And that is how we expect, this year to also perform that.
All right, so let's wrap it up then with your margin profile. First quarter, again, typically on the lowest side, then you see big acceleration as we move towards the end of this year. This year, on a year-on-year basis, there has been about 300 basis points improvement. What are you gunning for the entire year?
As I said that, previously, we are a high gross margin business. A large part of our revenue has got no direct costs. It's around, we are at 65 to 68% gross margin business. We do spend a lot on our R&D and sales and marketing. But as a healthy practice, we always gun to have roughly around 20% of net margin and 23% of EBITDA margin. Beyond this, any expansion, we would like to invest in growth. Having said that, in a shorter period of time, if our revenue really shoots up, we cannot really reinvest that in the same year. So, but we would always tend to be around those numbers, but on a particular quarter or a year, it could expand. But the intent is to really push for growth and still expand our growth.
Okay. All right. Well, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Newgen, but we do have Federal Bank, which is on your screen. Net profit has come in at around 1,000 odd crores, and that is versus our poll of 946 odd crores. So that's better than what we were expecting. NII has come in, you'd have to say largely in line, 2,292 odd crores versus our expectations of 2,283 odd crores. Net NPA absolutely stable, 0.6% compares to 0.6% on a sequential basis, and the gross NPA I think was a little above 2% on a Q1Q basis. I think largely maintained on a sequential basis for the gross NPA as well. Obviously, the devil lies in the details for all of the banks, with the investor presentation, the details on the asset quality, the net interest margins, which should probably come in soon, along with the other details such as the credit growth, etc. going forward, which is what we'll wait for. But as of now, as you can see, there's a little uptick which has taken place on the absolute basis when it's come in on the gross NPA. But on a ratio basis, I think it's just been a marginal move up.
Yeah, but nothing really to worry about because, the loan growth for the company, they have their business update as well. That was the highest that we saw in the last 7 quarters. Deposits grew by about 19.6% year on year as well. And this is a momentous quarter for the company as well, because this is the last time where Shyam Srinivasan chairs the company, the meeting and the board itself. The one number that the street would be looking out for would be the slippage number, because there are estimates ranging anywhere between 400 crores to around 550 crores. So that is something that one will watch out for, because this is a number that can rise quarter on quarter. And asset quality, most on the street were anticipating no change. So net NPA has seen no change, even as gross NPA has increased a little.
And generally, you never see a change, when Federal Bank reports in terms of the net NPA as well as the gross NPA is stable for a lot of these banks. But really, the details are when the management starts talking and, the investor presentation comes out. That's when the real details come out for a lot of these banks. And that's when the market decides whether they like the numbers or not.
Take a short break then. On that note, we'll let the market decide as we chew on those numbers that are there, and as we await more details. Come back on the other side, we'll focus on all the other stocks which are moving around.
Build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any
Welcome back. Well, Thyrocare is one stock which is doing very well today. Revenues and margins have come in at a multi-quarter high in Q1, and that's the reason why you're seeing a double-digit gain coming in on Thyrocare. So that stock should come up for you up around 14% for Thyrocare, as you can see. But Federal Bank is the big talking point at this point. Abhishek is here with the details. Abhishek.
Well, other income and lower employee expenses have led a beat with respect to PAT versus ARPOL. So if you take a look, the other income is up 21.4% sequentially. The employee expenses, that's declined by 16.8% quarter on quarter, and that's led to a PAT beat of close to 6.7% versus ARPOL. So they have reported a PAT of 1,009 crore. We are working with a number of 946 crore. Asset quality seen some deterioration over here. Gross NPA has increased by 4.6%. Net NPA has increased by close to 5.98%. That is close to 6%. But as a ratio, gross NPA ratio is the lowest that you are seeing for Federal Bank in last 9 years or 36 quarters. So gross NPA ratio is at 2.11% versus 2.13% in the previous quarter. ROA has remained stable at 1.28%, which is the same that they recorded in Q1 of FY24 as well. Operationally, it's a good quarter for them. However, the net interest margin has declined to 3.16%. Analysts were expecting a flat net interest margin. So a small decline in net interest margin, but operationally, it looks like a strong set of numbers with respect to profitability. Back to you.
All right, Abhishek, we are also getting fresh slippages at the bottom of your screen as we speak with you. Fresh slippages at 424 crores. This compares with 371 crores. The street was expecting some bit of a spike quarter on quarter, but 424 crores would largely be in line with what the analysts were expecting.
Well, yes, seasonal in nature. Any bank, if you see Q1 slippages do spike up due to agri portfolio that the bankers do have. Now, just to alert our viewers, some of the brokerages were working with a number of 450 to 550 crore of slippages in Q1, but it has come in at 424 crores, so it is below the analyst estimate. Back to you.
All right, take that point. Thank you so much, Abhishek, for joining in with that quick take on Federal Bank. Slip into a short break. Come back on the other side. Manisha Gupta joins in.
Under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees.
Welcome back, and joining us now is Sachin Jain from World Gold Council. Sachin, hi. With one slash in import duty from a 15 to 6%, government ensured that all that distorted duty structure that was in India is taken care of.
Thanks, Manisha. Thanks for getting me on. And you're absolutely spot on. It's truly a transformative moment for the gold business in India. And the steps that government has taken is really in the direction of what we call as Viksit Bharat, is in the direction of digital India, transparency, and bringing inclusivity where everybody who's following the rules of the game and doing things well, get garnered with a lot of interest. So it's a phenomenal step. It's a great transformative stage in which Indian gold industry will go through. And a huge welcome.
Sachin, the other thing that the industry is now awaiting is the GST Council meeting and an expectation that with the duty cut now, the next thing that would happen is a GST increase in gold. How are you looking at this balance and the conversation?
Manisha, if you go back in time, when the GST, was decided for our sector, it wasn't done by a drop of a hat. And I again duly respect the system that was formed at that point in time. The council was made. There were a lot of discussions, and discussions panned out over a year as to what it meant for gold, what it meant for diamonds, what it meant for the industry at large. And even at that point, the government didn't take an ad hoc decision. And I'm presuming the same system or the policy will be followed. So I don't foresee these things are immediately connected, and we are really anticipating a little quick decision on it. But I don't think it's going to be the case. It's going to be duly thought of. The custom duty reduction is a very important step if you see fundamentally eradicating the malpractices that are happening in the business. There was a whole difference of competitiveness that India had vis-a-vis some other nations. I think it's a very important step for that thing, and I think we should recognize this this whole big step and the contention that the Indian government has taken.
Absolutely. Sachin, so, a couple of things then. One, for consumers, clearly it is a big buying opportunity. But if consumers bought it in the last week or last month, it clearly is that decline in their holding on what they bought. But for the jewelers, and not all of them hedge as much. I've been speaking to a lot of jewelers. Some are 30% hedged, some are 70% hedged as well. So there is a one-time hit that the markets will look into this one.
Well, actually, Manisha, that's always been the sort of rule of the game, or sort of, how it happens. The fact is that when the custom duty has gone upwards, also the benefit is received by the industry at large. But yes, somebody is holding stock, and as you rightly said, a lot of part of the industry is working on hedged gold. The other part is invested gold, and yes, there'll be a loss. However, if you see in mid to long term, and I've been in touch with most of the big jewelers as well, the fact is what it'll create is the fundamentals of the business will transform, in the sense that if you just look at slightly deeply, the last quarter, particularly post Akshaya Tritiya, the jewelry industry has, it's been a very tough last 45 days to 50 days for the entire industry. On one hand, you had, of course, a dull time, but also on the other hand, very high prices of gold. Now, with this, what it does is it truly, in a right space, brings quality in the Indian pricing vis-a-vis the international pricing, and gives a big stir to the demand that will be generated by the end client. And I'm not talking about who are playing with the paper, but the true, genuine Indian consumer who's investing, buying gold, you will be out there. And we foresee that the next quarter, which is going to be largely B2B, and preparation for the festive will be strong. And we hopefully believe that quarter four, calendar quarter four, from Indian consumption point of view, will be a very, very strong quarter.
That's exactly what my next question was, Sachin. So what is the kind of demand jump that you're seeing? I mean, as you said, B2B, yes, IIJS is what you're referring to. And then we will also see the wedding and the festival seasons begin in the month of August. So until now, people anticipated higher value and perhaps not so much in sense of volume. But as you said, both of these perhaps could go hand in hand now with this correction in gold prices. So is there any percentage increase that you anticipate from the second half of last year?
So from my perspective, Manisha, we had anticipated that the consumption of gold in the year 2024 as calendar year would be in the range of 700 to 800. Now, that's quite a wide range. But why we gave that range was that if there is, let's say, a dramatic increase or up and down on pricing, then it could be towards the lower spectrum. And if things are slightly more stable and slightly more proactive, then it would be on the upper end of the spectrum. Now, clearly with this step, if you look at what happened in the last quarter, where demand for investment products like coins and bars was the highest ever. And next week, we'll be able to share with you more specific numbers. But those numbers are dramatic. Whereas on the other hand, the jewelry demand was very low. I mean, it had dropped dramatically also as combined with the season and the pricing. We feel that the interest in the investment demand will continue, whereas the consumption for jewelry, which was very, very slow and almost declining, will spur up. So combine both of these things, we foresee that it's going to be strong, and hence we will cover up the drop that we witnessed in quarter two of this year, and eventually ending up at a good space if you take the overall year average.
All right, on that high, thank you so much, Sachin, for joining us. So absolutely a thumbs up when it comes to jewelry as a sector and for the consumers as well, with the kind of decline that we've seen in gold and silver prices overnight has been 4 to 5% of a cut, and that exactly is what you benefit from in case you're buying that jewelry pieces today. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action forward.
Power projects, including setting up of a new 2,400 megawatt power plant at Peer Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited.
This budget, after a few budgets, is a bit more negative, I would say, on the taxation front in particular. There was some expectation that long-term capital gains tax might be increased, but with indexation benefit. So today what we've seen is that there isn't an indexation benefit, and plus it, I think, increases the risk. In a way, there was a stability in the capital gains regime for the last several years. Now the long-term gains tax has been raised by only 2.5%, short-terms raised to 20%, but this increases the risk in investors' mind that it could be not a a given tax regime for next many years.
Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And
Mid-cap see a surge even as frontline stocks see little change today. Utilities as well as energy and consumer durables clock gains even as financials and auto drag.
Hindustan Unilever performs a tad better than expectations with inline volume growth, but the stock slips on likely profit-taking after the recent run-up.
Bajaj Finance sees healthy income growth but margin crimps and credit cost spikes, leading to a dip in the stock as concerns on asset quality rise for the company.
And while the Finance Secretary suggests withdrawal of indexation along with the tax cut should be positive, some in the industry differ and the impact is expected to be positive for some and negative for the others.
Hello and welcome. You've tuned into Business Lunch. I am Nisha and with me is Hormaz. So Hormaz, it's the day after the budget and market is feeling the pressure of the budget as well. It was an eventful day yesterday, and today is no less. So let's take stock of the markets at lunch hour today. And Nifty 50 is down about 140 odd points. It's at 24,336 levels. It's a cut of 0.5%. While we talk about Sensex inching closer to about 600 points, cut at 570 around about right now. A larger, kind of skepticism as well as nervousness is coming because of the sell-off that is seen in the blue chip banking names. And it's Bank Nifty which is leading the charge in terms of dragging the market 1.7% down in trade. Bank Nifty and some of the biggest financials like Bajaj Twins, also because of the asset quality concern in one of those companies, as well as Axis Bank, Kotak Bank, SBI, all of them are the big draggers for Nifty 50. But what's really resilient is the mid-cap universe, 0.6% up. Hormaz.
We just put out a story on our website and saying that the Nifty Bank, from the record high that it made on the 4th of July of 53,357, it's down almost 2,000 points from that, more than 2,000 points actually. And HDFC Bank is one of the top contributors to the downside since the 4th of July, almost 8% down from the levels that it saw on the 4th of July. It's not recovered from that from the record high that it made after the confirmation that the MSCI weightage will increase for HDFC Bank, and it's been on a downtrend since then. The only outperformer though has been Federal Bank, after some positive news flow that came in. But the stock is seeing some bit of pressure in today's session after the earnings came out recently, slightly off the lows of the day, but still trading 1% lower. What's doing very well, though, in the broader markets are some budget-linked stocks, specifically the shrimp-related names, Avanti Feeds, Waterbase, Apex Frozen Foods. All of them, they were up in yesterday's session. They are building on those gains. And as there you can see, Avanti Feeds 14% higher as we speak. And similar gains seen in stocks like Waterbase and even in Apex Frozen Foods as well, anywhere between 17 to 18%. There you can see Apex Frozen Foods 20% higher now. So very strong gains coming in for these shrimp-related companies. And also like to highlight Antony Waste Management. The finance minister made some announcements in relation to expanding the waste management facilities in 100 other cities of the country. And there you can see now 14% higher there. Antony Waste now up 40% in the last 3 sessions. But Finance Minister Nirmala Sitharaman's record-setting 7th consecutive union budget focused on continuity and growth and uses cushion from a higher dividend from the Reserve Bank of India and public sector companies to enhance.
Right. So the incentivize employment generation. So a large part of that really came from that, and the allocation to capex, defense and subsidies remain the same, and also so does the allocation towards PM Kisan and Manrega schemes. So the former RBI Governor Raghuram Rajan, speaking to CNBC, gave his take on the budget and said that although the government pressed all the right buttons with the budget, there was no allocation of resources to key issues. Let's listen in.
They press all the right buttons, they talk the right talk. But when you look at the aggregate sort of allocations to education and skilling, broadly speaking, they haven't budged. You look at the aggregate allocations to agriculture, which is a big issue given what you said earlier about climate change. They haven't budged. So it's a budget which highlights the main issues, but doesn't really devote resources to them. There is nothing in the budget which suggests these are all experiments. We're doing the same old thing we did in the past, which is allocate a bunch of money to a particular program, see if it flies, and then, take stock maybe 5-10 years down the line. We don't have the time for that in India. We absolutely must take a handle of these problems. The one question, of course, is, have they promised enough in spending? Is it an ambitious enough budget? Because the key issue that was thrown up in the election is the lack of jobs in India. And certainly there are a whole bunch of initiatives in this budget on job creation, on apprenticeship, on skilling, a whole gamut of initiatives. But the key question is, A, are they funded enough to work? Some of the sums of money devoted to some of these programs are very, very limited. Will they incentivize businesses to hire? So that's question number one. And two, are they of the magnitude that India requires given the enormous concerns about joblessness?
All right, so that was an opinion on our union budget coming in from Raghuram Rajan. Now, another area, remember, of focus for the union budget this time was the announcement of a cut in the long-term capital gains tax on the sale of property from 20% to 12.5% now. But the bigger talking point has been that real estate investments lose the benefit of indexation, which allowed the property owners to adjust their gains for inflation. Now, the Finance Secretary clarified to CNBC TV18 that the tax incidence under the capital gains without indexation is lower and will actually benefit a lot of people. Listen in.
88% of the value of capital gains earned in India, according to our study, comes from people whose returned income is more than 15 lakh rupees. And 62% comes from those who are above 1 crore of returned income. So this is not a tax which is falling predominantly on the not at
middle
all.
Class,
and this is the class of income which Thomas Piketty and others have been writing about all the time. Now, at some point,
it then begs the question: are you looking at a higher rate? Because that's the worry that you've done 12.5. This is perhaps an odd rate.
If we were looking at a higher rate, we would have done it.
But maybe you're testing waters with 12.5, and maybe
we don't believe in testing waters.
So is it going to be 12.5 now for the near term? I mean, for the next few years?
There is no intention to revise it from here. I cannot speak for all the future finance ministers and finance secretaries, but I can say as of now, we have no intention of revising this any further.
So 12.5 is...
Of course, no one can predict the future.
No, absolutely.
Somebody else may cut it too. I can't predict that. But what I am saying is we need equity in taxation. We can't say that only equity markets take risks and a person doing an MSME business is not taking risk and he should pay 39%. And because I'm taking stock market risk, I should not even pay 12.5%. There is a case for a lower rate on capital gains tax. It is much, much lower than the marginal rate of tax on other sources of income. And it's creating distortion in the savings markets also.
The Finance Secretary there, and to take the subject forward, Sonal now joins in to explain how these tax changes are impacting the real estate sector. Sonal, the sector has been in the spotlight.
Oh, it has been, but let's try and understand how it would impact buyers, the investors as well, who buy real estate properties from an investment perspective. But just to give you the news first, of course, we've discussed it at length. Tax rates on long-term gains for sale on property, it has been reduced to 12.5% versus 20%. And of course, the big change is there's no indexation benefit which is available now. However, there was a clarification from the Finance Ministry which suggested that till 2001, the indexation benefit is grandfathered. That means if you bought a property before 2001, that is you will be taking the cost of acquisition as the rate on 2001. But if it is after 2001, the actual cost of acquisition will be considered for calculating long-term capital gains tax. Now, there have been a lot of calculations done, right? Of course, it depends from individual to individual. The calculations would vary. But on the whole, there has been a calculation which would mean if the price hike in real estate is more than 10%, then the new section would be beneficial. Otherwise, it is going to be the old taxation that would continue to benefit any investor. CLSA says negative for investments with shorter duration and moderate price growth, unlikely to impact end users who sell their existing house and reinvest in a new house because they get exemption under Section 54G. But if we talk about relatively short-term investments, that would mean where the market price growth is less than 10%. That is where they would not benefit. But if it is more than 10% and for a longer period of time, the new tax regime would be beneficial for all these investors. Ambit says the lower LTCG rate may incentivize short tenure property investments because now people will try to trade in a shorter period of time itself rather than going for longer period where there is no indexation available. Home buyers who are largely investors, they could reconsider their purchasing decisions due to removal of indexation benefits which could temporarily dampen sales velocity. Now we just heard the government as well saying that it will largely be beneficial, but that is only when the price hike in real estate properties is more than 9 to 11%. But that has really not been the case. In fact, we spoke to Knight Frank early in the morning and they indicated that annual return on property prices have just been to the tune of 7 to 8%. And it is only in last 3 years that we've seen that 9 to 11% hike. But generally, real estate returns are not more than 7 to 8%. And that's why the new tax regime would not be so beneficial for the investors.
All right, Sonal, thanks so much for getting us the entire perspective on this new rule in the budget. Let's also hear out what S. Naren of ICICI Prudential AMC had to say on the removal of indexation benefit and also the impact it could have on the property sector. Listen in.
real estate stocks were down because capital gains tax on real estate was down without indexation. So I think slowly over a period of time, the government is saying do not invest in debt and invest in property, invest in equity, invest in these kind of asset classes.
Now, Knight Frank India's Ghulam Zia also gave his take on the removal of indexation benefits. Now listen in to what he had to say.
Looking at the arguments that the secretary is putting up, and it is all completely revolving around expected gain per annum of about 11% after inflation adjustment, which is actually not possible. Annual growth of property prices are still in the range of 7 to 8%. The whole argument that one is putting up has to be seen over a period of time. Multiple factors go into it, but then at least looking at this argument that the property price have to go up 10% per annum is not something which cuts ice. At least I haven't seen that happening. So net, most of us believe that in the long run, the gain that you will get out of this new policy will be neutral to what it was earlier. But then we'll have to see case-to-case basis, different arguments. But I think I'm not fully convinced that there is no loss due to change of this regime.
All right, so that was about the changes in the property tax, and let's slip into a breather on that note. But up next, remember, short-term taxes on equity trading as well as taxes on futures and options were also raised in the budget. Views from our panel of guests follows on the other side. Stay tuned.
Next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated.
Welcome back, and continuing with our post-budget analysis, the Finance Ministry also proposed hiking short-term capital gains on certain financial assets to 20% and long-term capital gains tax to 12.5% on financial and non-financial assets. Now, additionally, the STT on futures and options is also hiked to 0.02% and 0.1% respectively. Now, we spoke to Deepak Shenoy of Capital Mind and Dheeraj Reddy of HDFC Securities to understand the impact of the same. Listen in.
The problem with speculation is usually the small person who does not have too much money leverages themselves by taking a loan and then leverages themselves in the market as well. But the actual numbers is not so meaningful that people will get deterred by STT. or by a larger capital gains tax, because if they were making profits, then they would be the worry. But then the problem, as stated, is that the speculation is bad only because a lot of people lose money. Nobody's going to do a buyback anymore. I think that's just very clear. I would, as a promoter, absolutely not do it. The only people who benefit from buybacks now are mutual funds and insurance companies or pension funds and so on, who are not who don't pay tax, right? So if I was the promoter of a company and I had to pay, I had to participate in a buyback, I would have to pay a certain amount of money to buy back my share.
On sale of securities options, you will have impact of almost 50%. And if we include sale and purchase both, because STT is applicable only on the sell side and not on a buy side, the impact will be almost 21%. So 31% impact on the sell side of the transaction, 21% impact on the sale and purchase both leg of the transactions. This is in the case of sale of options in securities. If we talk about the futures, I think the impact is slightly higher. Impact is 50% on sell side of the transaction. And here the STT is charged on the contract value. And in case of options, it is charged on the premium. If we include sale and purchase both transactions, the impact will be 39%.
All right, so those were the impacts of the big budget announcements. Let's slip into a short breather at this point on Business Lunch, but we'll get you more news and updates on the other side. Don't go anywhere.
Farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees.
You're back on CNBC TV18 with Business Lunch, and a quick look at the market. Well, at this particular point, status quo on Nifty 50, over 0.5% down over there. But Bank Nifty is the one which has seen some bit of improvement in the last 10 minutes of trade. So 1.2% down at this particular moment. And in the last 15 minutes of trade, we have seen some bit of buying in the blue chip banks like State Bank of India, ICICI Bank, Kotak Mahindra Bank, IndusInd Bank, as well as Axis Bank. So the recovery of banks is very critical for the overall recovery. Keep an eye out on that. Now to more budget headlines for the day, and RBI's fit and proper checks for the suitors of IDBI Bank is still underway, says DIPAM Secretary Tuhin Kanta Pandey. Now, he adds that the hopes to take the IDBI privatization transaction forward this year is very much there. Listen in.
Quick question on IDBI Bank, because that, of course, has been waiting for several years now. We are given to understand that the RBI has come back now with the clearance on fit and proper. Is the next stage set as far as IDBI Bank is concerned?
I think RBI is in an advanced stage of doing it, and I think we will move forward.
They have not actually come back.
They have not come back. Okay, so it's still...
I mean, they are almost there, but then they would let us know, and we will move to due diligence stage and move forward.
So can we expect that to be done in this financial year?
Hope so.
Hope so, the word from the DIPAM Secretary. Then back to the earnings. United Spirits climbs after delivering a strong set of numbers. Mangalam is here to tell us more. And Mangalam, tell us what worked for the company this time.
Well, you know, the most important thing this time around was a strong operational performance that came by on the back of a couple of things. One, premiumization did well. Realizations for the company improved, especially in the prestige and above segment. And thirdly, there was their own cost control measures as well, which led to both gross margin and EBITDA margin expansion. So overall, even as the revenues were largely in line with street expectations at around 2350 odd crores, the EBITDA was a strong beat at 458 crores. The street was working with a number of around 400 crores, and that took the margins to close to around 19.5%. The net profit at around 300 crores at a time when the street was working with a number of 230 crores. So let's look at the internals out here. The volumes in the prestige and above segment grew by about 5.1%. The street was bracing itself for a number of 4 to 5%. And because of higher realizations, the revenues actually increased by 10.1%, and that reflected in the operational performance as well. And by design, the company is lowering its business coming in from the popular brands, and as a result of which, you know, there was expected decline in both volumes and value out there. The fact was that it wasn't much more than what the street was anticipating, so that was largely expected. More importantly, you know, going forward, let's see how business pans out, because they've made a couple of interesting announcements as well. Acquired 15% stake in V9 Beverages, a company that makes a non-alcoholic distilled brand called Sober, for about 2 crore rupees is what they've invested here. And the other company that they bought is Coffeen, about 25% investment out there for a company that makes specialty cold brew coffee liqueur. So over the last couple of years, they've been making these small, acquisitions or investments in these artisanal brands. So that's one part of the business which we'll keep an eye out on. The conference call today at 4 p.m.
All right, Mangalam, thanks so much for giving details on United Spirits in high spirits right now. All right, moving on to some tragic news really coming in from Nepal. A Shaurya airline aircraft crashed during takeoff at Nepal's Tribhuvan International Airport in Kathmandu, and 19 passengers were on board the flight to Pokhara, and also 18 have been dead in this accident. According to officials at the airport, the pilot has sustained serious injuries and has been taken to Kathmandu Medical College for treatment. Now, rescue operations are currently underway at the scene of this accident, and authorities have successfully extinguished the fire that erupted from the aircraft. So quite an unfortunate incident there.
An unfortunate incident indeed. But with that, it's a wrap on this edition of Business Lunch. Midcap Radar takes the action forward.
Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It is the day after the budget. We've been analyzing. There are a lot of new provisions that we've been talking about as well. But for now, markets are lower, something that we expected today because of the global setup. 130 points lower on the Nifty, but mid-caps are doing well, Vivek.
Mid-caps and small caps are doing well, and that sets the tone for our show as well. Quite a lot lined up. Let's start off with the top headlines. Markets move to the day's lowest point. Financial services and private banks drag, while oil and gas along with pharma clock gains. Mid-caps outperform.
Realty sector stocks bounce back even as the street remains divided on indexation announcement, while the finance secretary suggests withdrawal of indexation along with a tax cut should be positive. Some in industry differ. The impact is expected to be positive for some, negative for others.
United Spirits climbs more than 5% in trade after delivering a strong set of numbers. Premiumization, cost control and contained input costs boost margins.
Johnson Controls, Hitachi Air Conditioning surges in trade as Bosch Group is all set to acquire residential and light commercial HVAC business from JCI Hitachi JV, transaction valued at $8.1 billion. Okay, all right, those are the top headlines. Let's quickly take a look at the Nifty, down 137 points. The Bank Nifty is down 600 points. So largely a red-looking market for us today, but the mid-caps, they have made a comeback. That index is up 522 points. The small-cap index is doing well, and a lot of individual moves. We've been seeing it on the back of results. We've been seeing on the back of budget announcements as well, and that continues to be the case. But we do have a lot of managements lined up on the show as well today.
A lot of managements lined up. Before we go to that, we also want to touch upon the individual stocks that are moving around. Hormaz is at the wall. Hormaz, over to you for the mid-cap movers.
Red on the benchmarks, green on the broader market. Seems like a normal day as we speak, but then there are plenty of movers, mostly on the gaining side in the broader markets, as evident from the advanced decline as well. But BSE is leading the pack. The stock was up yesterday, came off the highs of the day, but now has seen a bit of a rebound now, 8.5% higher as we speak. Castrol is having a good day for itself, 265 now on the stock, almost 8% on Castrol as well. MCX is having a good day, and Suzlon building on the gains after its quarterly results, another 5% now, upper circuit, 60 rupees on the stock for Suzlon. A sector that has been a subject of much debate since yesterday, real estate. The index sold off yesterday, seeing a bit of a rebound today. Prestige, Sobha, Oberoi seeing gains between 3 to 5%. But the one sector that has been doing well since yesterday are the shrimp feed stocks, Avanti Feeds, Waterbase, Apex Frozen, all of them gaining nearly 20% after some announcements, the positive announcements that were made in the budget yesterday. Plenty of earnings reactions as well, and Thyrocare is the one 15% higher now after its results. Federal Bank was trading in the red earlier, but once the numbers were out, the stock now is up 2% off the lows of the day. United Spirits crossing 1 lakh crore in market cap today, so 5% higher there, and Torrent Pharma having a negative reaction. Some stocks doing well on the back of volumes, and they'll come up on your screen. Quest Corp, another budget-related news. Borosil Renewables 8%, and MMTC is up now 20% on very strong volumes. And lastly, some stocks that are underperforming in today's trading session, and they'll come up on your screen. Some of the stocks that include the likes of Bandhan Bank, Godrej Consumer, FMCG, one of the stocks in the FMCG pack not doing well, and Sundaram Finance not having a good day in today's session. Back to you guys.
Okay, all right. Thank you so much, Urmaz, for that list. A lot of stocks on our radar. One of them is Sharda Cropchem. Recently reported their Q1 numbers. The company reported good set. This has come in as a recovery after a few quarters of weak performance. Revenue surged 23% on a YOY basis. This time around, the company's reported a profit versus a loss last year. To discuss this and more, we are joined by R.V. Bubna, Chairman and Managing Director at Sharda Cropchem. Mr. Bubna, good afternoon, sir. Thank you so much for joining us. Well, you did indicate that prices have bottomed out in the last conversation that we had. Can you give us a sense of how much did prices rise by in Q1? What was the volume growth that you saw? And if that trend has continued in Q2 as well?
Madam, the prices have not risen much, but the volume has grown. Volume has grown by almost 41%.
Okay.
Compared to the same quarter last year.
Okay. So if you can give us a sense of going forward, the growth, will that be led by volume growth, or are you seeing a similar pricing growth as well?
Madam, there will be both pricing growth as well as volume growth. Pricing should grow better in the second and third and fourth quarters, particularly third and fourth quarters.
Okay, sir. So now talking about the AgChem business itself, could you give us a sense of how the EBIT margin over there panned out? You know, it appears to have kind of slowed down. Was this because of higher rebates, discounts that were given, and will that reverse in the coming quarters?
Sir, there was some rebates given, but the main reason was excessive production in China and huge stocks that the manufacturers as well as the distributors and intermediates had collected. That led to very big collapse in the prices last year. Now there's a small increase in the prices, but the prices have stabilized instead of going continuously down. And I feel from here, the prices should start looking up, but the process will be slow. Not that fast as it was in the case of dropping.
Okay. You know, I also wanted to understand what happens with the balance sheet. You have seen an improvement in working capital days. You're sitting on a cash of around 650 crore rupees as well. Is there any plan to do any acquisitions globally? Is that something on the cards, or what is the plan with the cash that you have in your books?
Madam, we don't have any plan of acquisition or any such things. We will reduce our working capital days, and we will pay our suppliers punctually on time, or sometimes even early, and try to get some cash discount if we can. And also make some investments into mutual funds or mutual funds and fixed deposit schemes.
Okay, so I understood that you're taking advantage of the buoyancy in the equity market. So, if you could give us a guidance, you said that at this point of time, prices at least have definitely bottomed out. So you expect some recovery, maybe not at the same pace at which they declined last year. With that in mind, could you give us a sense of what is it that you're targeting in terms of volumes for FY25, the kind of pricing you expect, and if possible, if you could give us a guidance for top-line margins as well as profitability?
Sir, we are expecting the volume to grow by about 15 to 18%, and revenues will also grow in the same proportion. And our gross margins should be in the range of 30 to 35%.
Okay, 30 to 35%. And just for context, Sharda Cropchem has done gross margins of 29.2%. So from
EBITDA should be in the range of 15 to 18%.
15 to 18%, and that is the similar revenue growth that you're expecting as well. Got it. What are the current registrations in the pipeline, Mr. Bubna, and what kind of money would you require for those registrations? Because that would be a substantial sum, if I'm not mistaken.
See, we have about 2,900 and odd registrations in hand and about 1,050 registrations in the pipeline.
Okay, and what kind of product approvals are you expecting this year itself? Will this growth also be led by any new product introductions that you would make?
Yes, there will be many. We are expecting more new registrations, and there will be new products for us, and that will help us to improve the margins.
Okay, so just a quick word as far as the demand outlook is concerned, both domestic as well as exports, and especially a word on how Europe operations are panning out.
Sir, the demand is constantly in the improvement. Our volumes have increased very happily and handsomely, and we feel that this trend should continue in the next 3 quarters.
Okay, all right. So after a lot of weakness that we've seen because of global agrochemical inventory destocking, now things are coming back on track. The stock price is higher by 5% as well. Thank you, Mr. Bubna, for joining us as always and giving us your take on what's happening with the industry and the company in specific as well. The stock actually has seen an uptick since the time we had this conversation. So that's the word coming in from Sharda Cropchem. We'll slip into a break now. Up next, management of Dodla Dairy will join us to discuss their Q1 numbers and the way forward. Stay tuned.
Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node.
Welcome back. The next management on the channel is Dodla Dairy. It reported a strong set of Q1 numbers, margins expanded, value-added products saw growth of more than 21%. Going forward, the company is targeting a capacity of 20 lakh litres per day. We have Sunil Reddy, the Managing Director at the company, who joins us now. Good afternoon, sir. Thank you so much for joining us. The first question has to be the target that you've set, 20 lakh litres per day. When can we expect you to go ahead and reach this particular target?
We are anticipating to reach 20 lakh litres per day in the next couple of years. And thank you very much for giving me the opportunity for being on your channel.
Okay, all right. Mr. Dodla, good to have you on the show with us. It's a good set. We have seen this for you. We have seen this for the peers as well. Wanted to understand what have the procurement prices in Q2 been so far, because this has been consistently increasing. How is it for you? How is it for the industry? And what is the outlook? Will it continue to increase?
Procurement prices will remain muted in the current quarter because the earlier monsoons in the south of India has got the flush season coming in a bit early, and there is plenty of milk in the system at the moment. So we are looking at prices remaining steady state at least for the second quarter.
So it'll be around the 39.4 rupees per litre?
Yes, around the same prices.
Okay. Let's now come to the value-added product segment. Number one, what is the growth that you're targeting in this particular segment, and what will it be as a percentage of your top line going forward?
The first quarter, we have achieved almost a 34% contribution from the value-added segment at a consolidated level. This has predominantly been done with the earlier statement that we are making of increasing our procurement. We are now trying to become more active in getting more procurement for ourselves in terms of having fresh milk available throughout the year for our liquid milk sales, because we're doing a bit of branding and marketing exercises and we want to keep it that way. As a consequence of that, we will also have a lot more of fat and powder to sell. So fat being sold in the form of consumer ghee and powder being sold as a form of B2B, this will drive our growth in terms of the value-added segment to be larger than it was in the earlier days. So we are looking at the 30 to 35% range of growing in this year.
Okay, so 35% of total sales is what you're expecting. Is that correct?
Yes. Between the 30 to 30.
What is the growth that you're expecting in this particular segment? You had indicated you're looking at mid-teens growth for value-added products. Will it be led by pricing? Will it be led by the newer products that you're introducing? So that would mean better volume growth here?
Yes, it will be also led by the newer products that we're introducing as the larger share of the fat produce that we are selling. And that's the reason we'll see the expansion coming in more of the value-added component.
Okay. Now, talking about the geographical mix that you have, you're largely present and a majority of your sales comes in from South, both Andhra Pradesh as well as Karnataka. So going forward, how do you see that revenue mix change?
That will maintain status quo. We're also pushing harder in terms of Telangana now because Hyderabad being one of the markets that we're pushing for. And we've also been doing well in Tamil Nadu now because our spread in Tamil Nadu is increasing after our acquisitions a couple of years ago that we did with a couple of dairies there. So we think we'll maintain our market shares in the existing markets, and also Tamil Nadu and Telangana will try to expand our market share.
Okay, so what is the current market share for you amongst private players right now? What is the overall market and the overall market as well? What is the trend that you're seeing here with the expansions that you're planning in states like Tamil Nadu as well?
So we think that we will be maintaining a 4-5% market share in Tamil Nadu, which we want to increase it to the 6-7% as the overall market share. We have strong players in the market there, so it will be a battle that we'll keep fighting, but we will be growing at least by a percentage or 2 of market share in Tamil Nadu.
So that's Tamil Nadu. Generally in the industry, what is that number looking like for you?
Generally this year, because as we were saying earlier, the flushes come in earlier, there's plenty of milk in the system. We think we will be able to maintain a steady state of market shares. We won't have much of an increase because normally when there is a huge flush, we find a lot of the unorganized sector coming in and offering product which will be cheaper. So volume growth will be a little muted compared to the earlier years, but it is a seasonal thing that happens in the dairy industry most of the time. When there's surplus, volume will get muted.
Would you be able to quantify, number one, the revenue, the margin, as well as the bottom line guidance that you can share for FY25?
So FY25, our revenue guidance will be similar as what we have seen in the first quarter, where we've been growing at the 10% in terms of the revenue growth, and the profitability growth will be in tandem because as it's a game of once we have more milk in the system, cost of milk comes down, which will also expand our margins well, and also adding a bit of our value-added profile improving. We will maintain the same growth of that 15-20% in terms of the bottom line that we already have.
Okay, and margins at around 11.5%. Is that something that we can look at this year?
Around the numbers, around the double-digit numbers, definitely, ma'am.
Okay. Mr. Dodla, I wanted to understand your current distribution reach. What is the targeted expansion? Because you've increased your retail parlors to 598. You are talking about expansion in different states as well. What is the plan here? What kind of capex will you have to put in here?
More than the capex, we have undertaken a little more of expenditure on our branding side. We are now doing a little more of branding exercise and making our presence being availability rather than presence saying availability to become more far-reaching. And also we have been pushing more product into the modern trade. So with all these three that we will be going into it, capex is not large on the front of marketing. It's only a bit of the freezer expenses that we factor in or the refrigeration chain that we try to give it to the trade. And it will not be large. It will be a very small numbers of a few crores here and there, not a big number in terms of capex.
Okay, so last question from our end. How big can the Orga feed, which is the animal feed business, be as a percentage of the revenue going forward?
As a percentage of the revenue, it will still be small. We did around 80 crores. We're expecting it to almost double to become maybe 160 crores by the year end if you look at it. Out of a gross revenue of maybe around close to 4,000, so it will hardly be 3-4% of the overall revenue.
Okay, Mr. Dodla, thank you so much for joining us today and giving us all those details. So the street liking the numbers, that's the word coming in from Dodla Dairy. We'll slip into a short break. We'll get you more on the markets and put focus on Thyrocare, which is buzzing in trade on the back of numbers. Stay tuned.
Hyderabad-Bangalore Industrial Corridor. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
I'm endorsing Vice President Kamala Harris because she's ready to step up, bring our party together, go toe-to-toe.
Welcome back. You're still tuned into Midcap Radar. The stock on our radar is Thyrocare. It is surging in trade on the back of a good set of Q1 numbers. Ekta is telling us more. Ekta.
Thanks for that. Well, yes, Thyrocare is in focus because of a good set of Q1 numbers. So the revenue is up around 16%, margins 27%, and profit at around 24 crores. Both the revenue and the margins, in fact, have come in at multi-quarter highs. Revenue is highest since Q2 of FY22 and margins highest since Q1 of FY23 as well. Now, the profit also is the highest that we've seen since Q2 FY22. Pathology revenue, which is bulk of their sales, was up 16% year on year. And it was a flattish Q-on-Q. Franchise revenue was up around 11% year-on-year. Partnership revenue was up around 29%. D2C, which is direct to customer, was up around 16%. Patients were up around 9% to 4.1 million this quarter. Samples were up 13%. And the company's radiology revenue, which is a small part of the business, was also up around 15% to 13 crores. Overall strategy of the company continues to be a B2B service provider with affordability. It's trading at around 37 times FY25 PE and 31 to 32 times FY26 PE. So maybe there is some kind of upside as compared to valuations of other listed diagnostic companies.
Thank you so much for that, Ekta. Sharp mover in trade today. And amidst the recovery that you're seeing both in the Nifty as well as the Nifty Bank, that's all the time we have on this edition of Midcap Radar. Your stocks when we return.
And win in November.
Kamala Harris is at the top of my list. I know her well from having worked with her in the Senate, on the Judiciary Committee, sitting next to her on the floor of the Senate, knowing her and her family personally.
I think Vice President Harris's energy, her enthusiasm, the time she spent here connecting with Pennsylvanians, she's no stranger to us. She spent a lot of time here, and I think people will be ready to enthusiastically support her.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session one day after the budget where we are seeing profit booking coming in on the frontline indices as well as the Bank Nifty. It's recovered from the day's low, but nonetheless still weak. So the Bank Nifty is down around 578 odd points. We have the Nifty, which is shed around 150 odd points, and the Sensex over 550 odd points. Mid caps are the ray of hope today. So the mid cap index is gaining around 0.9%. Advanced decline ratio has been steady and has been in positive terrain throughout. A lot of result reactions and a lot of results to watch out for. So case in point would be Federal Bank, which is reacting to its set of numbers. So that stock is up around 2 odd percent at this point. It's been a reversal from the time it released numbers where the stock was down around 1.5%, but now higher as we speak. A couple of other numbers which you should probably, a couple of other stocks that you need to keep on your radar is Bajaj Finserv, which is at the low point of the day. So that stock is down around 3.5 odd percent post numbers. Remember, Bajaj Finance already reacted to its numbers today. That stock down around 2 odd percent. And we have a couple of other big heavyweights releasing results today, L&T, Axis Bank. So all of those will be in focus. But joining us today, we have Rajat Bose on the technicals and Sharad Avasthi, head PCG research, to answer all of your queries. Sharad as well as Rajat, welcome to the show. Sharad, let's just start with you. Just wanted your quick take on Federal Bank.
Yeah, I think the results have largely been in line with expectations. We don't think that there's a very big positive or negative surprise on the results. And I think the management issue that has been an overhang for them, that's finally being sorted out. In terms of valuation, I think maybe at these valuations, there is very little upside left for Federal Bank to achieve from current levels. We would be more comfortable buying into an HDFC or a Kotak at these valuations rather than Federal Bank.
Okay, all right. What about the technicals, Rajat? How would you approach today's trading session? There's not been a huge dip. Even yesterday, there was a recovery from the lows, quite different from what we've seen generally when, big steps by the government are taken on taxes. So what is your sense?
Regarding Federal Bank, what I would say is that it has moved up considerably. In fact, I also concur with Sharad that there is little upside left. One should actually think of booking profits. Of course, there are no profit booking signals immediately that it is going to fall, but then maybe 210 to about 220 would bring in a lot of supplies. So now is a good opportunity to actually book some profits and take money home. Immediately in the banking space, I wouldn't really go for any particular bank as such. HDFC Bank, I have my doubts whether it will be able to take out 1720 or not. So that was one bank that could have been taken, but I'm not so confident.
Okay, wanted your thoughts specifically on the Nifty also, Rajat, before we kick off the queries.
See, regarding the Nifty, I would say that this 24,300 is the Lakshman Rekha. Today's low is to 24,307. Around that level is the 20-day exponential moving average, and that moving average needs to be taken down with a lot of high volume selling. Only if that happens, you will see it going down further. And then there would be this 24,000 mark and thereafter 23,500. And so long as 24,300 is not broken, it is a course correction that you are seeing. But there are sectors where I would say, just as I said, Federal Bank, one should book profits. I would say the sectors, railways, defense, and PSU banks, I would suggest getting out of them or booking profits in them because they are looking pretty I mean, most of the stocks in that segment, they are showing parabolic rise. And if this parabolic rise happens, you were discussing Thyrocare in the earlier program. You know very well what a parabolic rise is. Thyrocare from 400 in 2020 to 1465, and then came all the way down back to 400. So whether these stocks fall to that extent, these railways and defense stocks and all, that's needs to be seen. But definitely these levels are not going to be sustained over the next few months. They would go for a serious correction.
Okay, all right. Some amount of caution coming in there. But let's get in our first question then. We have Muthu, who writes to us from Mumbai. He holds 50 shares of IndusInd Bank, which he's bought at around 1193. He wants to know what to do, whether he should hold or sell this particular counter. So that's on IndusInd Bank. 1193 is the buy price. What would you recommend on this one, Sharad? Let's start with you.
Yeah, I think you should continue to hold. I think the bank would continue to grow at a 15 to 18% CAGR. Very recently, I think the price differential between the price to book multiples that this bank is getting vis-a-vis other private sector banks has contracted a bit. And I think as the numbers normalize over the next 1.5 to 2 years, I think that should retain back. What I'm expecting is initially at least a price to book multiple of somewhere between 1.75 to 2x on the stock. Considering that and a book value of around 1,050 to 1,100, something around 1,075 over the next 1.5 to 2 years. I think the ideal target should be somewhere around 1,900 to 2,000. So you can continue to hold for targets of around 1,950 on IndusInd Bank.
Okay, continue to hold for targets of 1,950.
Yeah.
When would you expect that to probably be achieved?
I think anywhere between 18 to 24 months.
18 to 24 months. Rajat, what's your view on stocks such as IndusInd? What would your call be when it comes to the technicals?
IndusInd currently, if you look at the weekly chart, it is going in, it's going through a correction. And the levels around, say, 1250 would actually be a major support. Currently, it is 1396. If it were to fall below 1380, then there would be further fall. Only when it crosses, say, something like 1500 levels, you will see fresh gumption coming into this particular counter. I do not have any future projection for IndusInd.
Okay, no future projection for IndusInd Bank. That stock has been a bit sluggish, down around 5% in the past 3 months. Now let's get to another question. We have Hari Krishna, who writes to us from New Delhi. He holds 850 shares of Zensar Technologies, which he's bought at around 775. So he's sitting on a loss. He wants to know what to do, whether he should hold or sell this particular counter. Well, it's done well, Rajat. If you look at it on a year-to-date basis, YTD as well, it's given good returns. Do you think that one should probably just hold on and wait it out? And what would your targets be if in case there is, an upside potential?
See, I would say that in 20 months, it has already quadrupled itself. So if you ask me, I would say that at least book part profits, because here also that kind of movement is already happening. That is, a parabolic rise is happening. People are over enthusiastic. See, I'm emphasizing on this parabolic rise, and thereafter one should do some profit booking, because after the budget, what is the next lolly? I don't see any lolly coming in. Now it will be the performance that will justify the price, or there will be some selling. So I'm expecting some kind of correction here as well. At least it may come down to something like 625 to about 600 going forward. So no buying is recommended at current levels from a technical point.
Okay, all right, fair enough. On the fundamentals, how would you approach Zensar Technologies? Just came out with its numbers. There was a dip in the profit which took place. What's your sense, Sharad?
Yeah, I think the quarterly numbers have been a bit soft because of some issues they have faced in some of the clients. And most probably they were also talking about some furlough in some of the client accounts over the next quarter also, which is an abnormal thing to happen to them. But I think they'll continue to grow at a 7 to 8% kind of CAGR. FY26 earnings could be somewhere around 33. And I think not much upside, but I think it could easily trade at around 25x. So around fair value could be around 825. So I think what Rajat is recommending, I would be largely in sync with it, that not much upside is available from the current prices. So you could book some profits here. And if you get a price up to 825, I think that should be the price where you can fully exit the stock.
Okay, all right. That's on Zedza Technologies. We have V-Guard numbers, revenue up around 21% on a year-on-year basis. As you can see, the stock is reacting very handsomely to those numbers. We have a couple of other mid-caps which are in focus as well. But now we have K. Renuka Anand, who writes to us from Andhra Pradesh, holds 220 shares of Cochin Shipyard, which is bought at around 718 odd rupees, and wants to know what to do, whether to hold or exit. Well, this is a tough question. 718, so sitting on a huge profit when it comes to Cochin Shipyard. What would you recommend, Rajat, to a investor in a stock such as Cochin Shipyard, which is just really hit it out of the park in terms of performance? It's up around 1,300% in the past 5 years, and it's given good returns on a year-to-date basis as well, 278 odd percent. So give us a sense in terms of what you would do with a Cochin Shipyard, and whether it's prudent to probably take some money off the table now. Rajat.
This is a classic case of that parabolic rise, because in the recent past I have done a lot of research on parabolic rise, be it our markets, be it the US markets, be it European markets or Japanese markets. Parabolic rise is always corrected. If you look at William O'Neill's book, How to Make Money in Stocks, he also recommends the same thing. And here, along with the parabolic rise on a weekly chart, at the end of last week, there was an evening star pattern that suggests that you must book some profits. And defense is a very difficult industry to handle, because when the government is having a lot of cash, you will get your payments. Otherwise, in the past, in the last decade, it has happened. The number of defense companies actually suffered very badly. They had to borrow, and they were on the verge of default. All these things happened at one point of time. So nowadays they resort to QIP, and also the orders are mostly coming in the fourth quarter. So all these put together, I would say that when you are getting good money, you should book some profits. See, in the stocks, you have entered at a good price and the stock has moved up. Now, instead of feeling elated, you should take some money home. That's the time now, at least for defense stocks, railway stocks.
Okay, time to take some money home. What about the fundamentals? The PE ratios also are quite spectacular when it comes to stocks like these, Sharad. What's your sense in terms of the fundamentals? It's still to release its numbers. How would you approach a Cochin Shipyard? Do you think it's prudent to now, book some profits?
Booking some profits would be good, but I think looking at these companies just on the basis of historical PE would give you a very misleading thing to look at. But yeah, again, as Rajat was rightly pointing out, maybe a lot of it is priced in the valuation currently. I think they are doing some capex in August. Most probably another capacity is going to come on stream. Regarding the quarterly numbers, Q1 is usually a slow, slack quarter for this company. There is a seasonality impact. So I don't think Q1 will surprise you on the upside much. But I think in the long term, with an order book of around 22,000 crores, there is a possibility with the capex that they have done and the type of order flow internationally as well as at the domestic levels. There are some European orders that are scheduled to come in. There are some new rules kicking in from December in the European region also with respect to carbon emissions, etc. I think that will lead to some additional demand also. But I think, yeah, it's a real point that these industries are slow and not very linear in nature. and there could be some headwinds in terms of order cancellation or order problems that could delay your performance. But if I think in terms of numbers that this could easily double from here, so we have seen an EPS of around 30 rupees. Considering the capex that they have done and considering the international and domestic scenario, the earnings could treble, over the next 4-5 years. And I think then getting around 30 times would not be very difficult. So long term, I think easily it could be a 2700, 2800 stock. But then current prices are discounting 3-4 years ahead in the cycle. And I think over the next 1.5 year, most probably you will get much better prices. If you're a very long-term holder, I think it certainly continues to be a good thing to hold on. But I think when something is discounted for 3 to 4 years, it's better to take most of your money off the table.
Okay, well, we have the Petnet LNG numbers on your screen. Net profit up around 55% on a year-on-year basis, a Q-on-Q basis, and the margins have expanded as well, all the way to over 11%. The EBITDA is up around 42%, as you can see, at around 1,564 odd crores. Petnet LNG, that stock, is up around 3.5% reacting to its numbers. 1 month, it's down around 6.5%. But nonetheless, we'll take a short break on that note, but a lot more queries lined up on the other side. Stay tuned.
First, PAN and Aadhaar number are the basics. Of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement, or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the Income Tax Department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time twisting.
Welcome back. A lot more queries. We have Rajat Bose as well as Sharad Avasti to answer all of those questions. Well, let's get to another one now. We have Praveen Kubar, who writes to us from New Delhi, holds 4,100 shares of IRFC, which he's bought at around 47.64. He's asking what to do. for another whether he can hold for another 6 months or book his profits. Well, Sharad, let's start with you. IRFC.
Yeah, I think it's a unique business, mostly catering to the railways. There are no NPA issues, and there are no leverage issues also, being a government undertaking. So I think the typical things that plague an NBFC are not plaguing this company, and railways has a decent capex going ahead. So you can expect, that earnings over the next 4 or 5 years could easily double. And typically, a price to book wise, obviously, it's trading at abnormal valuation, 5.2x. But I think considering the fact that there are no balance sheet jitters for this company, there is a high probability that this would get valued in terms of PE rather than price to book. So in that case, I think even then, if you are considering that the EPS transcends to around 10 rupees over the next 4 or 5 years, because they have grown at 10-15% annually. And I think going ahead also, they would continue to grow. They recently approved raising 50,000 crores additional debt. So I think they'll continue to grow at that rate. So 4 or 5 years, it does double to, somewhere around 10 rupees kind of earnings. And it does get around 20-25 kind of multiple. I think even then it's roughly fairly to fully valued at $200. So I think it's better to book your profits here and exit. If you're of the opinion that you'll get 30-40 times, I think then you can continue to hold. But I don't think that's a possibility. I think 20-25 times is roughly fairly to fully valued, and that's also 4 or 5 years down the line. So I think at current valuations, it does make sense to exit the stock fully.
Okay, well, Rajat, we're getting a lot of those queries on parabolic rise stocks, and I think IRFC would probably fit that bill as well. What's your sense on this particular? Rajat, what's your sense?
From early 2023, it was around 20 rupees or a little higher than that. So, and now it is 220, it touched 220 very recently. So, and at least Cochin Shipyard moves in a steady fashion. What happens in IRFC is that it moves up in spikes, and the stock that moves up in spikes means that there is not much liquidity available in the market, that if you want to buy some big quantity, the stock shoots up in a big way. For these kind of stocks, I would say that after you have made some good money, at least take some money out. At least whatever you have spent buying the stock initially, that you should get back or a little more, because when the spikes would start happening on the downside, you never know. We cannot say that the parabolic rise will stop now, so you should get out all your position. No, but then at least some profit should be taken, because when it falls, it also falls in a big way, and it falls for several weeks in tandem. The kind of movement that happens, that is very, very unnerving for any common investor. And especially after this capital gains tax, long-term capital gains tax being raised, after it starts falling, you will not be able to psychologically prepare yourself to book profits or get out of the count. So at least here, book some profits.
Okay, all right, Rajat, as well as Sharad, we're going to let you go on that note. Thanks very much for joining in and giving us all of your perspective. Well, for the markets, as of now, the Nifty is down around 140 odd points. It's maintaining that level of around 24,338 odd. And remember, it's been a recovery from the day's low, but nonetheless, there is still some amount to go in terms of a further recovery if you want to see the stocks in the green. The mid-cap index up around 1% advanced decline ratio, as we mentioned, is still holding on the advancing side, and that seems to be the key positive trait in today's trading session. We'll wait by. There are a lot of big numbers which will be releasing. Axis Bank is down 2.5% ahead of its numbers. L&T also should come up for you. It's down around 0.8%. So just watch out for all of those stocks. Well, that's all the time that we have on the show. Do remember to email us your questions. We'll address them with our experts. Closing bell up next.
was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year with new milestones being achieved on the large street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour, live on YouTube at CNBC TV18, weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Well, that's essentially the market for you, down and out 100 points on the Nifty. This is day 2 after, of course, the union budget yesterday. This is closing bell. We are coming to you As always, from the CNBC TV18 Motilal studios, I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. I realize you two guys are gradually getting towards the weekend. The jackets are off. I'm the one who's like Monday dressing. Need to fix that. But I think there are other things in the market as well which are really grabbing our attention. There's a bit of a decline now.
Well, the weekend's long away, Surabhi. A couple of days still to go, and we've got an exciting last 60 minutes, I would think. Markets are down 100 points down, but not out.
Absolutely, and I think the outperformance of broader markets is very, very stark today. So, yeah, I mean, as we speak, I mean, we've kind of sort of come back above. I mean, the decline is in 2 digits from being down 3 digits. And also numbers are coming through as well, Federal Bank and more. We'll sort of touch upon that, but just a few points here. So 90 points down on the Nifty is what you have. It's an inside day, which basically means that so far, because of course the range yesterday was very high, we're trading within yesterday's sort of bar on the Nifty. The panic low was 24,074, didn't really go anywhere close to it. Just sort of mentioning that, putting that on, and that should hold. I mean, if the market's got to even consolidate and not do very much over the next couple of days, but I mean, that's the number to watch on the downside at this point. Now, broader markets, I think, is the real story because the pressure is only in large caps. And mid caps and small caps are doing very well. Small cap index especially, almost 2% gain in the small cap index. So it's a very pronounced outperformance. Mid cap index is up just under 1%. Market breadth is very strongly in the positive territory. So large caps taking a bit of a backseat, but broader markets doing fine, which means, I mean, in terms of regular portfolios, it should not be that bad a day, even if we actually end somewhere around here with a third of a percent cut or a 0.5% cut on the Nifty. Surabhi.
Yes, absolutely. I think mid caps are the bright spot because otherwise large cap screen, particularly banks for me, it's looking a little difficult and troublesome. The kind of pressure on banking stocks. Now, yesterday you could attribute it to the budget-related volatility. Second day running, there's a lot of follow-through on the way down. Just look at the names. You've got Axis Bank, which will be reporting today about 2% lower, Kotak Mahindra Bank, HDFC Bank, and banks remain a point of concern. You heard that from Chris Wood before the budget as well. A lot of FIs perhaps thinking that this is a structural issue that's playing out and paring down positions. So we'll talk about this. And the Bajaj twins numbers haven't been very kind. Both Bajaj and Finserv are down. So the financial space is definitely weak. But then on the mid-cap screen, I mean, there's plenty of cheer. Look at something like an Avanti Feeds. Remember, yesterday there was a duty relaxation for a lot of the shrimp exporters. That's working very well for that stock. Johnson Hitachi we'll talk about. There seems to be a deal brewing in the global space that involves Bosch at the global level, which could be beneficial for this company. That's up and about. And ICICI Pru reacting really well to those numbers, 7% higher. So I think mid-caps is where the positivity seems to be.
Well, that's right. On the Nifty Bank, I just want to make a quick point. It's going to be playing out the weekly expiry, and today it went down to around 50,700. That 50,500 level is very, very important. I'll tell you why. Because the 50 DMA comes in at around that 50,500. The low of today is 50,700. And 50,500 will mark a 5% correction from the recent peak. So we're already off 4% from the recent peak on the Nifty Bank. And in the last 1 hour or so, it's pulled back close to around 500 points from the low point of the day. Currently at around 51,300. The 50,500 is a very, very important mark. If you plot the 50 DMA, it'll tell you the picture out there. And today is low as well in that vicinity. So keep that on your radar. I think that's going to be the swing factor for the final hour. If it can pull back a little more, it'll help the Nifty recover some of those losses. While if it wants to go ahead and revisit the low of the day, which is 50,700, that's going to be important as well. So keep an eye out. The Nifty Bank has seen a recovery, which is helping the Nifty as well cut its losses from 150 points down. Well, it's now down close to around 50 points or thereabouts. And I think it's getting help from a couple of other names like SBI Life. That's recovered a goodish bit. Big boy Reliance Industries. So the Nifty Bank has recovered and Reliance Industries. Just pull up Reliance Industries. That big boy has moved up, and that explains why the Nifty as well is getting some support. How do you position yourself in the final hour of trade? Mitesh Thakkar joins us. Hi Mitesh, good afternoon. We've seen a bit of a recovery, choppy session, but a recovery from the day's low. Let's focus on the Nifty Bank first since it plays out the weekly expiry. What are the levels you're looking at out there?
Good afternoon, Nigel. So I think, the indices still don't look good to me while there is some strong pullback from lower levels. I think the structure of the Bank Nifty is still worrisome for me. And the Bank Nifty has actually managed to claw back about 400 plus points. Yet, I believe that around 51,600, 51,700, 800 zone, I think that 150 point band will see strong supply emerge, and I think that will be a difficult level for the bank Nifty to get past. With that kind of view, I think the idea is that in case we get closer to about 51,600 levels, would want to explore taking some short position on the banking index, and therefore will avoid trading the Nifty. Though on stock specific basis, I have a buy and a sell. I think the insurance companies are doing very well. So LICs and HDFC Life have just made fresh swing highs. LIC can be bought now with a stop at 1120 for targets of 1200. And HDFC Life, I would recommend a buy here with a stop below 650 for targets of 700.
Okay, couple of picks there from the insurance space. So let's keep with that theme. Thanks, Mitesh, for that. We'll keep coming back to you. Let's focus on the insurance space. ICICI Pru, that one is surging in trade post its Q1 numbers, while SBI Life as well is also trading ahead in the green ahead of its numbers. Yash joins us to help us with both of them. Yash, tell us first about ICICI Pru, a review of them, and a quick comment. LIC as well, maybe the street is hoping that it could perform as well. Your comment.
Well, Nigel, you spoke about the shopping spree in the market, and seems like the entire crowd is moving towards the life insurance counter at this point of time. ICICI Prudential Life Insurance, particularly, the stocks flying away. Numbers came post-market yesterday, and though there were some hits and some misses, but the market seems to be acknowledging the hits much more than the misses. So as far as our CNBC TV18 poll is concerned, it was a miss on the total APE and the value of new business, but the new business premium was in line with what the street was expecting out of the company. Retail annualized premium equivalent, which is more margin accretive. There was a strong beat which came as against the CNBC TV18 poll there, and margins, more importantly, came in line with what the street was anticipating. As far as growth year on year is concerned, if you look at that, the numbers are pretty strong. New business premium growing at 24%. Total annualized premium equivalent, though it wasn't slightly below the street estimates, but still growing at 34% on a year-on-year basis. Retail APE growing at 57% on a year-on-year basis. VNB, value of new business growth, came in at 8%, and margins, they came in at about 24.04% versus 30%. Important to point out here that ICICI Prudential has also seen a margin improvement of about 118 basis points on a sequential basis. The stock hasn't done much as compared to a lot of its peers, up about 13% in the last 1 year, 12% in the last 3 months, trading at 1.9 times price to embedded value. So there was valuation support also after the results as the stock opened today, and we can see the stock moving higher. For SBI Life Insurance, the numbers are expected to be just around market closing today or post-market closing. What we are expecting as far as the new business premium is concerned is a growth of 13% on that counter. Total annualized premium equivalent growing at 17%. Retail annualized premium growing at about 21%. Value of new business is expected to grow at about 13%, and margins, they're expected to fall by about 100 basis points or thereabout to come in at about 27.82%. Do remember, the margin figure will be very important again for SBI Life Insurance. Anything about 28% could be a big positive for the stock as we move into tomorrow's trading session. The stock has moved in the last 1 year about 27% higher, 13% higher in the last 3 months. It is, not one of those cheap life insurance stocks. It is a little expensive, trades at 2.2 times FY25 estimated price to embedded value. And also you spoke about LIC. Now the hope in the life insurance sector is that after ICICI Prudential Life did deliver on margins, HDFC Life delivered decent numbers, there could be some positives which could come out of the companies which haven't reported the numbers, like LIC, Max Life, and today SBI Life Insurance.
Okay, all right. Yash, thanks a lot for that. Hope is not a data point, but for the time being, there's nothing wrong in hoping. So explains why LIC is higher. Well, let's get in Prakash Tiban. Hi, Prakash. Good afternoon. Good to see you in. What's your view on these insurance companies? They seem to have come back. They seem to be getting their act together. And the street believes maybe LIC could fire from here. And that's the one with valuation support. Your take?
Good afternoon, Nigel. So I do agree. It's not fair to extrapolate the salience of some of the numbers that have come through. And I can tell you, ICICI Pru has been probably missing something like this, the set of numbers that they've just reported for the last many quarters. So it's heartening to see a fairly well-established name get this. And I think the genesis of this lies in last year's post-budget changes that they made in terms of the product mix. and that's probably started to show numbers. And I can only tell you that insurance, I look at it from a multi-year, decadal kind of a theme. And from that perspective, I still have been telling people to get into baskets and you buy a little bit of all the 3 or 4 major companies. If you don't want LIC into it, you could skip that, but at least HDFC, SBI, and ICICI Pru. And all of them collectively will actually do an outperformance on the overall market in a way which is very distinct. So, there's a high amount of certainty and probability in those numbers. On LIC, I think there's another thing that you'll probably have some bond yields kicking in terms of, the market gains that they would have also started kind of seeing or would anticipate to be seen. So there is an element which is different, and equities have also run up. They have a significant allocation to that. So LIC is more of a mixed bag from that perspective. But I would recommend you buy into insurance companies on dips, but buy them as a basket.
Okay, so that's on insurance. Prakash, I'm still dealing with the budget hangover. It hasn't gone, so I'm going to pick the same stocks. I mean, look at let's say an Avanti feed, some of these shrimp guys, because the duty on the feed is coming down to, I think, just about 5% shrimp feed. Look at a company like Borosil Renewables, because I think on solar panel glass, now it's all about Make in India. So companies that are manufacturing in India, like perhaps Borosil Renewables, perhaps they stand to benefit. Any further interesting trades? I mean, I'm not saying day trades, but anything that you picked out where there could be a good opportunity looking at the direction of policy?
No, absolutely. See, there are 2 or 3 areas which probably, are worth looking at from a second order, impact. And one of them is this employment creation focus that has been there. The other one is the focus on areas like Bihar. There's a lot of infrastructure spend that's happening out there. And I can tell you, there are companies which specialize in those pockets, whether it's Bihar or whether it's the East, so you'll have that. And you could also look at cement within that. Companies that are focused onto that market. Nigel is sitting right with you, next to you. He'll tell you that, East has a very different dynamics in comparison to the South and the West when it comes to cement. Another company that I identified, and we could speak about this yesterday, was, this whole spend in Bihar is going to eventually percolate down to a lot of retail growth. And there's a company called V2 Retail. I don't know if you've ever spoken about this. So there's V-Mart, of course, which is more pan-India, V2 Retail, which is a bit more centered in those areas. And I was surprised V2 Retail is also at a 5% upper circuit today. So, V2 Retail has very small, presence in tier 2, tier 3 towns. Now, these are pockets which will see a bit of a re-rating. So the way you had the Avanti fees, Borosil Renewable re-rating underway, I think there'll be a lot that will happen. And the other area is shipbuilding, though we've not heard of very specific plans yet. But the focus that it warranted in terms of a mention means that you'll probably see a lot of shipbreaking, shipbuilding, ancillaries to be kind of also looked at. So there's lots that's there, but we're not in a hurry because the market is at valuations which are absolutely there's no margin of error. So I would look at these names from a more secular long-term perspective at slightly more comfortable
Prakash, got that. Prakash, I missed the first talk. Before V2, you said shipbuilders, V2, and which was the first one?
No, I was talking about infra names. So infra the likes names. Of PNC, the PNC infra, the NG infra, who specialize in doing stuff in these pockets, whether it's road construction, bridges. There's a lot of construction activity that she's spoken about, right? So you could look at those kind of names also to benefit.
Okay, all right, got it. So those are some perhaps budget-related plays that could have a longer runway, not just a day or 2 trades. Could be, bigger business opportunity over there. I think we have Abhishek joining in. Do we have Abhishek? Let's see if we can go across. Because banks are in focus, so much pressure right now. All eyes are going to be on Axis Bank. Let's see if it can deliver some sort of a uplifting result today. Abhishek, what are the expectations?
The expectation is of a weak earning for Axis Bank. So the key things to watch will be that sequentially analysts are expecting deposit to outpace the loan growth, which means that credit deposit ratio can decline. So loan growth is expected anywhere between 13% to 15% YOY and about 1 to 2% on a sequential basis. Now loan growth will be driven by high yielding portfolio, largely that has been seen with Axis Bank over the last few quarters. Net interest margin can come under pressure. So mortgage Morgan Stanley is estimating a 8 basis point decline YOY and 4 basis point decline in net interest margin on a sequential basis. So slippage is expected to rise quarter on quarter, which is largely seasonal in nature. So last quarter it was around 3,400 odd crores. So Phillip Capital is estimating slippages of 4,000 crore in this quarter. However, asset quality can remain stable on a sequential basis. The near-term growth outlook and the net interest margin progression, what the management guides on these two fronts will be seen closely. Our polls suggest NII growth of 11.7% YOY, while PAT is expected to decline 0.4% YOY and about 19% on a sequential basis. Back to you.
Okay, all right, got it. Abhishek, thanks very much. That's Axis Bank in focus. The other big stock to watch out for is going to be L&T. Numbers coming up soon. Vivek is here with the preview. Vivek.
Well, capital goods major L&T will be declaring its results, just post-market hours. This time around, expected to be a slightly subdued quarter. Revenues higher by almost 8.5%. But remember, Q1, you saw elections, you also saw extreme summer, and the company has actually mentioned that they were grappling with labor shortage issues as well. EBITDA is seen higher by close to 12.5%, so close to the 5,480 crore mark. The consolidated EBITDA margin is seen at around 10.5%, and profitability is seen higher by close to 15.3%. Now, when you're talking about the key thing to watch out for, it will be the order inflow uptick. So far, the company has, reported a little less than 10,000 crore of order inflow. So analysts are worried that there could be a downside risk as far as the order inflow guidance of 10% that the company has given as far as FY25 is concerned. Now, this particular quarter, the overseas order book is something that will be important to watch. Remember, the company has received orders both in hydrocarbon as well as non-hydrocarbon segment from the Middle East. And if there is improved traction there, that is something that the markets will see as a positive. Now, first up, let us have a look at what is it that the company has given in terms of guidance for FY25. Number one, order inflow seen at 10%, top line guidance seen at 15%, core margin guidance, which was underwhelming, is seen at 8.25%. So that is something that the market will very keenly watch out for, the core margin guidance.
Vivek, thank you very much for that. Prakash, just wanted your thoughts on BSE. I mean, actually, not just BSE. The stock will come up on your screen. It's up 8.5%. It's a sharp move. And of course, I mean, it's sold off from the highs of 3,300 to about, I think, the low was closer to 2,100. So it was a sharp cut. But today it's up sharply. Now, there is widespread expectation, Prakash, that over the next couple of days, I mean, the budget's done what it has, but we'll also hear from SEBI. In terms of the capital market, I mean, lot size changes on the F&O side, one expiry per week per exchange, etc., those kind of things. This is, of course, I'm sort of talking about what's been reported and what was under consideration. What are implications for a player like BSE and maybe even brokers for that matter? Angel was up yesterday. I'm not sure what it's doing today, and a few others.
So, Prashant, the only way you can surmise this in terms of the reflection on the BSE screen is you'll probably have a little bit of business on the F&O side, especially option side, come off from the NSE, and some of that money would probably find its way into BSE on especially the smaller stocks that are listed. There is anticipation that some of this money that is in the short-term trades could probably, and there's a huge appetite for traders on that side. So some of it could probably start sufficing. This area could start sufficing for the absence of those derivative, opportunities. But it's still too early. But my sense is look at what the budget has done for MSMEs at large. It has made that entire platform, entire segment very robust, or at least it has, initiated some sort of a thing to make them financially very strong. And if that were to happen, the overall culture of going and getting yourself listed through whether it's the SME merge or, on the BSE, whichever way, that would probably improve. And there's going to be, a higher impetus to financialization, which will also help the BSE, MF Star, platform. So I think there's a lot in terms of second order impacts, but all of this is long range. There's nothing which I have come across which is immediate. But because of valuation comfort, as you rightly said, it's available at almost like 30% off from where it used to be. You'll probably be able to buy into it. So that's the rationale. But beyond that, I haven't been able to make out anything which has a direct correlation to the announcements.
Najal, you were talking about how the expiry, right?
Yeah.
So if they do that one expiry per week per exchange, I mean, I think that is still I think manageable. That's also going to have an impact. But if they, I mean, the bigger thing is which is not under consideration, at least from what we also reported, take over weekly contracts. I mean, that is going to be huge. I mean, if something like that happens.
And that'll be a little puzzling as well, because these weekly contracts were introduced to get more participation coming in there. And now you do away with that. So that'll be a little bit puzzling. I spoke to a couple of market men yesterday, and they said, what direction are they sending out? You introduce this first to get participation. Now, when you get plenty of it, you're saying we won't do it any longer. So it's a bit of a tricky one.
They wanted, but they got
they got too much.
All right. Well, we'll take a quick commercial break here. Vijay Kedia is going to be with us on the other side. He's someone, of course, who tracks markets closely. Long-term investor, needs no introduction really. So that comes up in just a minute and a half.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies. I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. Will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna.
Welcome back. We have private investor Vijay Kedia, who is now joining us with his perspective on the markets, the budget. Mr. Kedia, great to have you with us here. Good to see you again. The budget hump is behind us now, and I think we can, the sigh of, there's relief that it is behind. I'm not sure what it does. What does it do, according to you, Mr. Kedia, for markets? Does it do anything at all? Has your view changed, perspective changed in any which way?
No, nothing, Prashant. Nothing has changed. I think budget has come, budget has gone. And a lot of people, mainly into stock market, is talking about all these short-term and long-term capital gain tax. In my view, I had thought that it is bound to come, and it is not going to change anything. I will tell you one thing regarding this long-term capital gain tax, because that is now the topic, hot topic. As I always say, you see, Prashant, there is working hours, and there is a happy hour, and there is hangover hour. So whatever happening in this market is a hangover hour. Okay, so it is the best time that you can say your man ka baat. So this is what this FM has been giving us hint for last 2-3 years, that ultimately they will bring all these financial assets in one bracket. So this is the best time to do this.
Is it an indication from them कि अब थोड़ी अति हो गई है कि आप थोड़ा थम जाइए, or did you read it like? Because now we are also, I was just talking about something more coming from SEBI that is still pending, but that is on the F&O side, and indications are that something will happen, because there is a committee on which has been formed, and We reported on this yesterday. So essentially, authorities are also kind of not taking a view on the market per se, but maybe that things are very, very good. So they'll be able to absorb higher taxation.
So it is not because things are very good. I think because they think that things are very bad. So what we call it good from the liquidity perspective or from the volume perspective may not be good for the health of the market. Because all these new people are coming. If you like, SEBI has constantly saying this for last many months that 90% are traders and they lose money. 99% are traders and they lose money. SEBI doesn't want all this crisis. So that is why they are bringing some therapy so that this crisis can be averted. So of course, I also feel I will agree to this that now SEBI's something change in some composition or something, whatever it is going to come very soon. But that is good for the market, Prashant. Yeah.
Okay, so that's good for the market. Curbing speculation will be good for the market. So you're on the same side as some of the regulators. Get that, Vijayji. But I want to draw your attention to the other piece, and that for me is perhaps the bigger debate. The general financialization of savings in the country, right? And we saw mention in the economic survey. Rarely before has a government document like the economic survey spoken so extensively about how over-financialization is a threat. It ended really badly in the West and we had the financial crisis, etc. Just your thoughts on that. I mean, the fact is, look at how quickly dips are getting bought. Election result day, dekhe kya hua. Then yesterday, within a matter of hours, it was all bought. Is there some credibility to that argument that over-financialization, too much of savings going into the stock market is a problem? Do you see that as a problem?
Of course, a blind man can also see that. You see, earlier I must have told on your channel also. Earlier we used to talk about in earlier days the roti, kapda or makan. Then it switched to roti, kapda, makan or data. Now it is roti, kapda, makan, data or shares. So now the stocks and shares, it has become a cult. And it is not earlier. It is even my peon. I am telling you, he is also investing. Or he calls himself an investor. He is also trading into the market. So this has become a cult. So there is no problem in being a cult, and as long as they are educated and they have some experience. If they are coming directly into this market and doing all this satta only, then it is not going to end well. Timing, nobody knows whether it is going to happen today or maybe it will happen after 6 months. But mind it, I am not saying that bull market is over. This bull market is going to last maybe for next 5-6 years more, But the way things are happening, SEBI certainly said SEBI is worried about it. And 2-3 days back also they said that all these fixed deposits and all going into stock market. So that is not stock market coming into a stock market. That doesn't mean that it's coming for investments. That's coming for future and option. So it's a cause of worry.
So Mr. Kide, the point is, my simple question is that money that is coming in, let's say via mutual funds, forget FNO for a minute, mutual fund money coming in, investors really wanting to invest, so much money coming in on a monthly basis. Are you worried about a bubble, too much domestic liquidity? That's my question.
What is too much liquidity? 20,000 crore a month? Is it huge money compared to whatever $4.5 trillion or whatever our market cap is? That's a small sum. Ultimately, I had told this thing to Prashant, I remember, that forget about the 20,000 crore a month. Ultimately, it will come 20,000 crore a week and later on 20,000 crore a day on a daily basis. So there I do not have any dispute. Money coming to mutual fund, I do not have any dispute. Money coming to future and option, that scares me.
Hi, Mr. Kedia. Good afternoon and good to see you. And I like the hangover, and the happy hours example. Quite an interesting one over there. And you seem pretty okay. You're saying that some restrictions, some curbs on this trading mentality is called for. So we get that point. Let's get to some sectors, some themes that you like as well, even from these levels. As you mentioned, the bull market is well and truly on. We still have a few years in store. And there will be sectors and themes that will do well. So give us a couple.
No, same as before, because forget about this budget and all. Whatever policy has been laid down by this government, I think those policy will be supported and that thing will go on. For example, like I like infrastructure story. I think 11 lakh crore, 11.11 lakh crore has been earmarked. What they in the interim budget they have maintained that. And again, we are going to have a budget 6 months later also again. So I think infrastructure should do well. And as I believe that India has the biggest problem India is facing is unemployment. We need 80 lakh new jobs every year, and plus the people who are leaving the old jobs also need replacement. So manufacturing sector can, to some extent.
Mr. Kedia, I think we have lost you. I think, Mr. Kedia, we'll just come back to you and fix that audio. For the time being, I think we'll reconnect with Mr. Kedia. Let's take stock about the markets as we reconnect with Mr. Kedia. The Nifty Bank, that's trying to pull back, and it's pulled back considerably actually from the low point of the day. But I think the Nifty Financial Services Index, which houses some of these insurance companies, that's staging a better, pullback, because you have the insurance companies that are in there and the other ones as well. So that's cut its losses considerably from the low point of the day. SBI Life now at the high point of the day. HDFC Life as well moving higher, and Big Boy Reliance as well has moved up. I think Mr. Kedia is back with us. Yes, sir, please go ahead. We lost that audio for a bit.
Yeah, okay. So I was saying, say the sectors which has been doing well earlier, are where the government is focusing, all those sectors will do well. We cannot imagine in India, we cannot imagine a $10 trillion or $30 trillion economy without infrastructure. So I think infrastructure companies should do well. And as I said, that I always have one worry that India needs 70 lakh, new jobs every year. And plus people who are leaving the job also need a replacement. So manufacturing sector can, to some extent, can take care of that sector, that issue, that problem of unemployment. So manufacturing should do well. And besides all these things like power or maybe solar and tourism, where government is focusing and has mentioned many times, I think all these things will do well.
I was just looking at what you told us. I think you were with us on the 9th of July, not very far back. And your exact quote was, personally, I think government will tinker with long-term capital gains tax, either rate or tenure. Yeah. So,
both happened.
Both have happened. So, absolutely. And by the way, you talked about infrastructure. One of our viewers have written in and requesting us to please ask you about Home Infra. I think one of your investments. But I think you've given us a sense of the infrastructure. Anything you want to add there?
No. It's difficult to say. Let me tell you, I may sell also my shares maybe tomorrow or after this interview is over. So I am bullish on infrastructure theme. Now you have to select shares. Madhuri ma'am has asked me not to mention a name on TV and all. So CV chairperson, I mean to say, ask me in the sense of money. So I don't want to get into shares and all, but I am bullish on infrastructure stocks. So they should do well, Prashant.
No, absolutely. And not asking you to comment on stocks at all. Don't do that. But any other sort of broad themes you want to touch upon? Where do you see a good runway for growth overall, without naming any stocks?
No, you see, earlier, whatever stocks, whatever shares I was bullish on, I am still bullish. The only thing is this, that I find this market is really going through a hangover phase. So I don't want to invest in this market. I am just, you can call me, I am just cheerleader or fence sitter. I am just watching this market. I don't want to invest in this market because of this, the kind of, euphoria happening in this market, mainly in future and option. So I am little conservative.
All right. Vijay, apart from the FNO euphoria, speculation, all these issues, is there anything else that worries you? I'll tell you one piece of debate that's kind of really become center stage since we last spoke, and that is banks. Now, we always thought that banks were the darlings of all foreign investors. Whenever foreigners will come, they'll buy banks. Now, there are questions to that thesis, at least in the near term. So, I don't know, is that a point of concern? Any other concern that you see?
I don't know. I do not have any concern. The biggest concern I have in this market is the retail participation. Again, I'm saying I'm not against them, but they should be educated and they should have some experience. Because I know one thing I would like to share with you. One day I was thinking, there's this traders, actually, these traders are like monkeys and these investors are like donkeys. So I'm a donkey, so I don't mind buying shares and just stay like a donkey instead of doing all these things. So I'm little worried about this, about whatever happening. So this is what is my take.
Mr. Kedia, budget को लेके कुछ गुनगुनाना चाहेंगे?
नहीं,
Would you like
बजट में तो नहीं अभी सब लोग ऐसा बोल रहे हैं तो मैं उनके लिए बोल देता हूँ कि दिल ऐसा किसी ने मेरा तोड़ा मानुस बना के छोड़ा. For people, I'm not worried about it, यार. Prashant, let me tell you, yaar, I was reading somewhere 2.2% adult population in India are income taxpayers. 2.2% adult population in India are taxpayers, compared to 80% in France and 50% in USA and 60% in Germany and Britain and all, you know. So we don't want to compare ourselves about all these developed countries and all, but we want to become a developed country. So unless somebody will have to pay tax now. If I can pay taxes and I don't want to pay, you cannot afford, you do not have income to pay taxes, so you don't want to pay. So ultimately, how this country will run? So forget about this budget. I think this budget it's a wonderful budget. It's a very good budget. Whatever they could have done, they did it. And the themes, whatever has been doing good, will keep on doing good.
चलिए वो सुन के आए भरेंगे कुछ लोग, but you know, 2% number is correct, but the issue is the 2% is taxed quite a bit. I think that is the issue. So we got to sort of widen the tax base, etc. as well. But that's another sort of conversation altogether. But thank you very much. Yeah, absolutely. Mr. Kedia, great to have you with us here. Thank you very much for joining us as always. Thank you. Well, IDBI is the next one that we want to focus on. Stocks, I think, up 10%. And this is expectations of its divestment in the near future. This sort of buzz, this expectation has risen because of a specific reason, because of some comments made by one of the secretaries yesterday. But let's put this entire thing into some context. Abhishek is here with details. Abhishek.
Well, Prashant, to begin with, Deepam expects, a divestment of IDBI Bank this year. So, IDBI Bank divestment process is in stage 2 as per them, and RBI not to fit and proper qualification of bidders is awaited. Now, LIC and government is expected to divest about 30% each in the first tranche itself. If you take a look at the shareholding pattern, Government of India holds about 45.5% and LIC about 49.2%. If you take a look at the financial picture, we already have the Q1 FY25 result that have come out for IDBI Bank. Some of the key numbers is that the gross NPA ratio is below the 4% mark at 3.9%, and the net NPA ratio is at 0.23%, which is perhaps the lowest that you are seeing in the banking sector. Now, the capitalization is strong, so capital adequacy ratio is at 22.3%, which is strong if you take a look at the peer comparison. And it's the bank with the highest CASA ratio that is there in this sector right now. About 48.6% is the CASA ratio. And if you take a look at the valuation picture, the valuation is priced to book value of 2.4 times Q1 FY25 book value. Let's listen in to Deepam Seki as to what he has to say about the same.
Quick question on IDBI Bank, because that, of course, has been waiting for several years now. We are given to understand that the RBI has come back now with the clearance on fit and proper. Is the next stage set as far as IDBI Bank is concerned?
I think RBI is in an advanced stage of doing it, and I think we will move forward.
They have not actually come back.
They have not come back. Okay, so it's still...
I mean, they are almost there, but then they would let us know, and we will move to due diligence stage and move forward.
So can we expect that to be done in this financial year?
Hope so.
Well, time to slip in a short break. But before we do that, the reason the markets are not able to come up is because the big boy L&T that's going to report its numbers post-market close, that slipped a little bit, and I think it's moved to the low point of the day. So Street a little bit nervous ahead of those numbers. Slip in a short break, come back. We'll continue our focus on markets. We'll also get you, technical calls for tomorrow.
Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited.
This budget, after a few budgets, is a bit more negative, I would say, on the taxation front in particular. There was some expectation that a long-term capital gains tax might be increased, but with indexation benefit. So today what we've seen is that there isn't an indexation benefit, and plus it, I think, increases the risk. In a way, there was a stability in the capital gains regime for the last several years. Now the long-term gains tax has been raised by only 2.5%, short-terms raised to 20%, but this increases the risk in investors' mind that it could be not a a given tax regime for next many years.
Welcome back. We're holding steady. IDBI Bank continues to build onto those gains, now up 13%. So that one's flying away. And Polycab, that's another stock that's doing very, very well in the last few minutes. So just pull up the intraday chart out there. That stock has moved to the high point of the day. Indus Stars, there's supposed to be a bit of a rebalance that takes place in the last 30 minutes. Bulk of that, I guess, could have been done earlier as well. So for the time being, the stock is more or less flattish. But that's a stock to track for the last 30 minutes or so. So keep an eye out on that one. Mitesh Thakkar is back with us. Well, Mitesh, tell us, what are the buy or sell calls you have for us with the reverse trade tomorrow?
I think there's some breakout happening on IDBI. I think what's covering the news. That's a buy with the stop at 93 for targets of 105, 106. And it's not a BTST, it's more of, a trading kind of a call. And a BTST on Bata India, it was a buy. So BTST here with the stop at 1596, 1595 and target of 1620 can be.
Okay, all right, got it. Thanks very much, Mitesh, for that. Well, we have Mayuresh Joshi, Head of Equity Research at William O'Neill, joining in now. Mayuresh, good to have you on. So, do you have a budget pick for us now that the dust has settled and the analysis is, pretty much over?
Afternoon, Surabhi. Yes, I think a couple of ones, in fact. So to that extent, I think related to all the taxation and what the impact might be, I think the next few days might give a clear indication on that. But purely going in terms of what the government initiatives are, Welspun Enterprises is one stock that you are keeping on radar on any sort of a pullback. Obviously, I think the key intent of the government in terms of urban water infrastructure, Nal Se Jal Yojana and wastewater management as well. I think there is a huge outlay out there. And therefore, I think as this gets implemented over the next few quarters, because Welspun Enterprises is a large part of that revenue pie coming in from the water business itself, around 77%, a large portion of which is the EPC business itself, which has a decent amount of margin. The rest of the business obviously is contributed from the EPC of roads. So to a certain extent, I think roads, water, waste management, the key areas and focal areas of the government in terms of CapEx spends, Welspun Enterprise might be a key beneficiary. They've got a very strong order books, will be in excess of 12,200 odd crores. They have been executing well. In fact, a couple of projects that they have recently won, one in Mumbai as well in terms of water treatment. I think that is going to go a long way. On top of that, I think the oil and gas blocks that they have in terms of partnership with the Adani Group, there is expectation of some element of numbers coming in from the first quarter as the exploration starts happening in a real earnest from FY 25-26. That has come off quite significantly, and therefore expectation of solid earnings growth might very well continue. So Welspun Enterprises, along with a couple of others, I think if you've got time to discuss, we can do that at a later stage.
Hi, Mayuresh. Good afternoon, and got that view on Welspun Enterprises. What about IDBI Bank? The street believes that this time around, hopefully there'll be some push and the divestment will take place. Stock is up 13%, moving on massive volumes. What's the view at 97 rupees?
Afternoon, Nigel. No, I think it's always been a case of expecting something to happen, and it never goes their way. So to that extent, I think I hope this is the year that there is some element of traction in terms of the privatization that we've been all hearing about. Obviously, numbers are still a little bit patchy when it comes to how their asset portfolio is, both in terms of gross NPAs and net NPAs as well. But I think some traction in terms of actionables, if it is undertaken at this juncture, I think that can give a clear picture to the street as well in terms of the timelines in which this will be. Otherwise, I think it'll be disappointing and the stock might just revert back to its mean. We have been a little bit more selective when it comes to the BFSI space, Nigel. So something like a Karur, where the numbers, in our opinion, were very, very good, is something that we continue holding on to our portfolios. And we would be looking out for Axis Bank's numbers. So large part of the expectation in terms of how the advances growth will be, and specifically in terms of how the deposit growth is expected to be, is something that will probably give a clear path. We continue holding this one along with ICICI Bank in our global portfolios.
Okay, all right, got it, Mayuresh. Thanks for that. Just stay on, we'll have some more questions for you. Some more stocks in focus. CG Power has been reacting quite well to the numbers that came out just a while back. We've got Vamakshi. Vamakshi, tell us the fine print.
Well, absolutely. It's a good set coming in from CG Power. We're seeing that the company has reported numbers that were much better than what the street was expecting. In fact, the order book saw an uptick of almost 44%. The order book has now surpassed the 7,000 crore mark and stands at 7,054 crores, out of which Power Systems accounts for 4,603 crores. This is seeing a very good uptick of nearly 60%. So that was it for the order books. But when we look at the numbers, revenue is seeing an uptick of almost 19%. In fact, revenue has come in more or less in line with what the street was expecting, but it is the operational performance for the company that has actually stood out. In fact, when we look at the EBITDA margins, they've managed to improve by almost 52 basis points and have come in nearly 82 basis points higher as compared to the street expectations. Largely, this beat is being driven by their power systems business. We're seeing that the revenue is nearly 3% higher than estimates. EBIT is nearly 28% higher than estimates, and the EBIT margin was nearly 400 basis points higher than estimates for the power systems business. The industrial systems business, on the other hand, which contributes a significant portion of the revenue, in fact, revenue saw an uptick of almost 8%, but the EBIT declined by 9% on a YOY basis, and the margins were nearly 244 basis points lower on a YOY basis. So overall, I would put the results as a good set of numbers, and this good set is largely being driven by the power systems business. But additionally, as you just a while ago, there was a flash going on the bottom of the screen. The company has also announced an acquisition of around 320 crores. So again, that again is pushing the stock higher in the trading session today.
Okay, got it. So lots of news and a good result from CG Power. Thank you, Vamakshi, for that. Let's address one more stock. The one that we're looking at is actually Johnson controlled Hitachi. Now, the last time I checked it, it was up about 8%. Now it's still up about 6.5%. Now, there is a global M&A development that seems to be in the making. Bosch Group is all set to acquire the residential and light commercial HVAC business from Johnson's controlled Hitachi. Let's just figure out what this all means. We've got Upasana in. Upasana, this is a global transaction as a part of which some of Johnson Hitachi's India business is getting sold as well. Is that right?
Well, that's correct. Johnson controlled Hitachi Air Conditioning India as a stock on my radar. Now, let us understand what has exactly happened in the company. According to the global update, Bosch Group to acquire residential and light commercial HVAC business from JCI Hitachi joint venture. Now, last night there was an update on the exchanges that this divestment will include India's stake as well. The total transaction is valued at $8.1 billion, out of which JCI consideration is of around $6.7 billion. The acquisition is expected to be closed in approximately 12 months from now. Now, what are the key implications on the India business? The India business largely deals with air conditioner for both residential and commercial, with a small revenue coming from high-end refrigerators, which is largely imported by the company. For the last few years, the business has seen limited focus from promoters, which led to India entity seeing a decline in its market share amid new products. The global transaction of Bosch acquiring HVAC business will augur well for the company on the back of two reasons. Firstly, this transaction will complement the existing portfolio of Bosch, and secondly, the improved management focus will also recoup some lost market share and thus instill confidence within the customers. So all in all, that's the reason why this stock is on my radar.
Okay, got it, Topasan. Thank you very much. So two separate developments, CG Power and Johnson's Control Hitachi in focus. Mahesh, do you track either of the stocks? Any quick take?
So I think, as Upasana mentioned, I think we'll need to wait in terms of what dynamics are actually coming out in terms of the transaction itself and how is the valuation probably expected to be. Obviously, the numbers for Johnson Hitachi are expected to be a little bit more stable in terms of how the growth dynamics might pan out for the entire industry as a whole. But I'll largely wait out in terms of the transaction details per se.
Okay, all right. Just at the bottom of your screen, Syngene has maintained their FY25 guidance. I guess the street was a little bit nervous on that front, just going by the stock reaction, because the stock from being down close to around 2% has seen a good recovery from the low point of the day, of close to around 2.5% after that piece of news did hit the screen. Mahesh, you want to comment on this one? Syngene now on the verge of moving into the green. I recall it was down close to 2%.
It's a very stable business, Nigel. I think one must understand that when the numbers come in for Syngene, I think it comes in a bulk of quarters, and the remaining quarters probably remain a little bit more muted. But the kind of work that they're probably doing, especially in their specialty business, and expectations in terms of the biosimilars as well, there is expectation in terms of also the normalization of the Malaysian facility that they are operating out of. And therefore, I think you probably need to look at this story over a really long period of time, because I think as they are able to monetize a large part of their niche portfolio and expecting that to start delivering consistently over quarters, I think that is where the game change will be. So I think the guidance that they're probably now giving out, the ticker that you're probably putting out, I think it's a good one. Anybody holding the stock should continue holding this.
All right, we'll take a quick commercial break here, but absolutely no mistake that this is a really good market for mid caps and small caps, and we'll talk about many more of them when we return. Really, big volume-led gains on a really long list of mid and small caps, especially small caps today. More on that in a bit. Take a break. See you on the other side.
Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on
Welcome back. Just 5 minutes to go till the close of trade, and the Nifty Bank, we had spotted that one out. Now it's at around 51,500. At the low of the day, it had gone to around 50,700. So the Nifty Bank is making a bit of a pullback. It explains why the Nifty is now down only around 30 points. I think the intraday chart of the Nifty will give you a better picture, and pull up the Nifty Bank as well. That should come up for you on the screen. Cutting losses in a big manner. The Nifty Bank. Yes, that's the one that we are referring to. It's seen a good recovery, particularly in the last 1 hour or so. Mayuresh is still with us. Mayuresh, what about SRF? We have some flashes that are at the bottom of your screen. Sonal is listening into the con call. What they're mentioning is they've not deferred any kind of the capex plans out there, and they're taking various measures to improve margins going ahead. The stock is not very, very cheap, but your view at around this 3,200 odd rupees?
So I think that would be a positive, Nigel, because they need to carry their capex plan.
Mayuresh, you'll have to unmute yourself. It's 2,300 rupees. Beg your pardon.
Yeah. So I think the capex plans on is a good sign. The other element is, out of all the product segments that they work out on, there is anticipation that there will be recovery both in terms of volumes and pricing as we head into the next few quarters. So the gradual recovery that we've now started seeing in a lot of these quasi-chemical plays as well. You're going to see a earnest recovery probably start coming through in the second half. As that starts taking place, the leverage benefits will start coming on the balance sheet as well. And that will reflect clearly in terms of numbers improving, specifically from an FY26 perspective. So to that extent, yes, anybody holding should hold on. Our belief is that numbers should start improving for SRF in the second half of this financial year.
Okay, by the way, as we're coming down to the close, there's quite a bit of recovery in several stocks, including banks. Bank Nifty's cut its losses. ICICI Bank and many of the others are trying to take a leg up. Just very quickly, Mayuresh, of course, we'll look at Axis's numbers in just a while from now. What is your top large cap banking pick?
So, Surabhi, as I mentioned, ICICI Bank remains our top banking pick when it comes to the large private banks. Our belief is still that the numbers in terms of advances growth should continue in a very decent fashion for ICICI Bank. Obviously, deposit mobilization has been a big issue for the industry as a whole, but that should start normalizing in the second half. Obviously, I think the kind of provisioning that they have done on the balance sheet and the expectations in terms of the risk-weighted assets as a percentage of their overall balance sheet as well, I think it's very well managed at this juncture. And therefore, ICICI Bank among the large private banks, and as I mentioned, Karur Vysya Bank, I think those are a very good set of numbers that the bank has posted within the mid-private banks. I think ICICI and Karur remain our top bank.
And very quickly, from the insurers, today there's such a huge I don't know if it's just a relief rally that there's nothing negative in the budget or something more than that. But from the insurers, life, non-life, any thoughts here?
So SBI Life has always been on top of my list. Numbers expected today, so let's see how the numbers come. But in terms of the overall dynamics, expecting their product mix, specifically the protection part of their business, to grow very, very well. The value of new business margins is going to be critical, but I think that is going to be well maintained going forward as well. A little bit more expensive in terms of price to embedded valuations compared to the rest of the pack. But their cost leadership, specifically in terms of their entire outgo, including commissions, is in higher single digits compared to double digits, rather 19-20% for their peers as well. So continuing liking SBI Life when it comes to the life insurance.
Okay. All right, Mayuresh, thanks a lot for that. Well, time to wind down on the markets then. And there was a good recovery on the Nifty. Par for the course, one would say, if you go home with a cut of only around only around 40 points from being down 140 points. The Nifty Bank as well has recovered close to around 700 points on the low point of the day. It goes home with a cut of close to around 330 points. What didn't do well in today's trading session? Bajaj Finserv was under pressure, was down 2%. Britannia as well came in for profit taking, and Tata Consumer as well as HUL. So contrary to expectations, the consumption names of the FMCG pack did come in for profit taking. What did well? HDFC Life, SBI Life, both of them were firing away all cylinders. Tech Mahindra ahead of its numbers as well was up close to around 3%, and BPCL as well was up close to around 3% in trade today.
You know, I'll get to broader markets in just a bit, but just want to highlight some more of these stocks which really rallied hard. If you can have these stocks up, look at IFCI, you know, and just a bunch of names, right? IFCI up sharply, IDBI up over 10%, 11-12% by close. You had MMTC, which went up sharply. There was STC India. There you go. STC India. These are all published set of names, and they all sort of came through very, very strongly in today's session on your screen. You also had sort of HBL Power, which went up 10%. You know, they make that sort of coverage product in terms of railway safety. HCC was up sharply. Borosil Renewables, PG Electroplast, and so many others. Well, I think it's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks very much for watching. Our markets forward will pick up on the action in just a bit.
Activity and developing climate resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam.
Consolidation continues on Dalal Street, especially for large cap stocks. The Nifty ends with very minor cuts after a range-bound session, but no such consolidation for mid caps and small caps. Absolutely vibrant day. Small cap index ending almost 2% higher, the mid cap index ending over 1% in the green.
The RBI is in advanced stages of conducting fit and proper due diligence on the suitors for IDBI Bank, says DIPAM Secretary Tuhin Kant Pandey. The stock surge is over 10% in trade.
Bajaj Finance sees healthy income growth, but margin crimps and credit cost spikes. This has led to a dip in the stock today. Concerns on asset quality were on the rise. United Spirits delivered a strong set of numbers. Premiumization, cost control, and contained input costs boosted margins. Hello and welcome to a fresh new edition of Markets Forward. Day 2 after the budget, and the market has moved on. I mean, it moved on yesterday, it moved on a bit more today. Nifty was absolutely flat, not very much in terms of what it did, but broader market, make no mistake, absolutely super going. This is the show where we get you everything you need to know as far as key data points and what to watch as we come back tomorrow. I'm Prashant, with me, my colleague Surabhi. Surabhi, hi.
Absolutely, Prashant. Well, we've got lots to cover over the next 20 minutes. A lot of the analysis coming in, post-budget analysis, all the key developments, which included a fair amount of earnings today as well. But let's start off with what was a bit of a down day again for the large cap space. But the broader market, I mean, so much green.
I think we should start with the broader market because the large caps did nothing. It was a flat kind of a day, right? Absolutely flat. And that is the reality of it. But broader market, and you may think I'm kind of emphasizing the point a bit too much here, but it is to be emphasized because small cap index was up 2, mid cap index was up 1. And, you just sort of look at the number of stocks which went up on humongous volumes, and that tells a story. So there's no dampening of enthusiasm on the back of what happened in the budget one way or the other. That much you can sort of very clearly see in terms of what happened in the broader market. Of course, there is also the fact that broader markets had seen a bit of a cut. I mean, on days, we've had days in the recent past when Nifty sold off, I mean, 0.5%, the mid-cap index was down 1.5%, even 2% on days. So there was maybe a little bit more to crawl back up in these areas, and, both the indices did that. Market breadth, of course, naturally was very positive and, very, very strong as well. So, as I said, the budget's behind and the market very much is looking forward. Although, I mean, in terms of actual tax implications for you and me, I mean, I guess we will do that in the days and months to come. Surabhi.
Oh, absolutely. I mean, I just want to cite one or two examples if we can get these stocks up. The budget impact was still playing out and favorably on some stocks. For instance, these ship exporters. Look at a stock like Avanti Feeds. We'll, of course, talk more about them in detail as we go forward, or Apex Frozen Foods. Basically, one area of the market where traders were happy to jump on was wherever there seems to be more favorable news coming in from the budget. And others, there were earnings. We'll talk about them. Again, just one example, ICICI Lombard. The market loved the numbers. Anyway, insurance was a very positive space today. So individual trends and individual stocks in the broader arena were looking very robust, which is why the advanced decline ratios, pull up the crisscross lines now, almost 1,800 stocks advancing and just about 600 stocks on the declining side. So mid caps and small caps already partying beyond the budget. Let's now tell you what our lineup today is looking like. We'll start off with all the key movers and shakers of the day. Hormaz will bring in the action. Then on our radar today, IDBI Bank, United Spirits, ICICI Prudential. We'll get you more on these stocks as we go forward. And of course, then a lot of the key events to watch out, including some major earnings that are coming in tomorrow. But let's kick it off first with the movers and shakers of the day. Hormaz, over to you.
It was a broader market day indeed, as you were mentioning, because the large cap indices didn't do much, but it was plenty of action within the broader markets. And we will start off with the pocket that did extremely well in today's session, and that was the insurance names. And you pick any insurance stock today, all of them saw very healthy gains in today's session, be it the likes of HDFC Life or SBI Life, and ICICI Pru as well. All of them reacting very well in today's trading session. The PSU saw a bit of a rebound in today's session. The index sold off yesterday. The rebound coming in today's session. SAIL, NTPC, BPCL, ONGC as well among the top gainers in today's trading session. As you were mentioning, Avanti Feeds, there was the budget impact and there was a lot of these stocks, the shrimp feed related stocks, all of them did very well in today's session, be it Apex Frozen, Waterbase, Avanti Feeds, all of them ending anywhere between 15 to 20% higher. Anthony Waste Handling also had a very good day in today's session, almost 15% higher there, and Kaveri Seed continuing from where it left off yesterday, having a very good day in today's trading session. And lastly, some stocks that did very well on the back of volumes, some of them earnings reactions, some of them budget reactions as well. Quest Corp is one of them, 6.5% higher there. Borosil Renewables, IDBI Bank, some news coming in on the disinvestment, will it, won't it, but the stock did well today. MMTC 20% higher on very strong volumes, and Kalyan Jewellers in line with how the jewelry stocks did yesterday, having a bit of a delayed reaction to the budget today, but overall a very healthy day for the broader markets.
All right, Hormaz, thanks very much. Very healthy day for the broader markets, absolutely. Mayuresh Joshi is with us of William O'Neill. Shrikant Chauhan is with us as well of Kotak Securities. Gentlemen, good to have both of you here. Shrikant, price action first. Let's start with the mid-cap and small-cap price action on the indices. How are they looking?
Yeah, good evening, Prashant. Good evening, everyone. I think, see, like all these mid-cap companies or mid-cap stocks or even mid-cap index, if we see, then there we are going to see some consolidation and stock-specific sort of activity in the near term. But broadly, I am of the view that the way they have like moved to extreme levels and now there is a correction, I don't think that it is going to last for a longer time. Again, it is like going to take some support and it is going to rebound. So I think from here onward, we are going to see more and more stock-specific sort of activity. But broadly, I am of the view that we are going to continue to see this particular activity in the near future.
The Nifty as well, Shrikant? Nifty, Bank Nifty was a bit more under pressure.
Yeah, Bank Nifty was underperforming, and yesterday also when the Nifty recovered, Bank Nifty failed to recover from important levels like 52,000 or 51,800. But while looking at today's formation, I think the Bank Nifty has completed its ongoing correction. We were expecting some 51,000 sort of levels, but during the day we saw the levels of 50,800. Broadly, I'm of the view that 50,500 is the base that we are seeing for Bank Nifty. And from here, again, the Bank Nifty can come back to the levels of 52,500 or 53,000. So it is going to consolidate. It is not going to like surpass its previous high. That is the overall view. But from here, yes, the Bank Nifty can again come back to the levels of 52,500. That's the view. For Nifty, there also we are expecting consolidation, but about 24,650 we are expecting short covering, because if we see the entire data of the expiry, then based on that data 24,650 is the equilibrium level above which we can see some short covering, which can again lift the market towards 24,850 or even 25,000. So it is like, and today also when there was like weakness in the market, 24,300 acted as very good support. So I'm of the view that Nifty is heading higher, and we need to see that how it actually breaks the level of 24,650.
Okay, all right. Shrikant, stay on. We'll have some more questions for you in just a bit. Let's start with our first stock of the day. And this is IDBI Bank. The stock was surging almost 10-11% on expectations that divestment will actually finally happen soon. The government and LIC are expected to divest about 30% stake each in the bank, and there was some commentary that suggested that maybe the due diligence process has started off. Abhishek is here with the details. Abhishek.
Well, Deepam expects, divestment this year for IDBI Bank. Take a look that the divestment process is in stage 2 as per them. So RBI nod on fit and proper qualification of bidders is awaited. Now, LIC and Government of India are expected to divest about 30% each in the bank. Currently, if you take a look at the shareholding of IDBI Bank, Government of India holds about 45.5% and LIC about 49.2%. And if you take a look at the financial picture of IDBI Bank as per Q1 FY25 results, some of the key numbers are that the gross NPA ratio is at 3.9% and net NPA ratio is at 0.23%. Remember that this net NPA ratio of 0.23% of IDBI Bank is the lowest in the banking sector. So CRAR, that is capitalization of the bank, is strong at 22.3%, and the bank has one of the highest CASA ratio at about 48.6%. If you take a look at the valuation based on price to book value, it's trading at 2.4 times Q1 FY25. Back to you.
Okay, all right, Abhishek, got that. Thanks so much. Explains the surge on IDBI Bank. Well, let's just go back for a quick word. Mayuresh, you heard Abhishek there. I mean, the street's been excited about this forever, right? But maybe it's finally looking like it's happening. Would you look at a play here at all, looking at divestment?
Afternoon, Surya. Let it happen. So I think we've heard that ad nausea so many times before. So unless it happens, I think taking a call is going to be very, very difficult. But yes, I think the numbers have shown significant improvement for the bank as a whole. Obviously, I think what goes forward in terms of this entire process itself, and then what is the valuation at which buyers will be interested in this stock, because they have a decent base, as Abhishek was also pointing out. Their CASA ratios are one of the best in the industry. But it really boils down to A, whether the process moves to the final stage, and B, the valuation for the bank itself. So at this juncture, within the banking space, ICICI Bank, Karur Vysya Bank is something that we continue buying.
Any of these stocks sort of ring up, I mean, do you have coverage or anything, or do you own any of these, Mayuresh, in the portfolio? HBL Power, HCC, ICICI Pru, BSC was a big gainer today, Castrol. Mayuresh?
I think out of that list, Prashant, I think Gulf Oil, something I think I heard you speak to the management related to that data center and the entire perspective about that business. But I think EV fluids is something that they're seriously pouring into in a very substantial manner. The numbers have been doing very, very well over the past few quarters. They're getting into the EV charging ecosystem in a big way with a couple of acquisitions that they've probably done. So they are making the right moves. Numbers are doing the talking. And again, in terms of the entire transformation, in terms of new businesses, might actually work out for them in their favor. Within the other names that you probably mentioned, SBI Life is something that we continue liking in our global portfolios as far as life insurance is concerned. And ICICI Lombard came out with a decent set of numbers on the general insurance play as well. So that remains a very solid play within the non-life plans as well.
Okay, all right. Thanks for that. Coming back to you for more, but we're going to talk about the next stock, United Spirits. Stock was up about 4%, came off a little bit from the day's high, delivered a strong set of numbers in the first quarter. Margins have come in at 19.5% as compared to an expectation of 17%. Mangalam is here with details. Mangalam.
Well, good numbers coming in from United Spirits, and as a result of which the stock opened at a record high, did well, went all the way up to 1400 plus, and thereafter saw a bit of profit taking ahead of the conference call, which is slated post markets. But from the results that came by, it told you that there was a strong underlying premiumization trend. The company's old cost control policies led to strong operational beat as well. So even as the revenues, which came in at around 2350 crores, largely in line with expectations, the margins were a big beat, close to 19.5%. Adjusted for the IPL business, the core business margins were the highest that we've seen in at least the last 12 or 13 quarters. So that was a big positive, and as a result of which the net profit too at around 300 crores, much above street expectations of 238 crores as well. Where does this underlying premiumization come from? It's the prestige and above segment, where the overall revenue grew by about 10%, double-digit growth in an otherwise tough quarter. Volume growth by about 5.1%, a little higher than what the street was anticipating. And the popular business actually by design did a lot lower and saw a bit of a decline. But then the good part was it did not decline further than what the street was anticipating. Additionally, United Spirits over the last couple of years has been making these investments in artisanal players. So they've gone ahead and bought, V9 Beverages, 15% of stake there for about 2.3 crores and 25% stake in a company called Coffeen, which makes coffee liqueur. So a lot of these artisanal alcohol purchases made by the companies as well. And as a result of which, the stock doing well, the commentary in the conference call will be very crucial for tomorrow's trade.
Okay, got it. So United Spirits, not a bad quarter, I guess. And it's been a stock on a steady high, shall we say. Not as much as what we've seen in the rest of the market, because if you're looking at the last 1 year chart, let's pull up 1 year on United Spirits, about 41% up. That's the performance. Mayuresh, just quickly, like Mangalam's pointing out, the company is doing a lot to attract the premium segment. Looking at valuations, possibilities, opportunities, what's your view?
No, I think if they're able to continue this earnings momentum, I think the stock can give very good price action as well. Having said that, I think the salience that you probably got in terms of the premium segment has really shot up. It's close to 88% now. Decent volume growth, 5% at this juncture, and pricing has also remained very, very constant. Obviously, I think the input costs for a lot of these alcohol makers have remained very, very stable over the last few quarters. So if this continues, and the expectations of their ad spend being around at 7.5% mark, 19.5% margin performance can continue with stable salience on the luxury segment. So yeah, I think the momentum can very well continue on a stock like United Spirits.
Srikanth, you want to come in? United Spirits?
Yeah, I think Prashant, the stock is stock has formed classic technical formation. I mean to say it's a very strong bullish pattern that we are witnessing on the daily chart as well as monthly and long-term charts. But now it is very close to its important extension level of 1450, 1500. There we can see some time-based correction. But broadly, I'm of the view that even the Radico is showing a lot of momentum, and it is like consolidating since last 6-7 months. On the breakout of let's say 1900, we can see the levels of 2200 or 2250. So Radico looks very strong candidate at current levels to buy and hold if we compare with United Spirits. And even United Spirit also is is showing some strength, but yet if there is a medium to long term view, then one can hold on to it.
Okay, all right. Let's talk about ICICI Prudential. And actually the insurance space, because ICICI Pru, of course, was a strong set of numbers, but it was not just that. Max Financial, HDFC Life, SBI Life, all surged. What was going on? Yash is here with some fine print. Yash.
Well, Prashant, as you said, you pick up any life insurance company and they were all up and flying in trade today. ICICI Prudential particularly started this rally early in the trade, and that was on the back of the numbers that they announced post-markets yesterday. As far as numbers, when they're seen as against what CNBCTV18 poll estimated, the total APE, which is the total annualized premium equivalent, and the value of new business missed estimates. But on the the positive side, the new business premium was in line with what we had been estimating. The retail AP came with a strong beat to CNBC TV18 poll, and the margins also importantly came in line. The market clearly looked at the hits, which were much more stronger to the market as compared to the misses. If one has to see the numbers on a year-on-year comparison, they were very strong. You know, if the poll is to be kept aside, the new business premium grew at a healthy pace of 24% on a year-on-year basis. Total annualized premium growing at 34%. Retail AP growing at a strong pace, where the beat came at about 57% growth on a year-on-year basis. Value of new business also grew at 8%. VNB margin, they came in at about 24.04%. The estimation was about 24.4%. So just there when it comes to margins. But importantly, margins improved sequentially about 100 basis points, and the street was happy to see that, because it means that the company is tackling the growth in ULIP sales and mitigating the impact on the margins coming from there. The stock hadn't done much as compared to its peers, just moving about 13% in the last 1 year, 12% in the last 3 months, and the valuation comfort also drove the stock in today's trading session.
Okay, all right. Yash, thank you very much for that. You know, what we'll do is we'll take a quick commercial break. We'll get you more stock-specific action, but also some of the important takeaways from corporates that we spoke with through the course of the day coming up.
Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state.
Welcome back. You're with us on Markets Forward. Let's take a look at the update that we got from S. Naren. Mid-caps and small caps have continued to do quite well in the last 1 year. That is what he told us. S. Naren of course, ICICI Prudential AMC. He was speaking to us earlier in the day, said that there can be a long period of underperformance after overvaluations. Take a look.
Last 1 year, we've been cautious on small and mid caps, but small and mid caps have kept going up. And it reminds me of the period, we used to always come on TV and say FMCG, we are cautious. And FMCG used to continue to outperform. Then we have had a 3-year run between 2020 and 23 where FMCG underperformed the market 100%. So we seem to be into one of those phases where we continue to be cautious on small and mid caps, but small and mid caps keep going up. But what happens is, what we've seen is when you have these accumulated underperformance of overvaluation, it shows up later. And when it shows up, you don't know. No one knows. But we are believers in asset allocation first. Then we are believers in flexi cap and large cap. That's how we look at it. Doesn't mean that today onwards, small and mid cap starts underperforming. The more it outperforms at this point of time, just like what happened in real estate between 2013 and 2020, or in consumer stocks between 2020 and a few months back, you can have long period of underperformance after the overvaluation.
Well, that is something which Naren believes that one has to be cognizant of. Long periods of accumulated underperformance, which we don't know when it will come, how long it will last. So that's the word coming in from one of the top money managers in the country. Let's move on to some top corporate opinion that we got through the course of the day. And let's start with Suzlon. We spoke with them in the morning. The company reported a strong sell in the first quarter. Management is confident of holding on to the 17 to 18% margin band. It's added that order book of the wind turbine generator segment is expanding and order mix changes may lead to a slight decline in blended margins. But it remains optimistic about sustaining strong O&M margins around between 42 and 43%.
Indian Overseas Bank's MD and CEO Ajay Kumar has guided for 10 to 11% deposit growth for FY25 and will maintain net interest margin at 3.1%. He adds that the company is trying to achieve a higher deposit growth than loan growth. Last but not the least, Finance Minister yesterday announced that basic customs duty on mobile phones and chargers will be slashed to 15% from 20%. Earlier this morning, Dixon Technologies management told us that mobile manufacturing won't be impacted by the reduction of basic customs duty. He is also expecting the government to roll out a package for semiconductor manufacturing soon.
All right, well, that's some of the opinion that we had through the course of the day. But Axis Bank has also reported its numbers for the first quarter. Let's get the details out with Abhishek. Abhishek, how do they look?
Well, the numbers look like a mixed bag, Prashant. To begin with, deposit growth this week. Sequentially, the deposits have declined for the first time in last 4 quarters. And overall, the deposit growth is about 12.8% YOY, which is the weakest that you are seeing in last 6 quarters. On the good side, weak deposit growth has helped them in interest expenses. That's been controlled. And you are seeing NI beat our poll. So 13,353 crore was the poll that we were working with. It has come in at 13,448 crores. So the weak deposit growth has actually helped in NI growth, and OPEX has also declined by 2% on a sequential basis. That's also helped. However, operationally, it's a weak quarter. Operating profits have declined by 4% quarter on quarter, and look at the provisions. Provisions are up 97% YOY and about 72% sequentially. So it looks like credit cost might have been elevated over there. And take a look at the gross NPA and net NPA. Gross NPA in absolute value increased by 7.2% sequentially. Net NPA has increased by 9.4% sequentially, suggesting that the slippages could have been on the higher side. So a mixed bag coming in from Axis Bank. However, operationally it looks like a weaker set of numbers for Q1 FY25 by them.
Okay, Abhishek, got it. So we'll watch out for the reaction on the stock tomorrow. But before we wrap out, Abhishek, very quickly, other events to watch tomorrow?
To begin with, events to watch out for tomorrow, we have some of the board meeting that will have tomorrow. So SAIL is expected to, have NCD or debentures through private placement over there. The board approval is there. Dividends that will be coming out is Bhansali Engineering, MRF, as well as United Breweries. Take a look at the stock split that will happen tomorrow. KSB, their face value will decline from rupees 10 per share to rupees 2 per share. Results which are the key tomorrow, it will be Ashok Leyland, Canara Bank, Adani Energy Solution, Adani Green Energy, AU Small Finance Bank, Mahanagar Gas, Motilal Oswal, Tech Mahindra and United Breweries as well. US market, there will be some numbers that will be coming out. So Q2 GDP data will come out, Q2 core PCE data will come out, and initial jobless claim for the month of June that will come out. With respect to continuity of US markets, President Biden to address the nation from White House, and Israeli PM will address the joint meeting of the US Congress as well. Back to you.
All right, Abhishek, thank you very much for that. So a fair bit local and some global as well. It's a wrap on this edition of Markets Forward from Surabhi, me, everyone in the team. It's goodbye. Thank you very much for staying with us. But news and updates continue coming up in just a bit.
Organization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline. The lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C,
Hello and welcome to our special broadcast. I'm Archana Solanki. Here are the headlines we are tracking this evening. Consolidation continues on the Wall Street. Sensex and Nifty end with minor cuts, but mid-caps and small caps see a sharp rally.
There is no intention to revise it from here. I cannot speak for all the future finance ministers and finance secretaries, but I can say as of now, we have no intention of revising this any further.
Government defends the move to remove indexation benefits for real estate while lowering capital gains tax, but sections of the industry say annual returns on real estate is less than 8% and remain unconvinced if the effective tax rate will be lower due to the new rules. The RBI is in advanced stage of conducting fit and proper due diligence on the suitors for IDBI Bank, says DIPAM Secretary Tuhin Kanta Pandey. He expects the privatization to go through this year. That's an exclusive. Supreme Court stays the Madras High Court order on the proposed merger between Lakshmi Vilas Bank with DBS India, issues a notice to the RBI after investors protested the LVB Tier 2 bonds write-off for 320 crore rupees. Opposition MPs stage a walkout in Parliament claiming the union budget ignored all states except Bihar and Andhra Pradesh. Chief ministers of several opposition-ruled states plan to boycott the upcoming Niti Aayog meeting in Delhi. Finance Minister Nirmala Sitharaman calls the allegations outrageous. Google's parent Alphabet reports quarterly revenue of nearly $85 billion. Advertising revenue slows as company ramps up investments into artificial intelligence. Tesla shares stumble after automotive revenue declines for the second straight quarter. Profits margins also miss estimates. Making her debut on the campaign trail, Kamala Harris slams Donald Trump over his rhetoric on fear and hate. Trump will return fire at a rally later tonight. The Trump campaign files a complaint against Harris for taking over Biden's campaign funds. Israel's Prime Minister Benjamin Netanyahu was set to address the U.S. Congress as hundreds protest on the streets of Washington. Over 120 people killed in Gaza's Khan Yunis after Israeli attacks in the last 24 hours. Overall death toll has crossed 39,000. All right, let's start with the day's market action. Consolidation on the last three today after the budget. Sensex and Nifty ended with minor cuts after a range-bound session, but mid-caps and small-caps saw a strong rally. The mid-cap index gained over 1% and the small-cap index gained nearly 2%. Amid rising concerns over rising F&O volumes, the finance minister hiked the security transaction tax in the budget yesterday. But some market experts say the tax increase may not be enough to deter small traders from dabbling in the F&O space.
The problem with speculation is usually the small person who does not have too much money leverages themselves by taking a loan and then leverages themselves in the market as well. But the actual numbers is not so meaningful that people will get deterred by STT or by a larger capital gains tax, because if they were making profits, then they would be worry. But then the problem, as stated, is that the speculation is bad only because a lot of people lose money.
31% impact on the sell side of the transaction, 21% impact on the sale and purchase both leg of the transactions. This is in the case of sale of options in securities. If we talk about the futures, I think the impact is slightly higher. Impact is 50% on sell side of the transaction. And here the STT is charged on the contract value. And in case of options, it is charged on the premium. If we include sale and purchase both transactions, the impact will be 39%.
The finance minister also said that buyback of shares will be taxed in the hands of shareholders, similar to how dividends are treated currently. Now, some market participants say companies will shy away from share buybacks once the tax comes into effect in October.
Nobody's going to do a buyback anymore. I think that's just very clear. I would, as a promoter, absolutely not do it. The only people who benefit from buybacks now are mutual funds and insurance companies or pension funds and so on, who are not who don't pay tax, right?
Former RBI Governor Raghuram Rajan has also reacted to the budget. Speaking to CNBC, Rajan said the budget highlighted the right issues, but not enough resources have been allocated to solve them.
They press all the right buttons, they talk the right talk. But when you look at the aggregate sort of allocations to education and skilling, broadly speaking, they haven't budged. You look at the aggregate allocations to agriculture, which is a big issue given what you said earlier about climate change. They haven't budged. So it's a budget which highlights the main issues, but doesn't really devote resources to them. There is nothing in the budget which suggests these are all experiments. We're doing the same old thing we did in the past, which is allocate a bunch of money to a particular program, see if it flies, and then take stock maybe 5-10 years down the line. We don't have the time for that in India. We absolutely must take a handle of these problems. The one question, of course, is have they promised enough in spending? Is it an ambitious enough budget? Because the key issue that was thrown up in the election is the lack of jobs in India. And certainly there are a whole bunch of initiatives in this budget on job creation, on apprenticeship, on skilling, a whole gamut of initiatives. But the key question is, A, are they funded enough to work? Some of the sums of money devoted to some of these programs are very, very limited. Will they incentivize businesses to hire? So that's question number one. And two, are they of the magnitude that India requires given the enormous concerns about joblessness?
The Reserve Bank is in advanced stage of conducting fit and proper due diligence on suitors for IDBI Bank. That's the word from DIPAM Secretary Tuhin Kanta Pandey. Speaking to Shireen Bhan, Pandey said he expects the privatization to go through this year.
Quick question on IDBI Bank, because that, of course, has been waiting for several years now. We are given to understand that the RBI has come back now with the clearance on fit and proper. Is the next stage set as far as IDBI Bank is concerned?
I think RBI is in an advanced stage of doing it, and I think we will move forward.
They have not actually come back.
They have not come back. Okay, so it's still...
I mean, they are almost there, but then they would let us know, and we will move to due diligence stage and move forward.
So can we expect that to be done in this financial year?
Hope so.
The Supreme Court has stayed Madras High Court's order that cleared the merger of Lakshmi Vilas Bank with DBS India. The apex court has asked the RBI to respond to a petition filed by investors opposing the write-off of Tier 2 bonds issued by LVB. Ashmit Kumar is here with the details.
Well, let's begin with some context here. It was in the month of April that the Madras High Court had cleared the amalgamation between Lakshmi Vilas Bank as well as DBS, but it was a conditional nod. The Madras High Court had asked the RBI to reconsider the valuation of the combined entity and subsequently had also asked for reconsideration of the write-off for Tier 2 bonds. Now, that is what is at the heart of this battle. As a part of this amalgamation, the RBI had directed for a total write-off of the Tier 2 bonds. Those bonds added up to 320 crore rupees. The investors to those bonds are the ones who are raising concerns as to how their exposure to the extent of 320 crore rupees is being completely written off by the banking regulator. They raised this concern before the Madras High Court. They only met with partial success. The Madras High Court directing the RBI to reconsider whether or not a write-off is required. However, subsequently, we find that the RBI moved the apex court. This was moved before the summer break. Today was the first hearing. And importantly, the apex court has stayed the operation of that Madras High Court order, has stayed that amalgamation clearance that was given by the Madras High Court. Importantly, no opinion being expressed one way or the other, but the Supreme Court holding that at this stage, it is fit to grant a stay so that this process does not move forward, this amalgamation does not move forward, and importantly, does not reduce the claim of the investors to the extent of 320 crore rupees, the subscribers to those Tier 2 bonds. So importantly, a stay being granted on the Madras High Court conditional nod for the amalgamation between LVB and DBS.
Opposition MPs staged a walkout from the Rajya Sabha claiming the union budget ignored all states except Bihar and Andhra Pradesh. The MPs began their protests outside the Makar Dwar of the Parliament building. Prominent leaders including Rahul Gandhi, Sonia Gandhi and Samajwadi Chief Akhilesh Yadav took part in the demonstration. While presenting the budget in Rajya Sabha, Finance Minister Nirmala Sitharaman called the opposition's claim outrageous and misleading. Congress President Mallikarjun Kharge led the opposition bloc out of the House during the Finance Minister's reply.
मैं कभी नहीं देखा और ये सिर्फ किसी को खुश करने के लिए, खुर्ची बचाने के लिए वो ये सब हुआ है। इसका हम खंडन करते हैं और इस ढंग से बजट पेश अगर होगा, अगर बैलेंस नहीं होगा, डेवलपमेंट कैसा होगा? आज आपके साथ है, कल लोग वो दूसरों के साथ हो गए। ये तो लोग अलग-अलग समय में अलग-अलग से करते हैं, इसीलिए मैं इसका खंडन करता हूँ।
This is a deliberate attempt, and I'm saying this with responsibility. This is a deliberate attempt of the opposition parties led by the Congress party to give an impression to the people, oh, nothing has been given to our states, it's only been given to 2 states. I would challenge the Congress party for all the budget speeches that they've delivered, that in each of the budget speeches, have they named every state of this country? This is an outrageous allegation.
All right, it's time for a short break, but coming up, government defends the move to remove indexation benefits for real estate while lowering capital gains tax, but sections of the industry remains unconvinced. We'll be back.
All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
I'm endorsing Vice President Kamala Harris because she's ready to step up, bring our party together, go toe-to-toe with Donald Trump, and win in November.
Kamala Harris is at the top of my list. I know her well from having worked with her in the Senate, on the Judiciary Committee, sitting next to her on the floor of the Senate, knowing her and her family personally.
I think Vice President Harris's energy, her enthusiasm, the time she spent here connecting with Pennsylvanians, she's no stranger to us. She spent a lot of time here, and I think people will be ready to enthusiastically support her.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26A.
Welcome back. The government in its budget announcement has scrapped the indexation benefits which were previously available for property sales. The government has also proposed to reduce the long-term capital gains tax on such sales to 12.5% from the previous 20%. The revocation of the indexation benefit has raised concerns among homeowners who fear that the long-term capital gain tax incidence may go up if they were to sell their property. The government has, however, defended the move, saying that effective tax rate would be low.
What we have tried to do is that inflation in India is fairly predictable in the long run. We have checked that the average rate of growth of the cost inflation index, which is used for capital gains, is about 4.6%. So it's predictable. We know that on average your assets for tax purposes. See, individual assets may go at different rates, but we use a steady index for tax calculations, which grows at 4.6%. Now, let me give you a numerical example. I don't think anyone would make the case that property will appreciate less than a fixed deposit. That's not why people buy property. They buy property because it appreciates faster. And India is a land-scarce country. Property is bound to appreciate faster than most other assets. So let's say you expect property to appreciate at, let's say, 15% per annum. Take off 4% for inflation. Currently, with a 15% gain, you're taxed on 11%. Because every year you get a 4% knockoff for indexation. On 11% of the growth, you're paying 20% of that. So 2.2 is the tax that you pay. In the new system, you will pay 12.5% of 15%, which comes to 1.87. So it's lower. It's lower at almost any reasonable rate of growth for real estate, and we have calculated this. We have calibrated to be, in fact, for us it will be negative, because in most cases, the tax which would be computed on an indexation basis would have been higher than the tax on the non-indexed but much lower rate that we have imposed. So we've tried to keep it at a level where almost nobody will lose. A lot of people will gain because the indexation benefit will be less than the benefit that they would get. And one more thing I want to add. We will continue to start valuing property only from 2001. So it's not as if that benefit is taken away.
That benefit is not taken away?
That is not taken away. The value of the property will be the value as of 2001 or of the date that it was acquired.
Looking at the arguments that the Secretary is putting up, and it is all completely revolving around expected gain per annum of about 11% after inflation adjustment, which is actually not possible. Annual growth of property prices are still in the range of 7 to 8%.
My colleague Sonal Bhutra is standing by with more on the impact of indexation removal. Over to you, Sonal.
Thank you so much for that. Well, yes, this budget came with a lot of changes in capital gains in different asset classes. A notable one was changes in property taxes. The government has lowered the capital gains tax on long-term capital gains from 20% to 12.5%. That sounds like a great news, right? But there's a twist here. While the tax rate has been cut, the indexation benefit has been taken away by the government. What is indexation? Indexation adjusts the purchase price of an asset to adjust for inflation, thereby reducing the gains and ultimately the tax liability. Additionally, the finance minister clarified that property value indexed up to 2001 are grandfathered for capital gains. This means that indexation benefits won't be scrapped for old properties which are held before 2001. And that means if you bought property before 2001, 2001 will be the base for cost of acquisition, and if after 2001, then the actual cost of acquisition will be considered. The short-term capital gains will continue to be taxed at the slab rate. Now, these changes will come in effect from 23rd July 2024. This boils down to the question, is this good for a home buyer and a seller? Would this deter home buyers for buying a home for investment purposes? While the government has indicated the effective tax rate will be beneficial for the home buyers, analysis suggests otherwise. This move will not impact those buyers who sell a house and reinvest in a new house, as they can offset past capital gains on sale of old house and reinvest those in a new property. This has to be done within 2 years of sale as per Section 54 of the Income Tax Act. But what about those who are investing in assets other than property or not investing this money at all? This is here where it gets tricky. An analysis by CLSA indicates it will impact relatively shorter term investments where market price growth is less than 10%. However, the impact of this